Good morning, traders, and welcome to the Traders Corner Stocks and Options Investors Summit. I'm Anthony Chapman, and I'm honored to be your host and moderator for today's event. In today's fast-moving markets, having a clear, data-driven trading strategy is more important than ever. With rising volatility, earnings reports driving major price swings, and institutions using advanced analytics, traders who stay informed and adaptable will have the greatest edge. That's exactly why we've assembled an incredible lineup of industry's leading experts to provide you with high probability strategies, market insights, and the tools you need to succeed. Whether you trade stocks, options, or a combination of both, today's session will equip you with actionable techniques to take your trading to the next level. Up first, we have Chris Sayre, lead consultant at BigTrends.com. Chris and his team have been providing traders with high probability stock and option strategies for over 2 decades. With features on CNBC, Bloomberg, and Fox News, today he's going to walk you through a proven method for identifying high probability plus 100% winners on QQQ options using a combination of price action and percent R patterns. Here to present how the percent R indicator has been finding plus 100% winners on Q options, please welcome Chris Sayre.
Anthony, thank you for that wonderful introduction. Thank you for having us join the Traders Corner event today. As Anthony told you, I am Chris Sayre, lead consultant at Big Trends, and we are going to talk about how the percent R indicator has been finding 100% winners on QQQ options. If you're not familiar with QQQ, it's one of the most active securities traded day in, day out in the markets. It tracks the NASDAQ 100. Before I go any further, I've got to read this disclaimer to you. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risks. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the BigTrends.com homepage for more information. Real quickly, I'm in my mid-50s, been in and around the financial markets for multiple decades now. Started trading and investing when I was 18 years old. Price Headley is the founder and CEO of BigTrends.com. If you've never heard of us, I joined Price and his team in September 2011, so I've been on the front lines here at Big Trends for over 13 years. If you have any questions after the presentation, reach out to us. There's our contact information there. Enough about Big Trends, enough about me. Let's talk about you and what you're going to learn today. So the name of our trading system here at Big Trends, we call them alert services. You could simply call it a newsletter if you'd like. As you can see there in the yellow letters, it's QQQ Options Playbook. We're going to talk about how we boosted results with less work, right? We're also busy. We're looking to do things efficiently and effectively. We're going to talk about our, how our team, Price, and our analyst team use their tactics from many decades of experience to design this system. Success stories and chart examples so you can see what these trades look like. I believe most people are visual learners, so that's why we have numerous chart examples today. Then, as I said, I'm going to reveal the QQQ Options Playbook strategy to you. And I've, obviously got an opportunity for you to join us here at Big Trends at the end of my presentation. So the QQQ Options Playbook strategy guidelines, the average holding period, very popular question that we get asked, how long am I going to be in this trade? 2 days or less. But as you can see there in red, no day trades, all right? So no worries about that. I know that's a concern with some traders out there. Our trades will not get you labeled as a pattern day trader. What type of strategy? Well, there's 3 different percent R signals analyzed on a daily chart. So every chart that I show you today, each bar is going to represent 1 trading day. Now, percent R, if that's a new indicator to you, Larry Williams is the creator of the Williams percent R indicator. Now, we have taken it and flipped Larry's scale. Larry used a negative scale. We have flipped that to a positive scale from 0 to 100. Again, the chart examples will show that. What options do we trade? We're trading straight calls and puts. So no spreads of any kind, no debit spreads, no credit spreads, no iron condors, none of that stuff. Simply buying calls, simply buying puts. We are using 3 DTE expiration options. So if that's a new terminology to you, 3 DTE just means 3 days until expiration. If you've never traded options on the QQQ security, it actually has options that expire every day. So how do we do it? As I told you, we start with a daily chart, okay? So a daily chart, and new trades can only trigger once per day. So as I mentioned earlier, all of us are busy, right? So we're looking to be efficient and effective. So our team has identified the best time for these trading signals to come out is 3:40 p.m. Eastern time. Now, before you put it in the chat box, yes, I know the bell rings at 4 o'clock. However, these options on QQQ trade until 4:15 p.m. Eastern time. Now, our trades are timely, so we do expect you to enter them as soon as we send them out. But for some reason, you get stuck in a meeting, stuck in traffic, whatever the case may be, you do have a little time to enter these trades. Now, as you can see, they come out Monday through Friday. So yes, we'll enter a trade on Friday afternoon, carry it over the weekend, looking for that opportunity the following week. This defined scanning session eliminates noise and allows us to use the power of those 3 DTE options. Now you see that I have eliminates noise in red. As I told you earlier, I'm in my mid 50s, been in and around the financial markets for several decades. What it amazes me is how much information is in our face and ears every day. All these organizations want to tell us what's wrong, what's right, how to do it, what works, what doesn't. Our team is very systematic, okay? Very systematic. We keep the subjectivity to a minimum. We use a design trading system. So this scanning for signals every day has resulted in high trade frequency. Again, I'm on the front lines here at Big Trends. That's one of the things I hear from traders just like you. I need some action, right? I want some action, but I want it to be quality action and have large profit potential. Now, please hear me when I say this. Not every trade's going to be a winner. There's going to be losing trades, all right? So we're reality trading here. I'm not here to tell you every trade's going to be a winner, but I am going to tell you how to get the most bang for your buck while you're managing your risk. So those 3 DTE options allow us to get lots of leverage for a small investment. The average contract price of a recommendation over the last 12 months has been $3.50. So if you're newer to options, there's 100 shares represented in each options contract. So on average, the average trade has been $350. Now, one of the things that I can tell you is that if you are a larger trader, the liquidity available in the QQQ options is there. Now, please always trade with what fits with your financial situation. But if you're just starting out, maybe got a small account, maybe you want to do a test run with us to see how we do, you can do it for as little as $350 based off the 12-month trailing average. Now, these trades are exited after 2 days at 3:40 p.m. Eastern time if they haven't been closed before then. This avoids being affected by the final day of volatility. So what do I mean by if they haven't been closed before then? Great question. We use a 50% stop and a 100% profit target. All right, so we're risking 1 to make 2. Risking 1 to make 2. Now, please, as I said, understand, not all trades are going to be winners. Not all trades are going to be losses. Not all trades are going to hit the 50% stop. Not all trades are going to hit the 100% profit target, because if they don't reach either one of those levels, as it says right there, we will close the trade down in 48 hours if one of those targets has not been reached. Step number 2, we look for a specific setup. So we filtering for new trades. Each day is going to fall into one of 8 categories. All right, one of 8 categories. 3 of those categories are tradable patterns. So again, Price and our team of analysts have done the research on this trading system, and out of the 8 potential categories, 3 of those, 37.5%, if you will, fall into a tradable pattern. We look for the percent R indicator to be within certain windows. Again, I have chart examples to show this. And then we confirm those setups with candlestick patterns. So as Anthony said in the introduction, we're using price action and we're using an indicator to find these 3 tradable patterns. Now, we also use the historical profit factor to determine which days were the best for long trades, short trades, or neither. Now, if you've been trading any time at all, sometimes no trade is the best trade at all, right? Sitting in cash, sitting on the sidelines, waiting for that proper setup is what we need to do. Now, historical profit factor, maybe that's a new term for you. What does that mean? Well, again, our analyst team has taken the QQQ security, run it through multiple years of these 8 different categories, identified those 3 tradable patterns, and under those 3 tradable patterns, the QQQ security has a positive historical profit factor. Again, that doesn't mean every trade that is identified in one of those 3 categories is going to be a winning trade. What it does mean is that over time, there has been a positive edge when that signal has been triggered in one of those 3 tradable patterns. So why should you care about this strategy? Let's look at the overall performance. So again, the name of the newsletter is QQQ Options Playbook. Now, it started in January of 2023. And through this morning, if you'd allocated up to $5,000 per trade, you'd be up 411% if you'd started with a $25,000 account. That translates to $102,922 in gross profit before any commission or subscription investment. Now, that factors in all winning trades, all losing trades. And again, not every trade's going to hit 100%. Not every trade's going to hit minus 50%. As you can see there on the slide, traders with smaller accounts can trade fewer contracts. As I said, the average recommendation over the last 12 months has been $350 a contract. Also, as I told you, if you're a larger trader, more than $5,000 a trade, there is ample liquidity to trade the Qs at that level. But as I said earlier, please trade with what fits in your financial situation. As always, past performance doesn't guarantee future results, but let's break it down at the $1,000 level. 358% return on a $5,000 account over that same time frame, $17,936 in gross profit before any commission or subscription investment at the $1,000 level. Again, past performance doesn't guarantee future results. Let's review a few winning trade examples, then I'll explain more about how the QQQ Options Playbook strategy works. So again, every chart that I show you today, each candle, each bar is going to represent 1 day of trading action. The indicator at the bottom is the percent R indicator, percent range. As you can see, there's 1, 2, 3 different tradable patterns, okay? We look for the setup in this trade here. We enter in the oval on that red candle. Yes, we're buying calls on a red candle near the close of that day because it fits with our system and where the percent R is on that day. We enter it. Very next day, we close it for 100.75% or $808 in gross profit before any commission or subscription investment. Every trade that I show you today on these charts is going to be based on allocating up to, but no more than $1,000 per trade. Now, we just didn't sit back and take our profits and run and go do something else. No, the very next trading day, even on this big gap up, our system said, you know what, it's time to enter again. Let me take some of this ink off. So then we enter up here on the second black oval and catch another 100% move, 100.49% to be exact, $822 in gross profit based off that $1,000 allocation before any commission or subscription investment. So you've got a red candle down here on the first trade. You got the percent R in this lower area. Then you have this gap and go situation. We enter on the green candle with the percent R being in this upper area. Again, these are 2 of the 3 tradable patterns, and those trades both worked out successfully. Here's another trade that we entered. You see these higher closes. We get in, capture 100.63% the very next day, $954 in gross profit before any commission. You see the percent R in this upper range that we're looking for with that move in the green candle there. Now, as I said, not all winning trades will hit the 100% profit target. Here is a time stop example. So remember, these trades will be closed down within 2 days if they don't hit the 50% stop or the 100% target. Now, this trade only made, and I say only, 48.29%, $338. Got another gap situation. Some traders may have been reluctant to take this trade after this candle closed down and then almost at the open. Got a lot of resistance over here, but the relationship of this candle with the relationship of the percent R indicator triggered one of our 3 tradable patterns. Again, didn't hit the 50% stop, didn't hit the 100% profit target, so we closed it down within 48 hours per the time stop rule. Now, you've heard me say this a few times throughout the presentation already. Not every trade will be a winner. Here's an example of a losing trade, okay? Get this nice tight candle, which fits. You could call it an inside bar, right? You've got the low of the previous bar, the high of the previous bar. We're inside there. You've got the percent R indicator where we like it with that relationship. And the trade just didn't work out. Some trades just aren't going to work out. Again, as I said earlier, this is reality trading, and we lost 53.15%. Now, QQQ Options Playbook has been finding an average of 8 new options trade per month. Let's look at some more examples. Now, one of the things I want to point out about this chart is look when this trade was entered. December 23rd. That's Christmas week. That was a Monday. Our team does not take off. We don't take off and say, hey, it's the holidays. Let's just not send out any alerts to our clients. No, 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 no. And yes, the market closed at 1 o'clock on the 24th. Which is fine. That's only 1 day because remember, we would close it after 2 days if it didn't trigger the 50% stop or the 100% target, which would have been December 26th. We don't mind carrying over holidays or weekends if the trade triggers. So this trade triggered on Monday, December 23rd. We enter it. You see the little move higher, right? Got a little inside candle here. Got the high on the previous candle. You got the low on the previous candle. We're inside that range. We got the relationship with the percent R that we like down here. And we entered that trade and made 100% for our clients right before the Christmas holiday, $782 based off a $1,000 allocation before any commission or subscription investment. Come back into the new year. Again, not taking off because it's the new year, first week of the trading year. See this red candle? Get the percent R down here in the lower range with this red closing candle. Triggers our call trade. We enter it, and the very next day we make 100%, $802 in gross profit before any commission or subscription investment. How many of you would have been reluctant to buy calls after this down move? I mean, if you want to put in yes in the chat box, yes, you would have been reluctant, or no, you wouldn't have been reluctant. If it fit your trading system, you would have taken it. Our system said that selling pressure is exhaustive. We're looking to capture a quick 100%. And you can capture these quick moves because you're using these 3 days until expiration. Leverage is powerful if you get the move right. Now, here are a couple more trade examples for you. This day is important to me. It's my birthday. Now, we didn't put that trade out just because it was my birthday. That was a Tuesday. We enter that trade, close it the very next day at 100% for $826 in gross profit. See this nice long candle up? We get a little gap action the next day. Look where the percent R is. Up in that upper range compared to the chart I was just showing you a few seconds ago, percent R being that lower range. Remember, there's 3 tradable patterns that our team looks for. We get a gap the next day on that Wednesday, and again, we booked it for 100%, $826 if you'd allocated up to $1,000 to that trade. Here's a trade just a few weeks ago that made 100%, $897 on this QQQ February 18, 530 calls trade. Got the move that we want on this exhaustive move down. See, we had this gap down here, and then we rally back up. We've got the percent R in the upper range that we like. It gapped the next day, and that's how we made that 100%. Again, the power of 3-day DT options can allow you to capture these big moves in very short order. Now, listen, as I've said, trading 3DT options can be seen as aggressive, but with our unique trade management, it has been extremely successful, as I have shown you on those chart examples. But let me remind you about how this strategy has performed over time. So since the inception in January of 2023, a $25,000 account is up 411%. $5,000 per trade allocation that takes all winning, losing trades into account. Under those parameters, you'd be up $102,922 in gross profit before any commission or subscription investment. Now, remember I showed you this chart earlier, $1,000 per trade, up 358% on a $5,000 account, $17,936 in gross profit before any commission or subscription investment. And as I've stated, past performance doesn't guarantee future results. Future results are going to vary. But as my boss, Price Headley, likes to say, what doesn't vary is our team's desire to follow the trading system and find these trade alerts for our QQQ options playbook clients. Here's a chart that I like. 5,000 goes to 22,936. So remember that 17,936 in gross profit before any commission or subscription investment, allocating up to $1,000 per trade, all wins, all losses. So since you're a Traders Corner attendee, I've received approval to offer you a fantastic trading opportunity. I will show you how you can get real-time trade alerts when this strategy finds a trade, but I only can offer this up to 34 traders, okay? I know we have more than that in the room, but the first 34 traders today can subscribe to our QQQ Options Playbook alert service. So 3 months of trade alerts from the QQQ Options Playbook alert service. Resources for you. So if you want to learn more about the trading system, we have weekly video updates from Price Headley, our founder and CEO. Those are not live sessions. Those are recorded videos where he breaks down every chart, win or loss. He also shares market commentary with you. We do send you an email alerting you when those videos are posted in your Big Trends account. Settings and rules sheet. This is a 2-page PDF that resides in your Big Trends account as well. You can print it out. You can save it to your computer, but it breaks down in bullet point format exactly what our analyst team looks for in these trades. It talks about the option selection process, how they use average true range. There's a little nugget for you. They use average true range in the option selection process, and they tell you how these trades are found. What if you have questions? Well, you're going to get a dedicated email address that goes to Price and his team of analysts. Total package value, $891. That's based off the monthly list price of $297 multiplied by those 3 months. Now, I've shown you numerous chart examples at the $1,000 level that got close or above the $891 for a single trade. But we're able to work out something for you today, the Traders Corner Special Package. 3 months of trade alerts, total package value $891 as we just established. Again, it's only for the first 34 traders. How about $177? Members.bigtrends.com/corner. Okay, thank you, Anthony, for putting that out there in the chat box. Really appreciate that. Now listen, it's not $177 per month for 3 months. It is $177 for all 3 months. And please note, it will not automatically renew on you, okay? What'll happen is 3 days prior to your subscription expiring, our team will send you an email giving you the choice to renew. If you miss it, ignore it, no worries, your subscription will expire. This is what the checkout cart looks like. It's a simple single page, and of course, it is secure. Billing information, top left, first name, last name, email. I know many of us have multiple email addresses, but please put in your trading email address here so you can get your purchase receipt, your welcome email, and you could get your first trade this afternoon at 3:40 p.m. Eastern time. I'm not guaranteeing a trade today, but you could get your first trade today. How do you get signed up? Well, there's 4 major credit cards accepted at the top right: Visa, MasterCard, Amex, or Discover. But if you'll notice at the bottom right, we also take PayPal. So 5 ways for you to join today: members.bigtrends.com/corner. One simple cart, just like the trade, simple calls and puts, members.bigtrends.com/corner. Now, our contact information is at the top of the checkout card. If you need to reach out to us, give us a call. That's 1-800-244-8736, client care at bigtrends.com. Terms and conditions are listed here. You'll notice they're also listed at the bottom as well, as is our contact information. As it says down here in the footer, we're here to help. We've been around for over 25 years. I was one of Price's earliest clients back when he launched Big Trends in November of 1999. As I said earlier, I joined Price and the team in September of 2011, so I've been here for over 13 years. Now, maybe you have some questions, reluctant to submit them. So what type of strategy is used? Buying calls or puts. How are you going to receive these trade alerts? Real time via email or WhatsApp. WhatsApp is a free application. It's our solution for mobile notification. It's free. We give you download instructions in 2 locations, in your welcome email and in your Big Trends account under the My Account section. It's faster, cleaner, and more efficient than text messaging. When are the new trades sent? 3:40 p.m. Eastern time. When are they closed via the time stop? 2 days later at 3:40 p.m. Eastern time. How many average trades per month? 8 trades per month. Will there be day trades? No day trades. All right. So wipe that concern away. What's the recommended price of a QQQ options playbook trade? $350 per contract the last 12 months. Included resources. Remember, Price's weekly video updates for those 3 months, access to the settings and rule sheet, and that dedicated email address to Price and the team. That's provided to you in your welcome email. Remember this trade that I shared with you earlier that made 100%, $897. That covers a 3-month subscription, right, at full retail. Here's what that trade alert looked like. February 12th, 340. Buy to open the Invesco QQQ ETF. We know we're always trading Qs. We give you the exact expiration, February 18th. We tell you the strike. You know it's a call. We even give you the option symbol, and we tell you what to pay. So no doubt about what to do. The next morning before the bell rings, we give you the stop, we give you the target, and we work those good till cancel. Okay? No doubt about what to do on that trade. Now, if you'd have placed this trade, allocating up to $1,000 to that trade, it would have been 3 contracts. And as we've established, it would have made $897 or 100% before any commission or subscription investment. You get in those 3 contracts at $299, that's $897 in the trade. It hit that 100% profit target at $598. 3 contracts is $1794. $1794 less than $897 is $897. Remember the Traders Corner special. First 34 traders, $177. Members.bigtrends.com/corner. $177, not for per month, but for all 3 months. Now, I told you I'm here at Big Trends on the front lines, been here for over 13 years. I know I'm getting close to running out of time. I'm not going to read this entire testimonial to you. All right. This is from Tom W. As you can see, he's been with Big Trends for over 10 years. This is an unpaid, unsolicited testimonial talking about how we handle our customers, how we handle any issues they may have. But as you can see down here, you will not regret joining this team of experts, and I'm sure you will always be pleased with their professionalism and knowledge in trading, especially with options. I'm blessed to be a part of this organization and always will. Tom W. Again, an unpaid testimonial from a client that has been with us for over a decade. Unpaid, unsolicited. Reminder, 5,000 has grown to 22,936, allocating $1,000 to trade before any commission or subscription investment since the inception through this morning. As always, past performance doesn't guarantee future results. Future results are going to vary. One more time before Anthony takes over. 3 months of trade alerts from the QQQ options playbook. Total package value, $891. For the first 34 traders, $177. Members.bigtrends.com/corner. I believe Anthony has put that in the chat boxes for you. Anthony, thank you for doing that. I'm going to go to that checkout cart one more time. I'm going to show you how simple. Look at that. Billing information, top left, first name, last name, email. Remember, 5 ways to sign up. One of the 4 major credit cards or PayPal. It's all for $177. 3 months of access. No automatic renewal. Contact information at the top of the page. Remember, this page is members.bigtrends.com/corner. Members is plural, bigtrends is plural.com, the / symbol and corner, because we are so grateful to Anthony and his team allowing us, Big Trends, to come present to you guys. Trader Corner special, 3 months, 177 for the first 34 traders, 177. Anthony, I believe I'm out of time. I'm going to turn it back over to you. So thank you again to you and your team for having us here today.
All right. Thank you so much.
Thank you, Anthony.
Thank you, Chris, for that insightful presentation and for sharing such a powerful options trading strategy. We appreciate the knowledge and special offer you've made available to our attendees.
Thank you, Anthony.
You're welcome.
Have a great day.
You too.
Thanks.
All right, traders, we have a little bit of a break here. So if you need to check the markets or grab something to drink, please do so right now. And we will be back at about noon. All right, guys, We are back. We're still waiting for our next presenter. He ended a little bit early. I don't think it was. We were just unaware of our time. The time. I think the previous presenter. It's a busy week, so he got caught up in trade or something. So we're just waiting for our next presenter. Market's a little crazy right now. Everything seems to be down. S&P's down about 0.07%. NASDAQ down about 0.5%. And the Russell's down about 0.01%. So it's a interesting day. We started up positive and gone negative. Our previous presenter, he had mentioned something about the fear index or something. The CNN broadcast. I'm a little bit unfamiliar with it. I haven't heard about it for a long time. He said that's pretty high right now. So sentiment is you know, is what it is. It's different. It's different time. You know, we have a brand new president, and so we got a lot of ups and downs right now. It's an interesting time. No real direction. We're just in a state of consolidation. But within that consolidation, the best thing to do is try to point out some trends or opportunities where you can make some money in between those ups and downs. So we're just hanging out. We're just waiting for our next presenter, and that's about it. Okay, I see a question here. Why not make the address live so one could click on and go to the site? That was by Janice. Okay, so yeah, Janice, I was trying to make that link for members.bigtrends.com/corner. I was trying to make that a live link, and that one just didn't work too well. So yeah, I usually do try to make those a live link. But that one, for some reason, maybe because it was a special offer or something, it just didn't want to cooperate that way. So yeah, we didn't lose us, just some bad timing, I think, right now. And but how's my audio? Could anyone say? I think Robert said my audio is no good right now. So what do other people think? Is my audio all right? Come on, let me know, guys and gals. Let me ask this question. What's everyone else's sentiment right now? Come on, audience members. Did everyone go and get something to drink, go get their tea or whatever? All right, everyone wants to step away for right now. That's okay, it was the right thing to do. But yeah, at some point, let me know if audio is okay. Should be fine, but there's not much more I could adjust, to be honest with you. Audio's better, thanks Dennis, appreciate it. So just curious, how is trading going for other people? Does anyone want to share how it's going for you, good and the bad? I know I like to share the bad usually. I don't know why, I just get stuck on it. I can tell you what I did wrong. I didn't pull the trigger enough. I've passed up at least 3 or 4 great opportunities in the last 2 or 3 months. But I have been less likely to pull the trigger, and it's cost me. So that's where I'm at right now. I haven't been losing money, but the money that's been coming around has been a lot smaller recently. And I blame myself for not pulling the trigger because we've got different patterns than what we had 2 or 3 months ago. Yeah, this will be recorded for a later date. It'll just be on our YouTube, so I'll give you guys that link right now. So that's the link for our YouTube. So if you want to rewatch it, or if there's a previous one, like say shark indicators or something, someone you want to see from a previous show, they'll be on there as well. And yeah, record their information, you know, and reach out to them, reach out to whoever you want to reach out to as you can, as you find fit. So one person says they're losing about 1 to 2% because of yield max funds. So 1 to 2% sounds, I think you're doing all right. If you're only losing 1 to 2% right now, I think you're doing really good, because this is extremely challenging time, like very challenging. I'm hearing some of the best traders in the country say how challenging it is right now. And so if you're losing 1 to 2%, you're doing good, doing really good. Right now, I think the game is protect the wealth, you know, protect what you have, so you could, you know, when we do have a pattern, we'll be able to make pretty good money. For those who haven't figured this pattern out or doesn't have a system yet down for it. So interesting trading environment, that's for sure. Anything else going on in the news worth knowing about? Anyone else fill me in? Something else? I pretty much myself, I just bury myself in research that relates to markets and financial data. I honestly don't even pay too much attention to the headline news. I just kind of will see the headline, but I'm like one of the last people to get to it personally. I don't know why that is, but it just seems to work better for me that way. So what else is going on in the news? Anyone else got something to say that maybe the markets might be moving because of something going on in the news? I think we still got to watch markets. You know, what's going on in Europe. I seem to be watching. If I watch anything, I'll pay attention to some of the stuff that's going on in Ukraine, Middle East, stuff like that. Because at any point, something could really pop off, and that will affect things. And it's interesting what's going on there. Maybe some negotiations, maybe negotiations sour. You know, that's going on in the news right now. There's always tensions in the Middle East, so I think there's some threats with Iran right now, I guess, and so that's a that's a work in progress too, I guess, over there. It's a mess, but we'll see. We'll see. Everything collapses to the mean. Everything collapses to the average. So that's everything. All events, all probabilities, everything has a mean average. So all things will be satisfied at an average. It all collapses to the mean, whatever that may be, including news events. Hi, Simon, are you there?
Okay, I've just unmuted myself. We're not live yet, are we? Or are we?
Hey, yeah, we're live right now. We had we had like 15 minutes to fill in between or something. So we were just filling in. If it's okay, I can give you an introduction if you're ready.
Sure, just 1 second. Can I record it locally from here? I'm just looking before.
If you have the software. It's being recorded. Yeah. It's being recorded. It'll be on our YouTube, and then if you have some sort of self-recording software on your own computer, yeah, take your time.
1 second, I'll just do that. That's probably the best way to do it.
While you're doing that, I'll start your introduction. Next up, we have Next up, we have Simon Klein, CEO of TradeSmart, an expert in supply and demand trading with over 15 years of experience training both retail and institutional traders. Today, Simon will demonstrate how supply and demand drive price action and how you can use it to identify high probability setups in real time. Please welcome Simon Klein with live market analysis using supply and demand. Simon, it's all yours.
Okay. I've got till the hour, just to check.
Yeah, you got until 12:45.
Okay, let's get the right screen. Oh, 45 minutes.
Yeah, 45 minutes. Yep.
Let's get the right one. 1 second. That's this one. Okay, you see my screen?
See it?
Yeah, this one.
Yeah, live market analysis using supply and demand.
Okay, excellent. Thanks for that introduction. And yeah, let's begin. Live market analysis using supply and demand. Okay, so this is our agenda. We're gonna ask the question, why am I always wrong? At least that was the question I asked myself when I first started. I always seem to be on the wrong side of the market. Then we're going to go into professional chart reading. You won't find this in any book. I'm going to go over a little bit about supply and demand, and then we're going to take what I just taught you, and we're going to take it into the live market, and we're going to look at primarily whatever you want to look at, but we'll look at Forex, futures markets, maybe Bitcoin as well, which is very interesting at the moment, and some of the commodities markets, maybe through the futures. I'll open up for audience questions and answers at the end, and I'll also show you how you can take the next step. So here's a quick disclaimer, you can read that. Here's me giving a live presentation, so you can see that. And also, I was invited to speak at the Boga Investment Forum in China, and you may know some of the speakers down here, Jack Schwager, author of Market Wizards. There's a little bit more about me. I've been trading for many years now, actually graduated in 96 and started working at Credit Suisse in both London and New York. I don't think that bank exists anymore. And yeah, so TradeSmart is we're a trading education business, and I saw like a need to be able to build foundations for traders. I thought people were focusing too much on strategies without having the foundations of how to read market, if you see what I mean. It's a bit like focusing on a certain style of driving your car without understanding how to read road conditions. You know, you need both. You need to understand how to read the road, how to drive your car, and then how to adapt and drive it in all sorts of conditions. And that's experience that you get over time. So the same thing with trading. If you focus on just one strategy and you don't kind of have an understanding of how the market moves, then you're really lacking the foundations. So TradeSmart, we're a trading education business, and we focus on giving you that foundation, teaching you how to read the market professionally using price action alone, and how to run a successful trading business, which once you know how to read the market, you need to develop for yourself a trading business with a trading plan and strategy in there. And that includes how to develop your own trading plan and strategies which fit, importantly enough, your personality and lifestyle. Again, you have to find something that fits you. It's not one size fits all. Everyone's different. Everyone's got different styles, different personalities, different lives, different times of day they can trade, and you have to find the one that fits you. So here's a problem. Why am I always wrong? Now, when I first started learning to trade, I was taught by some professional traders on a trading floor, and we were taught the specialist way of trading, because this was way back when, over 20 years ago, when the New York Stock Exchange was run by a specialist who was a human being, and the problem is it got disrupted with technology, and the system that I was taught to trade no longer worked. So I had to come up with a new way of trading that ultimately would stand the test of time and would be timeless. And this is what I'm going to share with you. But the most important thing that I learned then was there were two traders on the trading floor who were very profitable in the first half an hour of every day when the market open. And when I used to call out trades, I used to go and look over their shoulders to see what they were doing. I wish I would have done more of that. I would have learned more at the beginning rather than thinking I could do everything by myself. But I noticed that if I called out a trade, say long, whatever it was, they would be exactly on the opposite side of that trade. So whatever I called out in the trading room, I'm looking at this, I'm going long, they just go short. They'd take the opposite direction, and invariably they'd be, right, and I'd be wrong. Call that beginners. The exact opposite. Beginners do the opposite of what they should be doing, without really understanding why. So this is really where I started to think and take a step back and understand. So this is the problem that some of you may have, and I certainly have, and sometimes I have even today, if I miss something. You may be taught that the market's moving to the upside, and this is how you trade. Yeah, the market's moving to the upside, maybe using moving averages for a trend or whatever way you do it. And you see the market's moving up, and you take your first trade over here. And the market moves a little bit in your favor, and you think, great, I can give up my day job now. I don't want to do it anymore. This is so much more fun and so easy. Just click and you get into a trade, and the entry requirements are so minimal. You don't have to pass any exams. You can just open a trading account. It's going in my favor, and all of a sudden the market goes against you, and you're looking at the screen, you see your P&L go into the red territory, and it's getting bigger and bigger, and you didn't put a stop in for some reason. I don't know why, but you didn't. And then you take your first losing trade, and then you think, well, the market must be going to the downside. So then you go onto the short side now, and you double up, because guess what? You want to make the money back that you just lost. So you double up, and it starts to move in your favor. You make a little bit back, and all of a sudden the market turns around, and before you know it, you're in flight or fright, and you're looking at the screen in disbelief, and you've got to get yourself out of danger, and that means close a position, no longer danger, and you close it, and you take your second losing trade. Then you say, okay, the market is definitely going up. So you take your third trade over here, and again, the market moves against you, and you're done. You take your third losing trade, bigger size, you're down, I don't know what, a large amount, more than you wanted to be, and you're thinking, what am I going to do? I've got one more trade left today. I'm going to go all out and try and make this money back, because that's your way of thinking, which is not the correct way of thinking, by the way. And so you take a step back and you learn something about support and resistance, okay? And then you're like, okay, well, every time the market comes up here, it seems to go down, and down here, it seems to go up. So you decide now, okay, I get this. I'm going to go all out. I'm going to sell over here, because every time it went up to this level, the market came down. It's resistance. So you take your fourth trade, you go all out to make everything back. Otherwise, it's kind of you've blown your account. And this time, instead of the market going down, the market goes up, and you take your fourth losing trade, and you throw your arms up in the air. You've blown your account out. You don't know what you're going to tell your spouse. You're not giving up your day job, at least not yet. And what looked super easy is not, and you're feeling pretty awful about yourself. Just let me know in the chat area. I don't know if I can see the chat, but those of you here live and watching this, let me know, has that ever happened to you and you don't feel good about it? Now, what you really need to start learning about is these levels, and I call them supply and demand. This is like a supply level that was broken, and this is demand. And you want to know, when is the market likely to turn, and when is it likely to go through? Isn't that the golden question? And again, the reason why these are so important is because you can pick targets, and you can get into trades on the break of levels and all that. I'm going to show you this in the live market, how to spot these areas and how to actually do this in a very professional way. And again, it doesn't matter what market you trade, what time frame you trade, it works on every time frame in any market, no matter what that market is. I've used this in the property market, used it in the Forex market, the Chinese markets, all of the futures markets, doesn't matter what, commodities or anything else, it seems to work because guess what? Human beings or computers trade markets. And it's the same people and computers that are trading multiple markets. It doesn't matter what the market is, the charts are the same. The charts look the same. If I wouldn't tell you what market it was and I show you a candlestick chart, you wouldn't know. I can show you multiple markets. They all look like, the same sort of candlesticks. Does it matter what market's behind that? Yes, you need to know a little bit about pricing, and markets move a bit differently and there's different nuances between different markets, but the general overall big picture is the same. All the fundamentals and the foundations of how all markets move are the same. So let me share with you professional chart reading. And this is what I came to after, having been disrupted and, the trading floor that I work for ultimately closed down. So I had to come up with a way of trading that would stand the test of time, as I said earlier. And this is it. And this way of trading, I've been trading for over 18 years. I've trained probably in the tens of thousands of traders now over that time to do this. And many successful traders have come from this training, and both in the professional kind of world and also the retail world. So I believe that you want to keep it as simple as possible. Okay, simple works, masterful simplicity. But there's three fundamental things that you need to learn, approaches that you need to learn. One is pivot analysis. That's our way of reading the trend. Okay, using the candlesticks alone, no indicators. Supply and demand on the levels that we're going to go into more detail with shortly. Those are, price always moves between levels of supply and demand and turns in those levels. And then price direction analysis is our way of looking at the candlesticks to know almost instantaneously, once you know how to do this. You don't need to know anything else about candlesticks apart from this. Is price, isn't that the most useful question to ask? Is price moving up or down? So that's what this price direction analysis, it's the analysis of direction. Is price currently moving up or down? It's one or the other when it comes to price direction. It's either moving up or down. And then we do this on multiple time frames. That's our time aspect of the equation. So we can go up and down the time frames to either get a bird's eye view or to go more specific to get very into the detail. So you can get a bigger picture view, like a bird's eye view if you're in the helicopter and want to know where you are in the maze or where your friend is in the maze below. You look at the helicopter and he can guide you, or she can guide you or whatever. So this is basically all you need to know. And the beautiful thing of this is this. And if you look at the quote down here, the charts will teach you all you need to know once you have a framework for reading them. So you do not need anything else. Once you've got a framework, the charts teach you. You don't need anyone else. You start to see things in the chart that repeat themselves again and again with more and more experience, and you can start to build your own strategies around them. Once you've got the basic framework, you can put your own personality into the market, into the way that you trade, which is fitting to you, which is the key. So let's go back to basics. This is a hammer and shooting star. I'm assuming most people have basic candlestick understanding. This is the open, the close, the high and low. If it's green, obviously it closed above the open. I'm not going to go into the details here, but let me ask you a question. If you look at a market over here and you see the market's moving up, it's an hourly chart of the Swissy, the dollar Swiss. It's moving up, and then you see a bar like this. Now that is a shooting star. Now, is this a bearish bar or a bullish bar? Now, for those of you here live, or if you're not, just let me know in the chat area, or write it down for yourself. Is this bullish or bearish? Whatever you've been taught about the markets, is this bar bullish or bearish? So let's take a look and see what happens in the market. And this is what happened in our live trading room. That's why I took a picture of it as it was happening. It was a number of years ago. And I pointed out, and this is the next picture, what happened a couple of hours later. And then this is what happened afterwards. So the question is this really a bearish bar? Well, actually, it's a bullish bar because the price, how do we know? Because what did the market do after this bar? It went up. So when you see this bar, most people think that, including myself when I first started to trade, because I was taught that, oh, this is a reversal bar, it's going down. Well, what did the market do? Does the market confirm what you learned about that bar? In this case, no. So I went back and I figured out, why is this? What does this look like? Why is the market going up here? So let's go back to the 3 questions. That's the only 3 questions you ever need to ask yourself. What is the trend here? So we look at the pivots. We've got a higher low and a higher high. So the market's currently in upward motion. The reason why we look at a 3-prong approach, because there's always going to be a majority, and the majority usually wins. Yeah. So from a pivot analysis perspective, the market's moving up. Now let's look at the second question in terms of supply and demand. So these are the levels over here. So this bar just cleared above a supply area. So the next level is up here, which is where you move back down to, and then the next level here. We know where the levels are once you know how to analyze it. And again, people usually ask, is there an indicator? No, it's not an indicator. I put them on by hand once you learn how to do it. And it's very objective as opposed to subjective. If you get 2 or 3 people of the same skill level, they'll put the levels in exactly the same place. So it's teachable, learnable, and doable. So from a supply demand perspective, we're also moving up because there's no supply to stop us. Remember Newton's law of motion? Bodies in motion remain in motion until they're acted on by a force. So the body's going up. There's no force here to stop it, so it carries on in that direction. So we've got another point to the upside from the supply demand perspective. So the third question we ask is, what's price direction? Well, price direction changed to the upside over here. It was down, and then it changed up, and it's still up over here. So we asked the 3 questions. What's the pivot analysis doing? And we're only looking at one time frame here. It's going up from a trend perspective. It's going up from supply demand perspective. It's going up from a price direction perspective. 3 reasons that it's going up, no reason it's going down. So where's the market going from an odds perspective? It's going up. The odds are we're going up, and look what happened. The market continued to the upside. Okay, so this is why once you've got that framework, you can look at any market and start to ask those questions and understand why, and then build your own market intelligence and your own experience, which will give you more confidence because it's based on a solid foundation, not looking at the market based on a strategy, which you don't know if you're taking a strategy from someone else, what the foundation is underneath it. But here you're building it from the ground up as opposed to, standing in the middle of the air without any foundation underneath you. If you try to build a building without a foundation, it may fall down. It's not going to, but if you have solid foundations, you can build many different types of buildings, and they'll all stand if you build the right foundations. So let's go through supply and demand. What is supply and demand? Well, very simple. Everyone knows this. Economics 101. Prices always move up when there's more demand than supply. Prices always move down when there's more supply than demand, and they move sideways when we have supply and demand in equilibrium. So let me ask you a question. What moves the markets? Well, you may say, news, good news. Well, we've had many days that when I was trading stocks, that a good news comes out for the stock. And you think, great, this is what I looked at fundamentals for a while and tried to put them together with the technicals, and I couldn't come up with any, it didn't work for me. Because sometimes good news came out and the stock went up. Sometimes good news came out and it went down. And likewise, sometimes bad news came out and the stock just went up. And sometimes bad news came out and the stock went down. So focusing on the news and how the stock reacts, which is what I tried to do for a few years, it didn't really give me an edge. And we also paid at one point for a news service that gave us the news before it hit everywhere else. We got it a few minutes earlier. And that also didn't work. So what I decided to do way back when was to focus on price action and understand what was going on, because it's all in the price. What's price doing? Asking why is not very interesting. I don't care why it's going up. I want to know what it's doing. If it's going up, I want to be on the buy side. And the next question you ask yourself is, how am I going to get into the trade? How am I going to manage my risk? And where am I getting out? Or how am I going to manage the trade? So what moves markets? You may say the news, but guess what? If good news comes out and the markets are closed, what happens to the market? Nothing. So guess people move markets by what they do, usually their reaction to the news. Now, do you have all the available information to you when you're making a decision about trading, about what's going on? You may not know everything. There may be other things, but price is key. Price is telling you what's doing. The reason behind price movement, if you're a technical trader, you don't need to know that. And if you do have an edge in that, then that's fine as well. You can, I have friends of mine that run big funds and they're purely fundamental traders, but they have a whole system of how they're doing it and looking at market cycles and everything else and different industries, and they have a methodology of what they're following. But market timing, and if you're trading on the smaller time frames, you want to really get the best price possible and understand what the market is doing right now. So what moves markets? Guess what? Supply and demand. As we said before, what causes supply and demand imbalances? Many things. But once you can see the imbalance, you don't need to ask the question why. You just need to see what's happening. And you know what the beauty of this is? It will never change. You will never, ever be disrupted by technology. No matter what algorithms are trading the market, it's always a supply-demand equation. And, it's been around since the beginning of time, and that's how every market moves. So if you base your trading methodology on supply and demand, on reading the market, you won't have to learn anything else. And that's the key here. I haven't had to learn anything else. You can add other things if you want, but why add more than you need if you can make the best decisions with the least possible information in your decision-making process. So your next job is to identify supply and demand on the charts. So let's go through what that looks like. Very simple. So we're looking for turning points. Now, not every turning point, but we're looking at areas in the market where the market turned. And we call this demand. There's zones. Remember, professional traders or institutional traders, they may be buying and selling in certain areas, big orders for their clients. So that's usually where the market comes to that area, and then it kind of moves up. And then when it gets to a certain level, we call that supply, where they're selling. Price cannot go through this level until the last sell order is gone. And if there's more willing sell orders over here than buy orders, price will drop again because of the supply-demand imbalance. There's more supply here, more willing sellers at this price level than willing buyers, so price must drop. So your job now is to identify high probability turning points in the market. Now, there's one caveat here. It is recommended that you do take our trading program, but also depends on how you learn. What I'm going to do is share with you towards the end of this presentation how you can come and join our live trading room, and then you can start to learn this real time in the live market. And plus, I'll share with you how you can take the first part of how to read the market profession, which is how to read the trend, which is a standalone training, which will teach you how to spot changes in trend as it's happening, not after the fact, as it's actually happening. I'm going to show you some examples of that in the live market today. So who's ready to jump into the live market? I'm going to show you how to identify high probability turning points in the market. So let's jump over now to the live markets. And we'll start with the dollar index. Now what you're seeing here is I am going from the monthly chart, weekly, daily. So I'm looking, basically I've got a setup here that I can trade longer term, I can trade intermediate term and short term, all with one view. This is everything I need. I don't need to look at anything else. So on the monthly chart, I can see what's happening. I can see, like today, let's go through what happened today and you'll see it beautifully. I identify a demand area over here. And this is not any area, there's another level below and there's another level right down here. These are levels where the market moved up and took out, I call them significant levels, where they take out an area in the opposite direction. Now, watch what happens here. The market gapped down and it failed to take out the high, changing the trend. But look where we come down to. We come down into this level. Now, let's take it down the time frames. Down here is not a high probability sell. The market's going to bounce here most likely. But how do I know? So let's go down to a daily chart, which is today. So if we look carefully over here, you can see what happened and what's going to likely happen. This is the low of the market. That's the bar that made the low. Today's not closed yet, but you can see we're going to have a higher low and a higher high above here, which means we've changed trends. So when this downward moving market downtrend changes, it means that this is starting to move to the upside. So this trend is changed. Remember, you get downtrending markets on the smaller time frames, which are pullbacks. in bigger time frame uptrends, which is this. It was not really an uptrend yet, but it did take out the highs here. This is more of a base that took out the base and it's pulling back, which is a viable pullback. So this is a place where you can engage it. So how do you trade that today? How do you know how to do that? So the odds today, if you were in our trading room, we noticed, let's go back in time to when we were looking, and we see we've got, these are levels of supply. This is a level, the market's going sideways here. You can see all the way from here, this week's all sideways, and we've got two levels here. But look what's happening to price. It's basing here at the highs. Now this is you have to understand what basing at the highs mean. It means that we're chipping away at all those sell orders here until there's no more sell orders. Now, news came out, the market goes down below the base, and we can see this on a smaller time frame. That means as it comes back in, we're likely to break above, and look where we got to. Now, how do you know where we're going to get to? Well, we're going to get into the level above, and we've got levels on the way. You can see it bounced off these levels. You see this tail from here down to this level, and then it bounces back. Where did we go? Look at the 4-hour chart. You can see a clearer picture here. Here's the base, here's the basing, here's the little move below, and here's the next level up. Why are we stopping here? Because this is supply, because this is where price moved. You see, you put on these levels and you know if price takes out this level, where it's likely to go based on this time frame. And you can see, you know, if it hits that level, we're going to get a little bit of a pullback. So down here, based on this level, we're going up, and you can see where we're going to. Now, again, this works in every single market on any time frame. Everyone following? So let me show you a few other markets. Let's look at Bitcoin, because Bitcoin futures been very interesting, and we know where Bitcoin's going now. I mean, we said in our trading room. Now, let's take the same thing that we just discussed now, and it's super, super cool. Now, watch this. Now, it's happened already, but we said what was going to happen before it happened, what the odds were. Okay, the odds are super high. By the way, just so you know, I was audited by a postdoctoral research fellow at Princeton University about 7 years ago when I was in New York. He went through 7 months of data, and he came up with an accuracy on, this is it, pre-analysis, before the market actually played out. And this was back then 85% accurate. 85%. If you were not only accurate from a standpoint of reading the market, accurate from taking trades based on the reading of the market. So how did those trades play out based on taking trades on the analysis? And it turned out to be 85% accurate. This is not me. This is someone auditing what I put into the public domain, the analysis ahead of time before the market played out. And you can go and look on my YouTube channel for that. This is ahead of time. It was called, I used to put out where the dollar was going ahead of the week. So, and we just basically based on what the market's doing. Now, are we predicting the market? Now, let me ask you a question. If you were to look outside and you see rain clouds up ahead, and you were to say, well, there's a 90% likely that within the next half an hour, it's going to be wet on the floor, on the ground. The ground's going to be wet. Are you predicting something, or you're just seeing the beginning of a process? If you put a seed in the ground, it's an apple tree seed, and you water it and you give it the right condition, is it likely to grow an apple tree? Probably yes. So we're not predicting, we're reading what's happening. You know, when you're driving a car on the road and you see the traffic light in front of you go from red to orange, is it likely going to go to green next, and are you going to put your foot on the accelerator and start moving if you're stopping at the traffic lights? Are you predicting what's going to happen, or are you reading what's happening right now and know what you're going to do next, and sometimes automatically? So trading can be exactly the same. When you're reading the market, if you're in line with we're not guessing the market, we're reading what's happening now and know what the probabilities are based on what usually happens in that scenario. And once you start to have that framework for reading the market, just like if you were driving, as taking the analogy, you might, if you drive today, you've never driven the same day as today ever before. It's a new day, new people on the road. It's not exactly the same. It's different, but you know what to do because you've got the foundations down and you've got experience, and you know how to, and sometimes when there's a mistake, then obviously there's accidents that happen. And in the market, that's called, as long as it's within the right parameters, you may have a losing trade. Sometimes it doesn't always play out the way, but if you have an edge and a positive expectancy, you should come out on top, even with losing trades. The key is this: if you've proven your strategy works for you and the way that you trade, and you have a positive expectancy, losing trades are part of a winning system. Listen to this carefully. If you have not proven the way you trade works, then the losing trade just reinforces that you don't know what you're doing. But if you know that the losing trade is part of a winning system, then you don't really care too much about it. It's just one trade, if that makes sense. Okay, so let's take this through and understand what's going on here. Bitcoin made new highs. Now, this is the same scenario as we saw before. This is a base, this is below, this is back in, and we pointed this out before it happened. We said Bitcoin's going to break above this base because we saw this, and you can see up. Now, when we see this, the market goes to new highs and comes in. What happens next? We talked about this just now. This is the inverse of this. Instead of going up, let's have a look and see what happens. This is demand. This is where the market pushed to all-time highs. This is the highest Bitcoin futures. Market couldn't make a new high here and couldn't make a new, so we start moving down. But we're still down here at the bottom of this base now, and we're going sideways. So where's the market? What do we say? Basing in demand, bearish. So the market's going down. Once it breaks here, where are we likely to go next? We said in our trading room, probably down to fill this gap around the 80,000 area. We got almost there yesterday. We got down to 82,000, whatever, but that's where it's likely to go. Why? Because we've got tradable void here. There's nothing here to stop price dropping down to this level. So that's probably where it goes, unless it doesn't, of course. And you'll know that when things change. But if you break this area, the next likely target is here, because this is the top of the base where we broke out, and the market's highly likely to go back there. Okay, let's look at another market. Let's look at oil. This is a market we've been following. Oh, these are all the markets that we follow, but look at today. Where did we say in our trading room oil was likely to go today? We were down here. Now I'm going to show you how this works. This is a level of supply. Look how quickly the market came down here, and the market's basing down, and this is an intraday time frame today. So we start today. This is what I call a reversal bar off the bottom. It's also a high low. It means this is the bottom. Now, this time the market's basing at the lows, but we have a reversal bar, and the market, notice, goes back below this base. This is a base as well, below into the middle of this reversal bar. This is telling you market's going higher now. Where are we going? Well, this is your target for intraday trade, and this is exactly what we pointed out in our trading room today. So when direction changes to the upside over here, after going below the base and back in, where's your target? Not here. Notice we took those levels out. Once it takes that level, what's there to stop us getting up here? This is where we are now. This is your target. So at least you know when you get into a trade where you want to take something out. It may go more, but at least this is your first target area if you're getting in down here. And this was a kind of London Open. If you got in doing the US Open, like around 8 a.m., you want to be on the buy side, and you can take a trade from here to here on a smaller time frame. This is how you put it all together. Knowing the levels ahead of time, you can see exactly why is it this level? Well, we've got a level here on multiple time frames. 1, 2, 3, 4. And then when you've got direction pointing up, where are you going? Next level up, look for tradable voids and repeat. And let's look at one more market for now, and I want to share with you the next step. Let's look at the E-minis. Same thing, and we can look at it on any time frame. Let's actually do this now on the hourly chart. I don't have any zones put here, but let's do it. Let's draw them now, and we can go back in time and do that. But let's look at the last couple of days. Look at yesterday. This is supply, because price went down. It took out this level. This level didn't take out this level, but it took out. So look what happens today when price gets up to this area. It turns and goes all the way down, all the way back down. So wouldn't this be a high probability zone to be on the short side? And if you traded the open, you want to sell probably the move to the upside up here. If you look at, let's go down a time frame onto a 5-minute chart. Again, it works on every time frame. Let's identify the same area, and we're before the market open. This is supply, this area here. This is where market dropped down. You see this? This area. Boom, big bar down and move. So market opens over here. So what do you want to do? It's basing again. You don't want to sell in the base, sell above the base into the level up here. There's your entry. Put your stop on the other side, and there's your move. And this all happens before 10 o'clock. You've got a nice move from here. Look at your risk. Look at your reward. Now, why here? Why is that the end of the move down there? Well, look left. You can look at it across multiple time frames. You can see how it works. It's the same across multiple time frames, the same thing. Okay, so that's how we do it. And again, no indicators needed. You're just looking at where price is and you're waiting for signs of turning. There's different ways of doing it. I'm actually giving a presentation webinar. If you get onto my mailing list, you'll get an email for it, and I'm giving next Wednesday, and I'll go into more detail about all the different types of market tops and bottoms, how to recognize them using the trend. And then you'll know how to do that for yourself. So let me show you the next thing. Trader success story. So Jane Sarma, she came to me a number of years ago and went from beginner to consistent profits in 3 months. She got so successful at trading NQ at the cash open that some of our traders in our Discord server asked her to train them how she trades at the market open, the NQ. And so now she's training other traders how to trade NQ. That's her market of preference. And this is what she said about my training. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it's really mind-blowing. Once you understand the levels and can read trend, you will beat the market every single day. However, the key is follow the pivot analysis, use demand and supply level, and adapt it to your own trading style. Be very disciplined, don't be greedy, stop when you've made your daily profit, and you will turn losing trades into winning consistently day in. Simon strategy can be adapted to any market. I mainly trade NQ. I use my own strategy based on Simon's education. I found the best thing was knowing what you're doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Believe me, it's the best and the only training to succeed with. And this is what Norman said. Having been duped in the past to purchase useless courses, I've been reluctant to take the plunge, but having seen Jane trade and indeed having spoken with you, I was satisfied that I was dealing with genuine people and not the charlatans who dominate the online educational space. I was not disappointed. The course was far and away the best online trading education I've experienced. My congratulations to you both on the course and your sincere efforts to advance your members' trading skills. So remember, the best investment you can make in life is in yourself. I think Warren Buffett said that as well. For things to change, you have to change. That's what Jim Rohn says. For things to get better, you have to get better. But guess what? Learning something is not going to make any difference unless you take your knowledge and put it into action. So let your knowledge lead to action. So what I've done now is I've shown you a simple and a powerful approach to reading the market. Is it okay if I show you an offer put together to help you know exactly what to do to achieve mastery of the trend? And that's exactly what we use to pick market tops and bottoms. And again, this is by itself can be used to trade, but when put together with the other components, it will give you much more power and understanding. But by itself, you can trade just with this and do well. We've had traders that have just traded using the trend and done really, really well with that. So take it a step further and learn how to read the trend using pivot analysis. So what are the benefits of knowing how to read the trend? Well, basically, you want to trade in the direction of the trend because the trend is your friend. Most people miss this until the bend in the end. That's usually where it meets supply and demand, or usually. Know when the trend begins and ends, and make sure you're never fighting the trend. Or make sure you're on the right side of the market. You can use this to develop a profitable trading strategy or enhance an existing one. So here's my offer to everyone here. Again, this is level 1 and the basic training that you need to do. Jane actually went through this training 50 times. She went through it's a recording I'm going to share with you. and in our membership area, and look at where she is now. So it's not just a one-time go through, you put it into practice, you go back again, and you start to understand things that you didn't understand the first time, and you build a deeper understanding through experience in the markets. That's what you're going to learn. You're going to learn how to identify the current trend of the market, to analyze the trend in multiple time frames, exactly when it begins and ends, and how this knowledge will dramatically affect your bottom line. And you'll be able to watch us analyze and trade the live markets in real time. Again, you'll be able to see what we're actually doing. So here's what people are saying. Simon, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's all been the wrong process. I've wasted tons of money, time, and effort. I've actively deleted all those programmed indicators and now completely focus on what I've learned from your program. It's the only real way to trade, and it makes complete sense. Again, once you understand what you're doing, it's much easier to do it than just have some random kind of strategy that you really didn't put any effort into developing yourself. Tom, I wanted to say that what you teach in How to Read the Trend training course is brilliant. Before that, I picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I mainly trade options with trades that last 30 to 60 days. I've been looking for something I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I've not been able to find anything I could execute consistently. Just paper trading with your system. I've been doing it for a couple of weeks now, and I've had far better results than anything I've ever tried. So this is what you get. It's about an hour and a half. That's it. You don't want hours and hours that you're never going to watch or put into practice or do. An hour and a half. The usual price is $497. It's on demand. You can watch it as many times as you want. And you also get personal access to me if you want to ask any questions afterwards by email. But more importantly, you get 1 month access to our live trading room. The subscription is usually $497 a month, but you're going to get a whole month for free. And you get access to also online trading community via our Discord server. This is what the community looks like. And again, this is my offer to you. So if you join now, the regular price is $994, $497 plus $497. Deadline 2 days from now for anyone here, special offer. You're going to get $497 off, so it's basically only $497. Here's the link to go to. You type it into your browser, TradeSmartForex.com with the number 4/promo. It'll bring you to the checkout, and I'll show you quickly what that looks like. So you can see, you come to the checkout. You come to here and you click on Buy Now, and it brings you to the checkout. You put in all your details. You don't need a PayPal account. You can just put any email in there, and it gives you an option to use a credit card. Notice it's a monthly fee, but you can cancel at any time. And if most people stay on beyond the month because they see the value in it and they're getting way more than what they're paying. And some people actually make more trading 1 day with us than the subscription for the whole month. So again, it's entirely up to you. If you're getting benefit from it and you're growing and learning from it, then obviously you'll stay in there. But the key is you can cancel at any time. There's no commitment to stay in there. Once you come in, you'll get your login credentials, and then you can come into the members area by clicking here, which brings you to the membership site, and you access How to Read the Trend here and the trading room here, and it looks like this. This is the inside, what it looks like, and the trading room over here. All the sessions are recorded if you can't get there live. Some people actually watch the recordings and then use that to help them trade the rest of the day, because we're looking at strategic kind of moves in the market that sometimes take a few weeks, as well as the smaller time frames. We're trading on all the time frames, from the longer term moves to short term moves to everything in between. And this is how you access the live trading room. So that's basically what I have to offer. So if you join now, How to Read the Trends, $497. 1 month in the live trading room is $497. That's $994. Go to this link, join now, and I'll see you in the live trading room. I'll show you how to do the checkout. If you have any questions, you can email me, simon@tradesmartforex.com. And yeah, I look forward to helping you on your trading journey. Many people before you have done this. I'm usually the last stop shop for people that have been everywhere else and tried everything else that hasn't really worked for them, and they want to simplify their trading. And ultimately, when they get the results, it could be life-changing. Invariably it is. So a lot of people that I have got many years of experience, and we also have in our live trading room people with way more experience than me. We have some people that were partners in big investment banks, and so we have a whole all the way down to to retail traders. So again, it's a nice group of people and helpful group of people. You're not alone. You'll be part of a community, and you'll be together with everyone else. You can ask live questions live. All questions are okay, and you can ask your own personal questions, of course. So I want to say a huge thank you for all of you for attending. Thanks for Traders Corner for putting this on. And again, I have a YouTube channel, and you can watch the latest video there, which will give you a great understanding of our trading room. It's a trade from last week and how it played out and how we kind of followed it on a day-to-day basis from beginning to end, and you'll see that there. And again, this is a link if you want to join our training and come and join our live trading room. And that is that. So thank you so much for joining and watching and for your time. Appreciate it.
Thank you, Simon. Thanks for that incredible live analysis. Understanding supply and demand dynamics is truly key to making better trade decisions. We appreciate you being here.
Okay, thank you.
Thank you. Next, we have a fund manager and trader with 37+ years of experience, Jeff Beamer of EWO Trader. He's been featured on CNBC and CBS's The Educated Investor and has extensive experience managing hedge funds and mutual funds. Today he's going to break down how to master earnings breakouts using Straddles and Strangles strategies, designed to capitalize on significant price movements regardless of direction. Here to present Earnings Edge, Mastering Breakouts with Straddles and Strangles. Please welcome Jeff Beamer.
Hey there, good morning, good afternoon. How are you doing?
Good morning, Jeff. Can we see your screen?
Yep, pulling it up right now.
Thank you so much.
Let me make sure we got the right screen showing. And it should be coming up in just 1 second here. All right.
You had it.
Should
Now we
say
see-
Earnings Edge and Mastering
Yeah.
Breakouts.
Now we see your Hulu.
You got it?
No,
Oh,
it says,
Hulu.
yeah, we see your Hulu. We did see your other presentation for a brief minute.
For a brief minute? Okay,
Yeah,
let me try that.
less than a minute.
My screens are identified and apparently they're not identified properly. So here we go. Let's do that one.
There you go. Thank you.
All right. Somehow my computer changed my screen IDs. Okay, well, we're getting with it now. We're getting with the program. Are we ready to roll?
Yes, we are. Ready when you are.
Okay, good day, everybody. My name is Jeffrey Beamer. I am the Senior Investment Strategist over at ewotrading.com, and I am going to talk to you about a pretty basic strategy today using options, specific, the strategies are Straddles and Strangles. And the reason I wanted to talk to you about this today is because, well, this is one of the first strategies that you learn about when you start trading options. And there's definitely a time and the place for trading these two strategies. And one of those times and places is right now. We are still in the heart of earnings season, and this is a great time to be trading Straddles and Strangles around certain stocks through earnings. So let's get into our presentation. I have a quick disclaimer here. That you can, if you're watching the recording, you can pause and read this at your leisure, but it is pretty much the standard disclaimer, and we will get into our presentation here on Earnings Edge, Mastering Breakouts with Straddles and Strangles. So as I mentioned, we're going to cover this strategy in detail here. We're going to talk about things about Straddles and Strangles that you may not have thought about before. We're going to talk about timing. We're going to talk about earnings, and we're going to be identifying certain patterns that you need to pay attention to and watch for when trading this strategy. Now, one of the things, the only Greek that I'm really going to be talking about, because options have Greeks that are associated with them, delta, gamma, vega, theta, and rho, but the only one we're going to talk about is the implied volatility. That's the IV risk, and we're going to talk about that a little bit, and we're going to talk about how you can access this strategy that I produce and talk about each and every week with our subscribers. Okay, so who am I? Well, once again, my name is Jeffrey Beamer. I have been a professional portfolio manager for many, many years. I've been in the industry for over 35 plus years. I'm the founder and general partner of several hedge funds, mutual funds, and investment advisory firms. I have served in the industry in many different associations. I am the past president and served on the executive board of the Dallas chapter of the Security Traders Association for, 14, 15 years. I have been a member of the National Association of Active Investment Managers, amongst other organizations that I have been an active participant in. So I have been in the business and a participant in the industry for many, many, many years. So we're going to talk about the overview of the strategy. So capturing earnings related price moves. Now, one of the biggest earnings of the season just occurred last night, and that was NVIDIA. NVIDIA, I'll talk about that in just a little bit, but a little surprising move with NVIDIA, and we'll get to that here in just a moment. So how do we set these things up? So earnings are a popular target for many options traders. The problem is they try to trade these directionally. Most traders are unsuccessful because they choose the wrong direction or the wrong series of options, okay? We're gonna talk about strategy to use where we don't care about the direction, really. I've been consistently successful with this option strategy where others have failed to make it work. And what I mean by that is when I referred earlier to talking about straddles and strangles, that this is one of the first strategies that you learn when you're trading options. It's very simple, all right? But they don't really tell you when to use the strategy and the right environment to trade the strategy. And so a lot of people go out and they just try to trade it on random stocks. You know, maybe they've traded IBM for a long time and they decide, hey, I'm going to try a straddle on IBM, and it just doesn't work, and they quickly become dissatisfied and they get frustrated with the strategy. And I'm going to talk about specific stocks and specific environments to trade these strategies. Okay, so I'm going to show you how you can profit with the stock going up or down, and it can profit either direction. Okay, and that is by using a straddle or strangle. All right, now I do this through a service that I provide to our subscribers called the Delta Neutral Breakout service. There's also another service that partners with this, but I want to talk about breakouts today because we have seen a bit of volatility in certain sectors this month and the past couple of months. Earnings season actually lasts 2 months at least to get through all the stocks, and it never has a dull moment. It's always exciting with when trading earnings announcements around stocks. Okay, so this is a strategy to capitalize on stock volatility around earnings. It's to profit regardless of market direction. We're going to target stocks specifically that are volatile around earnings. Not all stocks move big around their earnings. Okay, this is an important note that you want to know about, that not all stocks, just because they have earnings, are going to move big. There are many and most stocks that don't move very much through their earnings announcements, and I'm going to show you an example. Okay, we profit from a breakout move in the stock or from the Greek vega, which is implied volatility, and we're talking about an IV rush. I'll define what that is in just a moment. And the strategies that we're going to focus on are straddles and strangles as we move forward. All right, now the performance of this service is impressive. I began research on this phenomena back in the late 90s. Okay, I had one of my assistant traders do some analysis for me, and I was kind of surprised at the results. Actually, very surprised that in the results. And so I've traded this strategy for many, many years, in fact, decades, and we finally put it into a publication where people can subscribe to it. And we launched this on April of 2023, all right? And through December of 2024, so this past December, ending on the quarter, okay, I produce, we show our performance monthly, but here I wanted to show the past quarter, and I'll show you what we've done since the end of the quarter, so don't worry. But over that time, we have almost 3 times the account value in 2 years, okay, in just under 2 years. We are right at that. April will be a 2-year number, and we will probably exceed this 3 times level by then, because we've had very good earnings cycle this cycle, as we do most every cycle. The average winning percent here is close to 70%. The average trade return on investment is 26%. Account ROI is a whopping 90%. I'll talk about some of these numbers here in just a little while, but you can see that, you know, usually when we have a quiet period, that's because we're at the tail end of one earnings cycle going into another, and then we get another push higher, and then we get a quiet period, and then we get another push higher, and it cycles just like earnings do, okay, quarterly, every quarter. So let's take a look at this a little deeper. So starting with straddles, I'm going to focus on straddles. It can be extrapolated to strangles. I'll define what both of these strategies are if you're not familiar with them, but it's essentially building a strategy with both puts and calls, okay? So all you're doing is buying a call and you're buying a put, okay? And we'll define what the difference between the two strategies are here in just a moment, okay? So for the straddle and profiting in either direction, this is an option strategy that is constructed by buying a call and buying a put, as I mentioned. It's done at the same strike price and the same expiration date. Now, just so you know, a strangle, the only difference between the straddle and strangle is that second point there, you're using different strike prices. So it's buying a call, buying the put at different strike prices and the same expiration. That's the only difference, okay? These are good strategies if you think the stock will experience a large price movement in the near future, but are unsure of direction. All right, and I have an example for you of a stock that was in a beautiful bullish move, and boy, earnings put that to a screaming halt. Okay, just that one event, earnings, all of a sudden changed the direction. All right, and that's what can happen with many stocks. All right, now I'm going to introduce to you the concept of risk graphs and risk curves. Okay, this is where we model our strategies and model what we're looking at. So option traders often model their trades so we can visually see our P&L, our profit and loss, where are we going to make money, where are we going to lose money. Okay, so if you've never seen a risk graph before, or risk curve, they're equally the same. Essentially, you have your P&L on the left, you have a horizontal bar for stock price. So here I have a hypothetical stock at $50 a share, and this risk graph, I know without even naming it, this is long stock, okay? This risk graph identifies long stock or synthetic long stock. There's a way to use options to create synthetic long stock. But with long stock, you essentially buy a stock at $50 and you make money as the stock goes up, and you lose money as stock goes down, okay? So you have unlimited reward to the upside and unlimited risk to the downside, all the way to zero, all right? So that is the image of the visual image of stock, okay? It's very simple. Then when you throw options in here, okay, it gets a little different, all right? This is an example of a long call with a strike price of $50. How do I know this? Well, the risk graph then has a bend in it, has an angle, and wherever you see a angle that's changing at that 45 degrees, that's a strike price, okay? that would be a strike price. So this would be a long call at the $50 strike. We have limited risk to the downside and unlimited reward to the upside. All right. The debit here in this example would be $2, and that is how much we would pay to buy the right to purchase that stock at $50 at a future date and in the future. All right. So our profit here begins after $52, and how that's calculated is our strike price plus our debit, which is in this case $2. The stock would need to go above $52 for us to begin making money, and that is, of course, by expiration or at expiration. At expiration, it would need to be above $52 to be profitable. All right. Now, same thing for the put, but on the reverse side. If we bought the 50 strike put, and all things being equal on a non-dividend paying stock, this value would be $2 as well. In this example, you can see that we have limited risk to the upside and unlimited reward down to zero on if the stock drops. We have the right to sell the stock at a certain price by a certain date in the future. Okay, so when you buy a call, you have rights. When you buy a put, you have rights. So all we're talking about are using options where we are buying options. We have rights and not obligations. All right, and we have the right to do either when we buy these together. All right, so this is what makes this a very powerful strategy. If all of a sudden, the stock begins to move and we didn't expect it to move that direction, well, that's okay. We can profit from that movement as long as it moves enough. In this example, you see the cost of the call is $2, the cost of the put is $2, and that means our debit is now $4 on the straddle. So we would need the stock to go higher than 54 or lower than 46 to profit on this basic straddle. All right. Now, and there's the example of when we combine these together, you get that deeper V. All right. And that would be hypothetically there $4. There's your risk on the straddle. All right. So all we want is a catalyst. Now, there are things that happen in trading that are not earnings where stocks often move. For example, a lot of drug companies, they'll have FDA announcements, pending announcements, and you have the opportunity to possibly make money on the announcement of a drug approval or drug denial. You have one of my all-time favorites, accounting irregularities. Okay, nothing halts a stock faster than accounting irregularities and the feds walking into the front doors to analyze your books. All right, so that's an oldie but a goodie. All right, we've heard about one of those here recently on accounting irregularities, and it's not a good day when the jackets start walking in. So all right, so we will talk about how to build these on your broker's platform for a second, okay? So usually it's pretty easy these days with technology. Brokers have, many brokers, especially option specialty brokers, have made this extremely easy to execute the strategy. And there's a couple ways they'll do it. One way is how you see here. You'll have an option chain. You'll have usually calls on the left, puts on the right. You'll have the bid-ask pricing. Here I've excluded the bid pricing and just did the ask, and I inserted delta in here to show the example that we've been working with, and that's the 50 strike. Okay, so the 50 strike call here at $2. We could just click on that on your broker's platform, and it would set up a long call. And then you click on the ask on the put side, and it would obviously set up to buy a put. And you do these together, and there you see the debits, $2 and $2, and the delta for the call, interestingly enough, is a perfect 50 in this example, and the delta on the put is a negative 50. And this is what's called a delta neutral trade. Okay, we're neutral on delta. All right. Now, one unique thing about options trading, it's one of the few industries where you can actually make money with no delta. There's no other really industry. You can't do it in buying cars. You can't do it on housing. You can't do it in any really other industry where you buy and sell at the same time. You can arbitrage, of course, but where you have this negative delta or this zero delta where you're going to be able to make money. And option trading is one of the few places you get to do it. Now, another feature on most brokers platforms is they have strategy related. You can select a drop down usually where you can select a certain strategy and it will build the strategy for you. And in this case, you can see here that I know where the at the money straddle is because the delta is 0, okay, or close to 0. You see, you'll see a couple of strikes here that are at priced at $4 here, but we're looking for the one that's at the money, and that would be the 0 delta. If we have, if we did the one above where it had a positive delta of 16 and was priced at the same, then we would have a slight bullish bias. We would make money faster if the stock went up. Or conversely, if we had a negative delta, like the 416 below it that has a negative 16 delta, then we would have a little more edge to the downside. And so with straddles, we like to put them right at the money if the stock allows us to do this. Sometimes stocks do allow us. There's been a couple I saw here this week that allowed us to do a nice little straddle because the stock was trading right at the strike price. But most of the time it's trading, in this example, let's say it's trading at 51.50 or $50.38 or something like that. And so you have to get, you'll always have a little bit of a delta skew, but that's okay. That's okay. It's really hard to get that perfect 0 on any of these trades. Okay, so let's check this strategy in action. All right, so we have our risk graph and we saw what this looks like with the straddle, long call, long put. It can go either direction. All right, and if it goes down and goes beyond our lower break even, we're making money. All right, and if it rallies and moves higher, and oftentimes these things gap, all right, they jump, all right, and if it jumps higher, let's say it goes from 50 to 60, wow, we're making money. Okay, if it closed today at 50, they had earnings announcements tonight, and tomorrow all of a sudden it popped up to 60, wow, great trade, we're in the money. All right, and I'll talk about the P&L and how to calculate your profit and loss here in just a second. In fact, I can talk about it now. So essentially at $60, your $50 strike call is $10 in the money. Your debit was $4. All right, so you have $10 profit minus your $4 that you spent on the trade. That would leave $6 profit, and that is over a 100% return. Okay, in that simple example, and that's how to calculate. That's not including time value. Okay, oftentimes there's a little premium built in there because there might be some time left in your trade, and that would be the intrinsic value plus any time value on the trade, and that would be your profit minus your debit. Okay, all right, so very easy to calculate that. Now, what I do is I have software where I rotate the risk graph. Instead of that horizontal risk graph that you're looking at, I do it vertical. And the reason why is my software allows me to insert the stock price on the left. And that way I can see by stock price, I can visually see the stock kind of moving up and down and around. And I can then decide when and where I want to place my options, okay? What strike prices I want to use, etc. Now, you always want to be sure that you are aware of the earnings event, and you always want to make sure that you do this ahead of the earnings event specifically because this is an earnings strategy, an earnings related strategy, that we want to make sure that we do this ahead of the earnings event. All right. Now, in this example here, we have the upper and lower break even. One thing that is interesting is that these break evens, the key thing about the break evens that often that you can see when you're modeling your trade is oftentimes people will trade a stock and the stock is traded within the break evens the whole time, and they think all of a sudden it's magically going to trade outside of the break evens. I'll show you a possible example of that here in just a moment. All right, and so even in this basic example here, you see the stock is traded above and below the break evens at certain times, and that gives you a little bit of an edge. All right, so we'll talk about when we want to enter the trade, when we want to exit the trade around earnings. Okay, so here's the thing. Let me back this up just a little bit. There's two ways to make money at this, and one is through IV rush. When we place these trades a few days ahead of the earnings announcement, we have the opportunity to experience what's called IV rush. And what happens is with options, implied volatility rushes in to the options ahead of the earnings in anticipation of the announcement. All right. And then after the earnings, it collapses, it crushes. That's what's called IV crush. And that negatively affects any long options that you own. Okay. So here, when we do it ahead of the earnings events, we have the opportunity to make money ahead of the earnings events from that IV rush. And I have general rules for when I place a straddle and then maybe we catch that IV rush ahead of earnings, and all of a sudden we're showing a nice little profit, maybe 15%, maybe 20%, maybe 22% ahead of the earnings announcement. Well, then there's no reason to stay in that. I mean, I've got a nice little profit. I've been in for a couple of days. We can take that off. But the big moves come usually after the earnings event, and that's when we also have the potential to make big money after the earnings event when the stock makes its big move. So there's two ways to make profits, the IV rush and through the big move in the stock, and we play both of those with our strategy. So how do you identify these volatile stocks? Well, it's really pretty easy. All right. Step one is simple. All you need to do is find a list of stocks that have upcoming earnings announcements. I mean, this is all over the place. You can use Reddit, you can use Google, you can use Yahoo, you can use Market Street. I mean, just the list of resources now these days that offers free information on when earnings announcements are is actually amazing. Okay, you can simply Google a list or aggregate them through these other sources. Now, I use a platform called Tom's Options Tools. I've used it for a long time, and it is pretty. It's kind of plain looking, but it's what's behind the software, developed by a literal NASA scientist or a researcher, and I've been using it since the 90s. So it's been around for a long time, and that is how I model my trades. Some brokers do have modeling, and you can model your trades with your broker also, so you don't have to pay for a separate service. All right, you can do it for free through your broker if they provide that service. Now, the second step, once you've identified stocks and when their earnings are, the second step is to look for behavior patterns. Okay, every stock has a behavior. Okay, you'll find that some stocks exhibit a consistent behavior around these earnings announcements. Some stocks may be quiet going into the earnings announcements, while others can be extremely volatile, leading into or immediately after the earnings announcement. I know a good example right now is Cava. Cava, CAVA, going into their earnings announcement, started dropping like a rock. okay? And had you entered the trade too late, well then you may not have gotten the big move that you wanted during the earnings event, okay? It actually came a little before the earnings event. And so you can go and look at a chart at your convenience and just see that phenomenon, okay? Other stocks consolidate and they go into real tight patterns right before the earnings event. Those I love. I love when big stocks start to consolidate a little bit, they don't move very much, and they're just anticipating that earnings events. So we are looking for stocks that have exhibited regular volatility or explosive movements around these earnings times, okay? That's what we're looking for. Now, here is an example of a quiet stock. This is Pfizer. You know, I like up-to-date information, and so I took this screenshot earlier today. Okay, Pfizer is currently trading around $26. When I took a snapshot of this earlier today, and what I wanted to show you here is that for over the past year, Pfizer has been trading in a $7 trading range. Okay, from the highs to the lows, and you can see that oftentimes it trades well within that $7 range. It doesn't even test. Only one time did it test the high and the low here. Okay, all the other times it's been consolidating. And if you, I've identified the earnings events with the vertical lines, but you can see here that even though the stock might even gap a little bit, it's such a percentage move. The stock has been trading between $24 and $31, but then around these earnings events, the stock just doesn't move. It just, and when I say doesn't move, I'm talking about single digits, okay? Really 1 to 7%, really 1 to 9%, but 9% it does, you start getting a little opportunity for the breakout move that I'm talking about. But this is an example of a quiet stock. Now, I do have a sister publication that I call Delta Neutral Income, where we trade these, okay? If you want a good example of a recent trade there, look at Home Depot, okay? Home Depot just had their earnings event and the stock didn't go anywhere. I mean, it moved a little bit, wiggled it a little bit, but it didn't even move, okay? And that's a $400 stock, okay? Or $393, but still upwards of $400 on Home Depot, and it just didn't go anywhere. Perfect stock to sell options on. But we're not talking about that. We're talking about where the big money is, and that is on these breakout stocks. Okay, so here we have Pfizer. It just doesn't move around these earnings events. No, I mean, it's less than 4% over the past 5 earnings cycles. Just has not moved much at all. Now, you want a stock that moves, okay? Here's Akamai, okay, AKAM. This thing is a mover. This stock has a $52 trading range over the past year. All right, this stock moves through its earnings events. All right, big gaps around the earnings events. Okay, so you go into the day of earnings, and then the following day after the announcement, you get that big move. Akamai had earnings just 4 days ago, dropped 21% on the earnings. In fact, in 2 days, it dropped almost 25%, because the day of the earnings event, it was down over 2%. And then that night, Akamai declared, and then the next day, boom, traded lower, opened up around $89 and shot down, traded lower all day, okay, down to that $76 level. And then it's kind of hard to see on the chart on the bottom right, but for the past 3 days, the stock is just all of a sudden consolidated. It's finally just said, okay, wait a minute, let's reassess and figure out what's going on. But that whole day after the earnings announcement, Akamai just got beaten up, okay? And these are the big moves that we're talking about, all right, for our Delta Neutral Breakout service. This is where we have no idea, and you can look before this last vertical line here on the right. Look how quiet the stock was. It traded right around that $100 level for at least 5 days, before the earnings announcements, and that's the type of move that I just love going into that earnings announcement, is that little consolidation before we go. Now, you can use things like statistical volatility as one basic search, or if you have a tool, you can look at SV, statistical volatility, and I have a line graph here. Look at this thing, you know, look, these spikes on a regular basis through the earning, you know, those are earnings events. Okay, I don't even need to identify this on the chart with these big movers. Okay, this stock, I don't even have the name on here, but you can see the high is over $100, and then the low. Look at this. The last quote on this stock was $57. Well, within a year, this stock lost almost half its value. Okay, and just gapping around and moving around, but the earnings events are where the big moves happen, and that's why we love these earnings events. Now, one thing you need to be aware of is kind of be aware of implied volatility. So IV is an important consideration. Selecting options with already overinflated IV values is a common reason that many traders fail when trying to straddle earnings. Now, we already know that we're buying high implied volatility. This goes against the grain of probably what people are taught. If you look at a document that has all the strategies, all the option strategies, and they divide them up between low implied volatility and high implied volatility, you're going to see straddles and strangles are under the low implied volatility category, meaning that's the best environment to buy a straddle or strangle. I would have to disagree with that a little bit, because we need a catalyst to get straddles and strangles to really profit. We need something to make that stock, that underlying stock, to move. All right. And so we want something like an earnings event that happens 4 times a year for every stock. All right. We need that to help generate profits on a straddle or strangle. Now, implied volatility, the IV crush, third bullet point here, IV crush can eliminate profitability even if a stock does break out. So, for example, if you're expecting a 10% move in the stock, but the stock only moves 6%, okay, that IV crush can work against you, okay, and you can expect to be underwater in your trade, okay, or if you have to exit at that level, okay, stock only move, you're expecting 10, but the stock only moves 6, then, oh, that's a problem. Okay, and we want to try to avoid those as much as possible. Now, stocks kind of do that occasionally. You want a current example? NVIDIA. Okay, the earnings event that everybody was waiting for happened last night. NVIDIA declared earnings, and what did the stock do? Absolutely nothing. Option market makers, well, I mean, it's had a little volatility today and it's currently trading down 2.5%, but the option market makers were pricing in a 10% move around earnings. They were expecting a 10% move, and the stock, it gapped higher on the open. Now it's trading lower. So the range has been probably 5% on the range today, but it gapped higher, traded lower. Now it's only down 2.5%. I mean, wow, all that anticipation built in there, and then nothing. Okay, great example of a stock that, you know, traditionally has been a mover and just did not move this time. All right, now IV can be visually seen through an option modeling platform. So here is PayPal, and this is the implied volatility graphed out. All right, so the black line is implied volatility of all options that expire greater than 90 days. Okay, that's the black line. The red line is for all options that expire in 7 to 30 days. That's near-term implied volatility. And look at the spikes around this. Now, PayPal, I will just tell you, is a mover, okay, traditionally. It will gap around stocks. It's one of my favorite stocks to trade around earnings is PayPal. Why? Well, you see these spikes, and then you have this sharp drop Look at that sharp drop. After every spike, you get that sharp sell-off. That's the IV crush that I was talking about. You can visually see it. But then ahead of the earnings event, look at how IV rushes into the options, and then you're elevated. That's oftentimes we're buying into that rush is where we're buying. All right. So sometimes we catch it early enough, sometimes we don't, but just remember, we're selling that, we're buying that expensive option because we're anticipating the stock to move. Okay, that is what sets this strategy apart. All right, so straddles and implied volatility. As I mentioned, it elevates before earnings, which can make straddles expensive. It can. Implied volatility typically drops right after earnings. Not typically, it does. And that's what makes straddles lose value if they don't move. And earnings moves are often priced into the options, leaving very little room for profit. So timing is critical. Timing and analysis is critical. Straddles profit faster when the stock breaks sharply, higher or lower. That's it. We need that stock to move. All right. Now, time frames for straddles. Okay. So let's talk about this really quick, and then I'll get to a couple of examples. Option values decay faster the closer they get to expiration. Theta, okay, I'm talking about a second Greek here. Theta is time value. Okay, that's how much in dollar terms, how much you're making or losing because options are losing their value. Theta loss, or the rate of decay, increases as the options get closer to expiration. So straddles use at the money options, which lose value more quickly than out of the money options. So where theta decay happens the fastest is at the money options. All right, and I'll show you an example of that. So understanding these Greeks is just something to be aware of. Okay, something to be aware of. So if we look at this and graph this out, as you know, and the way we used to demonstrate this in seminars is we would wad up a piece of paper and we'd throw it across the room, and that's the trajectory. You can see that the piece of paper just flies across the room, and then as it loses momentum, it starts to drop very quickly. This is exactly what happens to options. There is a sweet spot on the graph, all right? And here, once you get inside 30 days, all of a sudden that theta decay really kicks in. Okay, so timing here is critical. We don't want to spend too much time in our trade, but we also, we want to be very sensitive to theta as well as vega, because where are we in that cycle of that IV spike? All right, so these two are working kind of against each other, and we want to be aware of that. Now, the light blue line here, that's the straddle. But when you combine two at the money options, a call and the put, well, you got to add those theta decay values together, and therefore you get that faster decay. So that's why you want to be in here and out pretty quickly so that you don't lose money from time decay perspective. All right. Now, the ideal strategy time for this is going to be in a window of 21 days or less up into the earnings event. Okay, so we want to set our expiration date always beyond the earnings event, and then really I'm within that 10-day period. Let me go back to that. I'm within that 10-day period on the earnings event. Okay, within 10 days. So a couple of trade alerts here. Let me show you a couple of examples of what this looks like. Okay. So here is the modeling. You can see the stock price on the left. You can see the risk graph on the right. Now, when you get a point, like a sharp point, that's a straddle. Okay, when you get a flat bottom on the black line, that's a strangle. Okay, and so what we're looking at here is a trade that I put out in January, I believe. Yeah, January 28th. This was a straddle on NXT, so Next Tracker. The trade ID was 1402. This is published on our website. All right, $6.20. We're going into the earnings event. Then the earnings event happens, and this is what happened. Okay, the stock gaps up 25%. Okay, almost. Well, it did, gapped up 25% and then traded just off of that at the close. All right, stock gapped up. Now you see the light blue lines here above and below the stock price are the break evens of the trade. So this stock gapped up 25%, and we were able to send out the exit alert on the 29th of January. Okay, so 1 day in the trade for $9.83. Okay, was the credit. Okay, so you subtract out your debit, and that was a profit of $363 per straddle. Okay, for every straddle you did. So if you did 1, you made $363. If you did 10, you made $3,000 or a little over $3,000. All right, if you did 20, then you just keep elevating up and up and up. But the percentage return is the same. It's 59% return on your risk in just 1 day. Okay, so I timed it to where, hey, a theta decay was really chewing away at these at the money options. So I waited until the last moment when I could buy the options, and we enjoyed that big spike there. All right, now here's the trade I was talking about that stock was in a nice little uptrend, had been in an uptrend for quite a while. This was Decker's. This is trade ID 1406. It was a strangle. Notice the flat bottom on the risk graph there on the 29th of January. Okay, $17.70. Okay, so $1,770. So the thing about straddles and strangles on some stocks, you're going to find inexpensive straddles and strangles like on $30 and $40 and $50 stocks. But when you get up into these big boys that are in $200, $300, $400 stocks, yes, the straddles and strangles get very expensive, and you need bigger accounts to account for that. All right, but the debit here was $17.70. This would be good for an account, you know, 20,000, 25,000 or more. All right, and let's see what happened. Well, that bullish trend was all of a sudden halted as this stock dropped over 15% on the earnings event, and our puts exploded in value. They went in the money. What happened to the calls? Well, the calls lost all their value. Okay, but we made more money on the puts than we did on the calls. All right, boom, down it goes. So our debit of 1770, we were able to sell the long puts for $28.82. Okay, that is a $1,112 profit in just 2 days. Okay, that's a 63% rate of return. All right, so these are the types of trades. I'll do one more for you, and then we got to wrap this up. All right, this is Palantir, one of my favorite stocks to trade. Okay, Decker's, Palantir, I'm giving you all my secrets here. All right, February 3rd, okay, just earlier this month, $11.38 was the debit on this trade. Call this a baby strangle because the strikes were pretty close to each other, but they weren't the same, so that would be a strangle. All right, and boom, up it goes, up over 25% on the day through the earnings event. Big profit there. So our 1138 debit, we were able to sell this for $24.57. That was a profit of $1,300, a little over $1,300, and we doubled our money in just 1 day. This is the power of finding these stocks that move big through the earnings event. So as I wrap up, I have a gift for you guys. Okay, you can get a guide on how I trade these. I've published all how I set these up through a guide. It's available at ewotrader.com/straddle. Okay, ewotrader.com/straddle. And when you download the guide, we'll have all of our contact info in there for you, and you can contact us if you're interested in the publication that I generate each and every week. And I will tell you today, I just sent out an alert yesterday on Dell Computer. We will see what Dell Technologies now. We'll see what Dell has to do today after market close and see if that is going to provide any profit for us for our subscribers today. So with that, I have run my time here a little long, but I hope you guys enjoyed that session. And you can reach out to us at ewotrader.com with any questions that you have.
All right, thank you, Jeff. Really appreciate it. That was a fantastic breakdown of earnings, breakout strategies. For those of you looking to profit from market volatility, make sure to take advantage of Jeff's offer. I just put it in the chat there. Now, let's welcome our next guest, Erin Swenlin, president of DecisionPoint.com. Erin has been studying the markets for over 35 years and is a leading expert in market participation analysis. Today, she'll introduce you to the Silver and Golden Cross indexes, two of the best participation indicators for analyzing market strength and spotting high probability opportunities. So here to present best participation indicators ever, please welcome Erin Swenlin.
All right, thank you for that introduction. Yeah, today I'm going to talk to you about market participation after I let my dog in my office. Hold on. Come on. The beauty of working from home, having those co-conspirators in the room with me. All right, so market participation. This is a really important concept and something that I think everybody needs to be aware of. It comes into play when we're talking about the trend and condition of the market, which is all important. You need to know the trend and condition of the market before you trade, because I'm sure a lot of you have noticed that when you're trying to trade and the market's in churn or is seeing some declining trends, that your trades don't always work out that well. And that's because there aren't as many out there to pick from when the market is moving lower. So we need to be very aware of what's going on under the surface so that we can understand and get a jump on what's going on in the market so that we'll be ready to make our trades. So I'm going to talk about what I think are the best participation indicators ever, but I think it's important to talk about what market participation is to begin with. A little about me. I have a bachelor's in mathematics from USC and a master's of science in information resource management that I got while I was in the Air Force at the Air Force Institute of Technology. I've been studying the markets, honestly, since I was in high school, not to the degree I study them now, but my dad, who I've learned most of everything from, I was working with him while he was learning the markets himself, and I was calculating the on-balance volume for him for a long time. So I did have an interest in what was going on. I am the president and chief market analyst at DecisionPoint.com. We have 3 products that I'll talk to you about a little bit later. And then I also do work on StockCharts.com. I'm a consulting senior technical analyst there. And it's been over 13 years. Gosh, it's been almost 15 now. So I've been working with them for quite a while. I also do a Decision Point blog on StockCharts.com, which is free. You can get to that through our website. You don't have to necessarily go through StockCharts.com, and I'll show you a little bit more about that later. And then I am the host of the free Decision Point Trading Room. We have a YouTube channel that I'd love for you to subscribe to. We post our trading rooms every Monday. You can join me in that free trading room by signing up one time. And we use the same Zoom room every week. So that's why you only need to sign in once. And you can join us in the free trading room where we go over our market analysis, cover Bitcoin and yields and bonds, dollar, gold. We cover all of that in the trading room. And then I go through sector rotation. And then finally, we look at viewer symbol requests for the last half of the program. So you get plenty of information on how to trade the markets from the trading room. So recommend you go check it out. It is free. So measuring participation. There are a couple of different ways. One of the ways I like to do is looking at the number of stocks above their 20, 50, and 200-day EMAs. Gives you a really good sense let's just say you want to trade a stock. More than likely, you want to trade one where price is above the 20-day EMA at a minimum. You want it above the 50 and 200-day EMAs as well, because you know that you have a nice bullish bias going on the chart in the short and intermediate and long terms. Then we cover breadth indicators, and those we'll talk about in a little bit. I'm going to highlight the golden and silver cross indexes. These are the indicators that I think are the best participation indicators out there. And they're really easy to understand, and they give us such great insight into what's going on in the market. And we'll talk about that obviously a little bit later. So let's talk about breadth indicators in general. What are breadth indicators? Most of you are probably familiar, but we have new highs and new lows is one of the easy ones. Advances versus declines. So we look at net advances declines, and we look at net advancing decline volume. And that gives you information on the breadth of the market, how many people are participating in moves. We look at volume ratios, and then we have this idea of the fact that breadth indicators really give you this cumulative view of market indexes and sectors. It is not based on price necessarily or weird indicators. It's simply looking at the number or percentages of stocks within an index or within a sector and getting a sense of what's happening with them on just that easy level of how many are participating, what percentage of stocks are above their 20, 50, and 200-day EMAs, how many stocks are advancing versus declining. And I can tell you we had some interesting moves on this week on the last decline, not yesterday, the day before. I'm sorry, we didn't have a decline yesterday. The day before the move up of yesterday, we had a very interesting situation where it was a down day, a pretty sizable down day, and yet net advances and declines were positive. We had more advances versus declines. That's some pretty good insight into what's going to happen in the market. And so we were talking about a possible bounce going into yesterday simply because we had seen that particular divergence. So here's a picture of new highs, new lows, and I apologize, I don't have the most up-to-date charts here, but they give you an idea of what we're looking at. So here are new highs versus new lows. And then what we like to do is take the 10-day moving average of the high-low differential. So you take the highs minus the lows, and then you take a 10-day moving average of that. And it really gives us some interesting insight into where the strength is or where the strength isn't. So one of the things we really like to see on a new high, new low chart are divergences. And this is probably the best divergence to talk about right here. We had a bunch of other negative divergences, but they didn't really turn out to do too much. So this one, though, was really good. We had declining tops on new highs. We had rising tops on price, and that is a sign of a possible direction change coming in the market. And then you'll notice here, we also saw that 10-day moving average of the high-low differential top even before that negative divergence really was coming into play. So really good information on a new highs, new lows chart. What you're looking for are divergences. That is the key. And I can tell you that before the last couple of declines, we've had divergences on new highs, new lows. And I will tell you that right now, we have a negative divergence on new highs and new lows. So we have rising price tops right now, and we have declining tops on new highs right now. Here's your ratios. This is our climax chart, and it has lots of information here as far as breadth indicators go. I apologize that some of these charts look very small. but we put them in our blogs every day, and I have to have them set up to fit in my blog. So not all of these charts are in large size, so I apologize for that, but I'll give you the rundown that you need. So here we go. There's net advances and declines. And like I said, what I'm looking for are divergences like we had on Tuesday. I'm getting my days mixed up. So Tuesday, we had that divergence where we had positive net advances, declines, and then we ended up getting that bounce yesterday. All right, so there's net advances decline, but we also like to look at net advance decline volume. And we have the VIX on our climax chart. That's not a breadth indicator, but it's a very important indicator. What you're looking for, in this case, we invert our VIX. So oversold conditions are on the bottom and overbought conditions are on top. And what we look for are these penetrations of these Bollinger Bands. If you get the penetrations on the bottom part of the Bollinger Band, then typically you're going to get an upside reversal, typically. The other things we look at are the total volume, of course. We want to know if we have a blow off or a blowout. We look at the up-down volume ratios for the New York Stock Exchange and for the S&P. And what we're doing, so on this chart, when you put all of this together, we're looking for what we call climaxes. And climax days are when net advance declines move above our threshold or below our threshold. In this case, we had the threshold broken. And then we're looking for good volume to confirm whatever we're seeing. And then we're looking for the volume ratios to go over 3 is our what our thing is. So we had one of these four did give us climactic readings. So we had to mark this as a climax day. It was likely going to be an initiation, and we did see price move lower from there. But you can see this chart has a lot of climaxes on it. And I will tell you that the current chart does not have quite so many climaxes. And we'll be looking at that chart later to get a sense of what's going on in the market right now. So I want to give you all these concepts, and then I'm going to walk you through our DecisionPoint alert report, where I put all of this information together, and you can see what we do every market day and how we review the market. So one of the key ones that we look at is the price above moving average indicators. The price above the 20-day EMA, the price above the 50, the 200, and then we look also at percent of rising momentum and percent buy signals. So we do these percent rising momentum. We come up with rising momentum using our price momentum oscillator. The price momentum oscillator is very similar to the MACD and the PPO. You can use either of those, but for the PMO, we actually have an indicator that tells us the percent of stocks with rising PMOs, or with a rising PPO, if you will. And then we look at the percent of buy signals. How many are on price momentum oscillator buy signals? Basically, where the price momentum oscillator has moved above its signal line, that gives you a buy signal. So another breadth way we look at breadth is by looking at the percent of rising momentum and the percent buy signals in conjunction with the price above their 20, 50, and 200-day EMAs. So the Golden Cross and Silver Cross indexes, what are they? Now you know the concept of price above the 20, 50, and 200-day EMAs. Let's go a little deeper. A Golden Cross, most people are familiar with, right? That is when a 50-day EMA crosses above a 200-day EMA, or just a simple moving average, however you use it. But basically a 50-day moving average greater than the 200-day moving average is a Golden Cross. We came up with a Silver Cross, and a Silver Cross is when the 20-day EMA is above the 50-day EMA. So if you get a positive crossover of the 20 and 50-day EMAs or moving averages, simple moving averages you can use, but we prefer EMAs. So when you get that crossover, that is a silver cross. So the gold and silver cross indexes, an index takes into account many members. And so we tally up the percent of stocks that have a golden cross. And then we tally up the percent of stocks that have a silver cross. And these indicators are really interesting to see on the chart so that you can get not just the price above their 20, 50, and 200-day EMAs, but you can also see how many have a golden and silver cross, and that gives you even more insight into what's going on as far as market participation. So I think these in silver and golden cross indexes are highly powerful, and we're going to look at quite a few. I'm going to walk through the sectors when we're through, before I go through our DP alert, and give you a sense of how we use them and how they are so powerful, looking at the sectors. We also do 6 industry groups as well. I don't think I'm going to have time to show you those golden and silver crosses, but we also cover those in our DecisionPoint alert. So here is our bias assessment chart. This is sort of a short-term version. I use a longer-term version in my DP alert report. I'll show you that as well. But I think this is a really good one to give you just an idea of the concept. So here down on the bottom is where you have the percent of stocks above their 20-day EMA, above their 50-day, and above their 200-day. So we can see that on this particular chart that the participation is leaking out of the market. You're getting a declining trend. But what does that mean as far as the silver and golden cross indexes? Well, the silver cross index did end up topping due to the loss here of participation. And the reason we saw that, so you can see the silver cross index is at 65%. The amount of stocks above their 50 and their 20 and 50-day EMAs are only 54 and 60%. And so with these percentages being lower, then obviously with price being below these levels, the 20 and 50-day EMAs are going to start moving lower, and that is going to take away those silver crosses. So that is part of the reason that we saw this silver index cross move below or turn over. The golden cross index is still above its signal line and it's moving upward. And at this point, it is vulnerable to moving downward simply because we have 73% here with golden crosses, but we have less than that have stock price above their 50 and 200-day EMAs. So with those percentages being lower, like I said, if the wonderful thing about an EMA, I don't know if you're familiar with it, but the concept that if price moves below an EMA, the EMA is going to follow it. So it's not going to, a simple moving average can move in a different direction even when price moves lower than it. But on EMAs, it follows. So you can know that if, again, there are less stocks above their 50 and 200-day EMAs, those 50-day EMAs are being dragged down below their 200-day EMAs. And so that is going to change the golden cross index and make it move lower. But in this case, it's still moving higher and we still have a pretty decent amount of participation in here. Like I said, we'll look at some of the charts that are right now so I can give you my analysis of what's going on in the market currently. So now that we know about the golden and silver cross indexes, one of the things we can do is look at the bias. What do they tell us about the market bias? And way we determine that is we look at price above their 20, 50, and 200-day EMAs in the short term, just to get a sense of what direction they're going and what their readings are. And that gives us sort of an idea of what's going on in the short term. We look at 50% bullish thresholds. So we want at least 50% of the stocks above their 20, 50, and 200-day EMAs. And again, that's going to give you a sense in the short term as to where we are just by looking at these particular indicators. Now we want to compare to the silver and golden cross indexes. If participation is lower, then you have a bearish bias. And if participation is higher, then you get a bullish bias. So this is kind of the short-term sense of it. Okay, so if participation is lower than that 50% and we have price above their 20, 50, and 200-day EMAs, also below their 50% threshold, that gives us just a sense in the short term what is going on. And I'm going to show you our bias table in just a moment, but this is the really important market bias concept, so pay close attention to this slide. The Silver Cross Index, when it is above its 10-day moving average, its 10-day EMA, when it's above that signal line, you have a bullish bias in the intermediate term. So we're looking at where the Silver Cross Index is in relation to its signal line. And that gives us a bullish bias if it's above the signal line. If it's below the signal line, you're going to have a bearish bias. The Golden Cross Index, when it's above its 20-day EMA or its signal line, then you have a bullish bias in the long term. So these are really critical concepts because what we're going to look at next is a bias table. So when we get the bearish bias, it's basically the opposite of what I just said. So when the indexes are below their signal line, you have a bearish bias. So here is our bias assessment chart again. And we know in this case, this actually is a chart from February 26th. So we have a pretty good idea. I'm going to talk about this chart in more detail when we get to the DP alert. But just so you understand, currently we have a bullish bias in the intermediate term. Now, the reading is only at about 54%. So it's just above our bullish 50% threshold. So it's still looking pretty weak. It would be kind of a modestly bullish reading. But the key is that these percentages of stocks above their 20 and 50-day EMAs is lower than the Silver Cross percentage. So it did move up yesterday, interestingly enough, but more than likely it's going to be heading back down. And if it drops beneath its signal line, then we have a bearish bias in the intermediate term. Now, currently, we have a bearish bias in the long term. That's because the Golden Cross Index is below its signal line. Now, it is reading higher than the Silver Cross Index, which maybe is a confusing concept, right? Because this is a bullish bias and this is a bearish bias. But the bias is only determined by where the index is in comparison to its signal line. So as far as the Golden Cross Index goes, we're at a decent reading of about 65%. It's above that bullish 50% threshold, but we need to see it move higher. This is our bias table, and this is as of February 26th. The ones in purple outline are the ones that recently changed. So we take the Silver Cross Index for each of these, and we see where it is in relation to its signal line. Remember, the Silver Cross Index being above its signal line gives you a bull bias, and if it's below its signal line, it gives you a bear bias. Now, the Golden Cross bias, remember, if the Golden Cross Index is above its signal line, you have a bearish bias. And if it's below, if it's above its signal line, you have a bullish bias. So below, bearish, above, bullish. And what I like about this table is this is where I get that sense of what's happening in the short term. And the way I determine that is by the amount of bear biases we have on this bias table. And you can see that now that the market has been moving lower, that these biases are starting to switch to bear. Now we did get 2 bullish ones yesterday, but they are real close to their signal line, and there's a good chance that they're going to lose that bullish bias very soon. But the fact that we're getting all these bears popping into this table tells me that in the short term, there's some weakness that we need to pay attention to. And I think that's sort of obvious by what's going on in the market with the decline, but we need to be aware if we do get a rally like we did yesterday, that the biases are still moving negative. And so the chances of the rally catching hold and moving higher, it's going to be harder because we have so many bearish biases right now on our bias table. All right, here is the long-term picture again for our golden and silver cross indexes. This is as of February 26. I talked about this a little bit already, but I'm going to talk about it more when we go through the DP alert, so I'm going to skip that. So let's go ahead and move and look under the hood and connect the dots with our DP alert. So we want to see what's going on currently under the hood for the sectors and indexes. Now, this is going to be the tricky part where I try to share my screen in the appropriate way. So give me a moment here. There's a lot of stuff on this. I'm going to show just Safari, that one. There we go. All right. Like I said, I apologize that there is white space here and these are kind of small, but like I said, we use these in our DP alert report and I have to have them unfortunately sized so that they fit in the report, but I'll walk you through as we talk about them. So here's the S&P 500, what we call an under the hood chart. It includes not only those participation numbers here, but it also includes the silver and golden cross. Here's our price momentum oscillator that I was talking about earlier. I use the on-balance volume. Like I said, I've been calculating that since high school, so I have a pretty good understanding of on-balance volume. Just for a quick refresh, on-balance volume gives you a sense of where the volume direction is going. And the way it does that is if you have an up day, you add the day's volume to the OBV line. If you have a down day, you subtract the volume for the day from the on-balance volume line. So it really gives you a good sense. We want to look for divergences on balance volume. That's how that works. And then I like to include stochastics for a real short-term view of what's going on. And then we look at relative strength to the NASDAQ. And right now you can see that tech is not performing very well. The SPY is outperforming. So we talked a little bit about what's going on under the hood here, but let's look at that NASDAQ. Now look at the difference in participation here. Remember, we were in the 50% range on the S&P. On the NASDAQ, we're in the 30% range. And all of these percentages of stocks above their 20, 50, and 200-day EMAs, all of these percentages are below our 50% bullish threshold. So that tells us there's not a lot of participation going on. It's going to be very hard for the NASDAQ to rebound off this level of very strong support. I think that this support level is vulnerable. I think that there's a good chance that we're going to see a breakdown here. And that's partially because we have so few stocks above their 20, 50, and 200. Look at the Silver Cross Index. The Silver Cross Index is in decline. it is below its signal line. So there's a bearish bias in the intermediate term. And you can see the Golden Cross Index has been holding below that bullish 50% threshold for some time. So there's weakness in the long term, which tells me again that that support level is probably very, very vulnerable right now. It is below its signal line, so the bias in the long term is also bearish. Let's look at the sectors real quick. I'm just going to look at these silver and golden cross indexes. So the communication services, you can see a decline in participation of stocks above their 20, 50, and 200. You can see that the silver cross index is below its signal line, so we have an intermediate term bearish bias there. And notice the golden cross index really starting to take a nosedive lower. Price momentum oscillator on a sell signal. So comm services looking very weak going into this level of support. Consumer discretionary has really been suffering, but interestingly, participation is held pretty steady. It's still below our 50% thresholds, but I think it's really interesting that they're holding steady. We have an IT intermediate term bullish bias on the silver cross index and a bullish bias on the golden cross index. So even though we're having this move down, there is some hope underneath the surface right now for consumer discretionary, and stochastics have turned up. So I think that we're still very vulnerable at this support level, but given that we're seeing a little bit of improvement here on the silver and golden cross indexes, it tells me we could end up getting a little bit of a bounce off this support level. Consumer staples doing very well. Did lose some participation yesterday, but overall you can see very high readings of 76 and 65%. You have the silver cross at 50% at our bullish threshold. It's above its signal line, so IT bias is bullish. Golden cross index above its signal line, so we have a long-term bullish bias on consumer staples. Nice rising trend. I'm expecting it to move higher until the market has a big downturn, in which case all the sectors are going to have trouble. But right now, defensive sectors are leading. That usually happens before a market top or decline. And so that is a little bit worrisome. And that's why I'm looking for some major problems with the market coming up. Energy double top, which is a problem. PMO is dropped below its signal line. Notice the participation has really started to drop off for energy. Currently, the silver and golden cross are above their signal lines, so we do have bullish biases in the intermediate and long terms. But given this drop in participation of stocks above their 20 and 50-day EMAs, I think that energy is likely to lose the current rising trend that it has. And that double top certainly doesn't help. Financials kind of in a holding pattern. We have a triple top going on, but it hasn't broken down below that confirmation line, so it's still holding up. But notice the declining trend on stocks above their 20 and 50. We also have the silver cross index below its signal line, golden cross index below its signal line. So we have problems going on underneath the surface for financials. So we need to, at this point, look for a breakdown, not a breakout. Healthcare, bullish bias in the intermediate and longer terms based on the silver cross index above and golden cross index above their signal lines. We can see that participation is moving up slightly. So healthcare, a defensive area of the market, does look somewhat promising. We had a golden cross of the 50 and 200-day EMAs right at that bottom that we saw over here, and that signal is staying intact. Industrials, negative look, low readings on participation, silver cross index and golden cross index below their signal lines. So we have a bearish bias for industrials, materials, a mixed bias. The silver cross index is below its signal line, so it is a bearish bias in the intermediate term. But so far we have a bullish bias going on in the long term because the golden cross index is above its signal line. Now these indicators are available on stockcharts.com. They aren't available elsewhere as far as I know. The PMO I think you can get on Thinkorswim as well as stockcharts.com. But these indicators, the silver and golden cross, are exclusive to stockcharts.com and to our website. All of these charts I'm showing you, you have access to as a subscriber to any of our products. We've got real estate, defensive sector, bullish bias in the intermediate and long terms based on location of silver and golden cross indexes. And you can see that participation has been melting upward. So looking good for real estate. Technology in a holding pattern. Notice that the participation percentages here are below the 50% threshold. Currently, the silver cross index is below its signal line, so we have an IT bearish bias in the intermediate term, but currently a long-term bullish bias on the golden cross index. I still think technology is due for a decline below this level of support. Defensive sectors are leading, aggressive sectors are struggling, and I expect technology to continue that way based on these low percentages of stocks above their key moving averages. And finally, utilities looking very good. We are starting to lose some participation though, so this does look a little toppy, and the PMO has turned over. But currently we do have a bullish bias in the intermediate and long terms with very high readings on the silver cross and golden cross indexes. So we may get a decline here, but it should be likely temporary. All right, let's go and take a quick peek at our website. This is our homepage, and I welcome you to come and look at our video to tell you a little bit more about our website. And I would encourage you to sign up for our free newsletter. You'll get opportunities like we saw today coming to this particular presentation, but I do other presentations. I also send out my free articles there. These are the subscriptions that we have. The DecisionPoint Diamonds this is my stock picking newsletter. I give you 10 stock and ETF picks per week. The DecisionPoint Alert is what I'm going to go through now, and this is the cornerstone. You need this. Everybody needs the DecisionPoint Alert. You need to know what the trend and condition is of the market, like I said, before you get into your trading, and this is where you're going to find it. The DecisionPoint Scan Alert system, we offer the stocks from my exclusive scans that I run on stockcharts.com to find the diamonds in the rough. You get all of the results from those scans for $29 a month. So I've already vetted these stocks through a mechanical scan. So you're going to get some pretty quality symbols delivered to your email box at the end of every market day with that one. But let's go look very quickly at the last DecisionPoint alert that we did. I guess I need to sign in. All right, so consumer discretionary got what we call a dark cross, the opposite of a silver cross, the 20 cross below the 50. So I already talked about the biases on consumer discretionary. We have a double top on the weekly chart, so it really does not look good for consumer discretionary right now. This is where we looked at the 10-minute bar chart. We look at the 5-month look of the SPY and then do a longer term look at the SPY. Here's your new highs, new lows chart. As you can see, a negative divergence going on currently with price tops, and that's a problem. The high-low differential is moving up, but it is rather flat right now, so I wouldn't look at it as being super strong. We go through our Swenlin trading oscillators as well, which is in the next chart. Here's our net advanced decline and net advanced decline volume, and you can see that these climaxes aren't quite as prominent as they were on the chart I showed you earlier. This last climax, again, you can see went over a threshold there, went over our threshold there, went just about over our threshold over here. So that gave us a climax day. These are exhaustion events. And so or initiations. In this case, it was a downside initiation, and we expected lower prices going in. And there's that net advances declines being positive on that down day, which gave us a pretty good hint that we would get a bounce yesterday. These are the Swenlin trading oscillators, and you can see that they are moving down currently. The ITBM and ITVM, we've got negative divergences, and that's the key takeaway on our bias chart. These negative divergences on participation are a problem and do suggest that we're going to lose this rising trend in the market. All right, so that covers that. Let me go and give you my, hang on. This is not letting me go back. There we go, show main screen. Why isn't it showing my main screen? Well, goodness. Let's try it this way. Hang on. This is very strange. It won't share my PowerPoint. It says it's sharing it, but it is not sharing it. All right, so I will let you know that we do run a 2-week trial, and you can use the coupon code DP trial and the number 2, DP trial 2, and that coupon code will get you a free 2-week trial to any of our reports that we do, and we would welcome you to try them out. I do have another, if I can find it, my other,
Hey, Erin,
you can get, yes.
the coupon code, is that capital or is that not capital letters for the DP? Does it make a
It
difference?
works either way, DP trial and the number 2.
Okay, DP trial. Okay. I'll put
And
that in
then
the chat for everyone.
Thank you. And then the last one is you can get the first 2 months of any of our subscriptions. So you can either do the trial, or if you want to just jump right in, you can get your first 2 months of any of our subscriptions at 75% off. And all you need to do is subscribe with the coupon code DPSAVE75. DPSAVE75, that will get you 75% off any of our subscriptions. And that is all I have for you today. Again, I don't know why it's not showing my screen the way it was supposed to. Oh, there it is. It did it. So there you go. There's our presentation special right there. DPSAVE75.
Okay. And the other one was DP2, or was it DP
Trial 2.
DP trial 2. Okay. I'll write that in the chat box as well.
Yes, and this presentation code, both of these codes will be good if you're watching the recording. They are going to be good for quite some time, so you should give them a try. All right.
Really great stuff today. Really on point what's going on today.
And there's the information to find me, DecisionPoint.com, and feel free to email me if you had any questions.
Thank you, Erin. We appreciate it. Ladies and, yeah, thank you so much.
All right, thank you.
That was Erin from DecisionPoint, and that was really informational. So please check her website out. I really enjoyed that presentation. She's got some good information there. I myself will probably do the trial for sure, because I liked what she was saying there. And I'm always trying to get more and more data points as well. Again, we got a little bit of a lull right now, guys, so I'm not sure what's going on for today, but feel free to grab something to drink or grab something to eat until our next presenter gets here. And give you guys a market update. S&P is down about 0.33%, NASDAQ down about 0.73%, and Russell's down about 0.29%. So it's been fluctuating a lot. I think NASDAQ's been consistently down today mostly, for the S&P and Russell at least. So how's everyone doing? Everyone out there, how's everyone doing today? Good, great, all right. Excited. It's almost the weekend. Yeah, well, all I have to say is this is really challenging times and in the markets. So if you can make it through this, we should all be pretty good. We could all make it through this. Be better traders at the end of it. Whatever is going on right now, whatever situation we're in, we can't really find direction. A lot of people are seeing breakdowns in the market. That's definitely happening too. Hold on, guys. I gotta put myself on mute. All right, everyone. We have a great one for you. Be on very short.
Hey, it's me.
Hey, it is Norman Howland, everyone. One of our favorite guests. He's a trading coach. He's been trading the markets for a long, long time. So I'm excited to see what he has for us today. How you doing, Norman?
Good. I appreciate it. I know I'm kind of jumping in for Larry, and I really appreciate that. And it's an honor really to be holding a space for him. I'm just wondering if we want to, we have about 40 minutes for this. Is that about right?
Yeah, go until about 3. Whatever you want to fit in until about 3.
Okay, very good. All right, well, shall I just start?
Yeah, go ahead.
Okay, here I go. Thanks everybody for being here today. And I'm really excited to show you something. I'm going to experiment with you a little bit today. I'd like, if you're a prop trader, then when you reach that blowout line, that red line that is so typically the point of nervousness where you tend to jump off your plan, I want to give you some pointers on how not to blow up your funded account. If you're just starting prop trading or you're still working on the evaluation stage, stick with me here because you're going to learn some things that are going to help you also in the evaluation stage, but also in the future if you're just beginning. I'm going to deal with a $50,000 account today. That's where I recommend traders start. In fact, in the end, where they actually finish. Those traders who are making 6 and 8 figures in 6 and 7 figures, I haven't met anybody with 8 yet, but 6 and 7 figures a year with prop trading have multiple $50,000 accounts. So I'm going to use that as an example. But mostly, I am going to give you an offer at the end that is very experimental, and I guarantee that you've never seen anything like it before. It's really going to tempt you to take advantage of it, and that's really why I've created this. So I'm going to do a little experiment there in the end for you, and see if I can encourage you to try this prop trading and become a successful prop trader. I mean, to me, this whole idea of prop trading is really the most exciting thing to happen to the retail trader in likely, since maybe exchange traded options came but even more so. I mean, trading somebody else's money and getting 80 and 90% of the profit, this is unheard of. In fact, Apex gives 100% of your first 25,000 to kind of tempt you to really become a professional trader for them. It's not rocket science. It's a matter of process. And I'm going to show you, at least today, about that red line. I'm going to address this to the more experienced trader who's maybe been, who's passed the evaluation stage and went and getting into the, wants to, and is funded, has money to trade, ready to make enough to be paid. But has struggled in that effort. So let's get going. I appreciate your being here. I'm going to put this into full mode. Let's see how I'm doing here. And I've got a trade on. Let's see if I can. Oh, look at that. Just to show you, I know what I'm talking about. Up 4,700 on that in the lower right. So it doesn't always happen like that, but today's a nice day for that account. Okay, let me show you how I do this. I'm going to blow this up. First, know that trading futures is risky and can result in a substantial loss, and only risk capital should be considered. And furthermore, past performance, as you know, is not indicative of future results. I'm going to show you won't show you much in the way of numbered results today, but I just want to say that trading really is not for everyone. And I think you need to realize that at some point, if you're mentally strong and you have a good trading plan, there really is no reason why you cannot succeed. So I'm going to assume you're that person that believes they have the ability, but are just not getting there. I went to the University of Cincinnati. I'm a Cincinnati Bearcat. Didn't have the money to go to school. This is a work-study school. Very few schools let you work for a quarter and then work for a quarter and go to school for a quarter. It's a 5-year degree rather than 4, but I got my math degree from there. Not long after that, about 4 or 5 years after I graduated, I was already running one of the largest option firms in the country. This is not an exact picture, but it looked a lot like this. I'm into options, but I'm now into futures. I love these zero-sum game of futures. I really think it's exciting and can be a real moneymaker if you get it right. I did work for Payne Weber after that for a while. I was a commodity trading advisor, similar to a prop trader, only I was making 20% of what I earned for a client, not 90%, but it was for it was for millions of dollars. So that was an exciting and very profitable period for me. Only spent a couple of years with them because I didn't like the selling part. You had to sell people to, and as you're going to see in this presentation, I'm not really a terrific salesman, but I'm a pretty good trader. Here is and instructor. I've written several books during my time with the option firm and managing. I realized what trading plans worked and what didn't, and I wrote a book on it. Actually, this was the last of 3 books that I wrote about managing and constructing effective trading plans. There've been books written about me. I tend to be hyped up on stage and really get excited about the opportunity. So I really want you to hold that in mind as we go along. In 2000, I started something called the Disciplined Trader because I realized that it was the mental piece that most traders had an issue with. And so I decided to focus primarily on that, and hardly anybody does that. You can look at 20 different presenters and you won't see any sometimes talking about the mental game. It's arguably the most important piece. But most recently, in the last 5 years, I've zoomed in on what I call what is prop trading, and you can tell by my excitement, my appreciation for it. TheirMoneyYourProfit.com. I'm going to direct you to that site in a second, but I want to get into my presentation since we're a little bit limited in time. Again, here are some of the books and papers that I've written over the years. I've also what put me on the map on the internet. I did over 200 4-minute drills for traders. I guess that's 8,000 minutes, if I am 800 or 8,000. In any event, where I go right between the eyes. And I'm going to do that for you today with some points that are important for traders, okay? An overall recognition, and that's as we move through this presentation, I'm going to be recognizing the importance of the mental and emotional aspect of trading. When I build trading plans, I try to infuse the mental part in there, and I think I'm going to show you how I do that in a second. But the specific trading techniques I give you will be laced with the understanding that without the mental and emotional control and the spelling control of emotional, without the mental and emotional control, you're not going to succeed as a prop trader, any other kind of trading, okay? At the conclusion of the presentation, I'm going to be giving you a special offer. Well, this is a Saturday presentation. I'm giving you before Saturday. So you're the first people I'm experimenting this offer on that I'm going to give you in the end. So really stick, again, you've never seen anything like it. It really is a matter of you trusting me and me trusting you. And it's going to, I think it's going to excite you. So let's get going with the presentation proper. Let's get started at the end, because I think that unless you continue to look at what you're getting out of prop trading, what your goal is in prop trading, when you come across hurdles, and no matter how much I give you the advice on what to do, you're going to have those hurdles. But with my advice, you'll break them a few times, but then you'll learn to jump them quickly. Okay, so let's start in the end to give you I'm going to give you the clear picture from experience and experience of some of the people that I train. I want to give you why it's so darn exciting. Again, we're going to work with a $50,000 funded account. Now, in a $50,000 funded account, you need to get to $52,600 before you can start asking for money. Okay, so 50,000. Now, I'm talking to you now with Apex Trader funding in mind, and I've got a special link if you want to find me and write me. For Apex Trader Fund. It's the one that I advise, that and Top Step. But in there, they're all about the same, depending on what prop firm you go with. If you have a $50,000 account that you're funded because you passed the evaluation stage, you need to build that to $52,600 before you can start asking for money. The red line is at $50,100. $2,500 below that $52,600. In fact, in the beginning, when you start with 50,000, that red line is also $2,500 below, meaning $47,500. So as you're building that account, as long as you don't backtrack $2,500 from your trading high, open trade high, and we can discuss that a little bit later. But I'm saying that if you reach that $52,600, that red line is at $50,100, okay? And if you take money out, if you take $1,000 out, well, all of a sudden that red line is not 50,000. The red line is still 50,100, but that 52,600 becomes 51,600, and now you're only 1,600 from that red line. You want to stay away from that red line. So I always say, in the beginning, if you can, when you reach that 52.6, go ahead and take $500 out. Don't take 1,000 or more. You want to stay away from that red line. But let me clarify a little bit my next example. Again, you've got a $2,500 give between that achieved 52.6 and 50,100. I'm going a little fast, but stick with me. It'll all come together for you. Again, in that $50,000 account, if you were to just let it alone and build it to 60,000, what most people don't realize is that that red line stays at 50,100, which means now you have a give of 9,900. Go ahead and take 1,000. What's the difference? You still have 8,900 to that red line. And if you do what I suggest that you do in prop trading a $50,000 account, you don't want to risk any more than $250. When you build it up, it could be a little bit more, but I like to stick with $250 per trade. This way, if you have a good trading plan, one that is responsible, one that is right 2 out of 3 times in the trade, that at least gets you a little scalp or whatever it is, it puts money in your pot in the bank in this particular case. If you can do that, you know, you're going to stay away from that red line. But when you get to 9,900, hey, you can risk 500 on a trade, and or even 1,000, but you can't do that too many times. You want to stay as far away from that red line as you can, so that even if you take a week off, a month off, with Apex, you can take as much time as you want off. You can still give yourself $1,000 a month for a few months and be plenty of room from the 60,000. But here's where you want to be. A $50,000 account, let's say you build it, you're patient and you build it to 75,000. Well, that 50,100 remains as your red line. So you've got almost $25,000 of give. Now you can trade in big. Now you can take $1,000 risk per trade, even if you get 3 or 4 wrong in a row, and it happens with every trading plan. You lose 5 in a row. Hey, you still have a 19,900 room. You're still very, very far. You're trading with confidence. This is where you want to be. And I want to emphasize the fact that it's important to view and to keep in your mind where you want to be. It's not 52.6. This is where you can. They tempt you to want to take that money up, but your job is to stay as far away from this red line as you possibly can. And to do that, you want to just keep on building. And go ahead and take $500 out. Go ahead and take $1,000 out every month as you're building. But don't be greedy. Let it build. Let it build. And if you have multiple accounts, you can take a little money out of one of them, or 2 of them, and let 2 of them build without taking any money out, okay? So I want to give you that perspective. When you have a tough day, or when you have a struggle in a day, up and down, and you're getting nowhere fast, remember that if you're doing that up and down, but you're following your plan, you're doing the right thing. Winning and losing is not where the judgment comes when at the end of the day. The judgment comes in, did I follow my trading plan to the T? That's where, and if you lose that day, you still congratulate yourself because you followed your plan. Why? Because you know over time you'll do very well. All right, let's get into the prop trading challenges, okay? I'm going to give you 3 of them. Again, this is staying away from that red line, the overall drawdown line. Just want to look here. I'll take any questions that you have at the end. Just looking if got enough people really here to get going. Okay, here is the issue. A tight drawdown limit of 5% of open trade off the open trade equity high. That gets you, if you're trading a $50,000 account, 5% is 2,500, right? So again, I'm emphasizing that 2,500 below. You can't breach 47.5, then the 2,500 differential follows you along the way. I'm not going to get into their open trade equity measure. If you've been funded, you know what that is, but don't let that scare you if you don't even, it's not going to scare you because I'm not talking about it, but the idea is that let's get into just the basic math, okay? As you are working toward your goal of 2,600, remember I said you need to get to 52.6 to start taking out money. As you're working toward your goal of 2,600 profit on a $50,000 account, the closer you get to that red line, the more stressful your trading becomes, often pulling yourself off the plan. Okay, so here is the solution. Every trade should include scalping in part or whole. Why do I say that? It's because that if you have a good trigger, and in our trading plan, Loaded Gun, which I'm going to offer you at the end with this deal that you've never seen before. Every trade that should have a scalping, and if you have a good trigger, it means that you'll get. When I mean a good trigger, I mean one that gives you a pop when you apply it, at least 2/3 of the time. A pop means not just 1 or 2 ticks, but I'm talking about 5 or 10, where you can take a couple of $100 from a trade in the S&P or the E-mini, S&P, or the micros if you're trading 4 or 5 micros, or the euro dollar, or which I like to trade, or the half contracts of crude, which I like to trade. Every trade should include scalping. If you have a trigger that gives you that quick response, whether it continues or not, it doesn't matter. I'm judging by the quick response. Take that. So you're always starting out with 2 positions, okay? The less you ask from a trade on initiation, the more likely will be a favorable outcome. Look, it's true of life. The more, if you're on a first date, if you ask for a handshake, you'll probably get it pretty quickly. If you ask for a hug, you got a shot at that. If you ask for a kiss, maybe it's not time. If you can't ask for more because you're asking for too much. Same with trading, okay? If you're in trading, if you just ask for 5 or 10 ticks with a tested trigger that gives you a pop 2/3 of the time, you take that. So I always recommend that you start out with at least 2 positions in a trade, two contracts in a position. When I say position, I mean the total number of contracts in an attempt, okay? So if you have a position on an attempt on, put on 2 contracts. When you get that pop, take out 1, and then move your stop to break even on the other one. This is going to help you build much more quickly than anything that I've seen and have tried and tested in the world of prop trading. Each successful scalp pads the distance between you and the balance, which means between your balance and the red line. You know what I'm saying? If you get a pop, you take it, all of a sudden that counts in your equity, your closed equity, and now you're moving further from that red line, okay? So using that scalp runner combination, that second position, the second contract that I mentioned, you're taking on 2 contracts in the beginning. The first one you're taking a scalp, and then the second one you're going to treat as a runner. I always like to go with the trend, so my trigger is putting you into a trend, and therefore, or a possible trend, and then so you want that runner. You want to run with that trend. Okay, so the first one is a scalp, creating the padding. Second one is the runner. So using that scalp runner combination upon the execution of a trade, or using the scalp exclusively. I show you how to measure. I don't like to take any more than $250 in any one position. That's the 2 contracts when you're trading the $50,000 account in a funded account. And so to measure that $250 before you get in, sometimes it's too much of a risk to take on both, at least that minimum 2 position. So if you're forced to take on 1 position, because you want to, the most important thing is keep that money management number always, that 250 per trade. You want to treat the one that you're taking, the single position, as a scalp. Okay, the less you ask from a market, the more you're likely to get it. Okay, I think you're with me on that. I'm going to look at the chat real fast and see if I can see that you're with me. Can somebody give me a hey? What the heck are you talking about? And and I'll just see that you're with me on this. Really appreciate it. If you would give me a hey, this sounds good. I'm into it. Can't believe how excited you are, Norman. Let's just see. Okay, great. Thank you. Anybody else want to comment or say hi to me? Looking at the chat here. Okay, let's get going. Let's go to the second challenge that you have to stay away from the red line, identifying a set, frequent, reliable trigger. Okay, in order to keep the risk to reward ratio in line, a reliable trigger, I've gone into this a little bit for you, one that gives you a pop in your direction upon the application at least 65% of the time. Okay, and you got to have a tested sequence there. A pop means one that moves in your direction within the first few candles after you apply it. You're not waiting 10 candles. The first candle, the next candle, you want to see that pop. should happen close to immediately. The trigger's got to be frequent, meaning that the trigger appears often enough not to challenge your patience. Remember, I talked about I always lace the mental and emotional game inside of this, okay? So as you wait for it to occur, this trigger, you want it to be frequent enough so you're not testing your patience. Most traders, I would say the most frequent issue that traders have is the patience issue from a mental and emotional standpoint. Okay, the solution here again is to have at least 2 A+ triggers. Okay, not only take on 2 positions when you get the triggers, 2 contracts at least, but 2 A+ triggers. You want to have a couple of these triggers that have been tested thoroughly to meet the frequency and reliability standard. Okay, if you trade a single market, change time frames to expose more markets. In other words, I'll give you, for example, 2 short candles can combine to 1 long candle, enough to be identified as a trigger. So if you have a trigger like we have, where that last candle needs to, in our case, cross a particular moving average, if that happens, you want to have that formation as much as you can. So if you're looking at a 5-minute bar candle chart, which I like to start with myself, and it's you have a shorter amount of time to trade than usual, go to the 2. That will expose more triggers because you're getting more formations, okay? And if you see in the 5 that you see a couple of candles that you know could combine and give you that thrust that you want in the trigger, then go ahead and go down from a 2 to a 5 or 5 to a 10. So you can move around in time frames in order to I know I'm giving you in order to expose more triggers. I know I'm giving you a lot, but I'm hoping that you're catching some of this, okay? Because the process, what I'm telling you is not rocket science, but I'm giving it to you fast. Okay, let's go. Oh, well, trade more than 1 market. I like to do that. I like to stay with the 5-minute because it gives me a nice move. Profit with even with the scalp is very nice. Trade more than 1 market. Say the NASDAQ and the S&P micros. 2 markets means twice as many chances for your trigger to be created. Note like or disassociated markets. I like to trade the S&P and the crude, or the S&P and the euro dollar, or the S&P and the Japanese yen. I don't like to trade the S&P and the NASDAQ because they're too alike, even though recently they've been trading unalike. But you know, diversification is something that really can defend you and protect you also. Okay, so won't get into that more than that, but I wanted to at least bring this point up. This is what I call a frequent reliable. This is exactly what our charts look like when we trade. Sometimes we use another moving average, but I won't show you that now. But this is the basic system, and you can see how many triggers we're getting. This is the RSI that we use for, not for whether we get in a trade or not, but in position sizing. I really teach a lot about when to take on a strong position, when not to, okay? Just want to show you what a frequent trigger looks like. All right, let's get into the nerve increase as you get closer to the finish line. This is challenge number 3. Okay, when the account balance gets near the finish line, nerves increase, leading to being too careful, causing you to hesitate and do stupid things sometimes. Well, I want to reduce this here. Trade 2 accounts at the same time. You can trade the same contract using different contract sizes, or 2 different contracts, the mini, micro, or 2 different commodities. This is what I kind of mentioned this before, but I like to trade 2 different, let's say the euro dollar and the micro S&P when I'm beginning trading a funded account. I like to move steadily higher, get past that 52.6 and beyond. I actually, by the time it's 55 where I start, 55,000 where I start expanding. I want that $5,000 cushion. Okay, you can trade. So I like to trade 2 unidentical contracts. Okay, and I do it at the same time, meaning that if I like to qualify for 2 $50,000 accounts and put 1 in the euro dollar, say, and 1 in a trigger that I see in the micro S&P. This gives me diversification, and I'm not loading up on one trade idea in multiple accounts. I really like to vary things. I can teach you more about that at another time. But I wanted to give you that perspective. A positive result in both accounts will break one through, and a negative will keep one close or combination. So if you're near that green line, which is getting funded, you start to get nervous also, and you can use this at that point also. So won't get into that, but I wanted to give you those concepts to give you some idea that there, by having a responsible trigger and by keeping your risk small, you're going to get where you want to go. Okay, you adjust your trading plan to match who you are emotionally, in addition to training your subconscious mind to strengthen your weakness and emphasize your strength. In our course, I actually give you one of our subconscious trainings. Look, we're the disciplined trader. I'm the disciplined trader. That's what our main site is called, our parent site. Again, without the mental and emotional piece, it's not going to happen. That's why I build that mental and emotional piece in our trading plan. You've never seen anything like our plans. I think that's why we get such good press on it. Okay, and listen, if you're successful, you're going to hear about it. Okay, so here's some futures contracts to consider when you're trading and you're getting close to that red line. I think just in general, okay, when you're trading and you're trying to expand in your account, there's micro, NQs, and ES, very flexible in your exposure, but can add up a bit with the round turn fees. So you're going to watch that a little bit. Okay, the euro and the Japanese yen, 6E and 6J in Ninja Trader, a full contract size only $125. That's really, really, you can take on 2 contracts and still be within that $250 maximum that you want to risk on each trade, that you're available to risk to you. So in fact, different basis gives you different exposure. The Japanese yen is a smaller basis. It's about 65 cents to the dollar. The euro dollar is about $1.05. So the same percentage move, and if you know your math out there, the same percentage of a smaller number is going to give you a smaller risk. So if you're real close to the red line, trade the Japanese yen. You can have some power, but you can still fit in that risk for you. And did I mention that the currencies tend to trend? Okay, that's what I really love about the currencies. We can talk more about that some other time. The mini crude oil is the QM account. I run across traders that I start coaching. They've never heard of the QM account. This is a great contract. Crude oil tends to pop. These are half contracts, so in many cases you can apply it and get a nice quick scalp, and then still have that half left to run, because crude tends to run also. It does nothing. All of a sudden it'll run in a 5-minute period. It'll run a half a dollar or even $1 sometimes or more in a very short period. And if you're positioned in that second contract, man, it's a sweet thing. So these are contracts that I like to see you concentrate on, that I always recommend that you concentrate on for various reasons. I give you a touch of those reasons here. Okay, I want to give you now my offer, because this is, and if you've stayed this long, I really appreciate it, because you've never seen the offer that I'm about to give you. Okay, this is the Loaded Gun Simple Trading Plan. It's a basic trading plan that we've been improving every month almost. We get together every month, and we have some professional traders, former floor brokers that have thrown away everything they've used and are using Loaded Gun. They're in these meetings. Sometimes they have suggestions that after I test them for a couple of months, I can include them in our plan as a variation. So Loaded Gun Simple Trading Plan, I give you the core, the original Loaded Gun trading plan that people were talking about in the very beginning. Okay, it's got videos, and all the videos, there's only a couple of them, and they're only about 45 minutes each, including all of the examples. All the rules fit on one sheet of paper. You can download it, look at it, but give you the core trading plan. And then we have nuances. I didn't get into nuances in this presentation, but it's certain things that you can do in trading to fit you without exposing you to only a few, by just exposing you to maybe 1 or 2 ticks more risk. These are nuances that fit you as an individual. If you tend to be a revenge trader, if you tend to overtrade, these nuances can really help you to control yourself, okay? Again, there are 7 of them. We're testing 2 of them right now. Those videos are available to you also. And we have the monthly get-togethers every last Wednesday. Actually, this one, because I was overseas, doing a presentation, I have the meeting is next Wednesday. If you get in, you can be in our next meeting. Okay, the get-togethers, we have them every last Wednesday of the month for an hour. Every time I answer all the questions for newbies and new people, and we just talk about our experiences, and I give you any updates that I'm working on. It's an exciting meeting, really. And if you can't be there, fine. You can get the recordings, not a problem. Okay, and here's a bonus for you. I want to work together with you to make this happen. I'm going to give you 90 days of unlimited private one-on-one Zoom call. You can have as many meetings as you want to get tight on this very simple trading plan. Okay, everybody looks at it just a little bit different. I want you to get it down. Now I want you to understand that this 90 days does not start as your purchase today. It starts at our first meeting. So you can purchase today at this crazy deal I'm going to give you. It's not so crazy, but it's very inventive, and it's a lot of trust in you, and I trust me too. So you'll see what I mean in a second, but I'm going to give you 90 days of unlimited private one-on-one coaching. You can have as many sessions as you want with me to get it done. Usually it's 2 or 3 sessions max, but if you need more, you got it. It starts with our first meeting. So you can look at all these videos, practice with the videos, and we have them. Not only are there the explanation videos, but also examples videos. You can look at all of our past get-togethers. You can look at whatever you want to get in, and then you can book your first meeting. When you book that first meeting with me, that's when the 90 days start. So don't worry about it. I'm going on vacation next week, and I don't like to. March I take off. Doesn't matter. Purchase this now, because you may not see this. This is an experiment, and I'm going to show you. And so knowing that the 90 days start with the first meeting and not at your purchase date, okay? And I just want to be with you every step of the way. So this is a bonus. I can put a price on it, but I do charge a couple of $1,000s for meetings with me, $500 for retail. With professional traders, it's a little bit more, okay? As I mentioned, that price. And you'll get access to our trading room. It runs 5 days a week in the morning, usually from about 8 o'clock to 11 to 12. It's done by a guy named Pat. It's not a official trading room, so to speak, because I don't pay him. He asked me if he can open a trading room. He's a professional trader himself. He loved the system so much, he wanted to help others to do it. He's a semi-retired guy. He's a helper. He's got the trading room, and he runs it 3 days for all traders, newbies and experience. But then Tuesdays and Thursday, I think he just does for advanced traders, so they can really get into the weeds. So 3 days, again, 3 days for all traders, 2 days for. You're going to get into the room if you want it. As soon as you sign up, I'm going to ask you if you want access to the trading room, and I'll send him your email. He'll talk with you one-on-one, find out a little bit about you, and you'll decide whether you want to be in the trading room. But I haven't seen him reject anybody. So, listen, if you want to learn, if you're ready to really be serious about winning and stop struggling, you'll get into this trading room, and it'll be great for you. But everybody gets in based on it's whether you want it. Some people don't like trading rooms. I personally am not a big fan of trading rooms. I'll be honest. That's why I didn't have one until Pat loves it. He runs a great one. So I want to give you a vanishing bonus. This will vanish today. And again, it's something about the mental piece. If you believe in the mental piece as much as I do, I want to give you a private session with my wife, who turned my head around. And now 20 years ago, I brought her into the system with traders. She was helping basketball players to make the Olympic team, U.S. Olympic team. She is one of the top, if not the top, subconscious trainer in the country, and recognized in the world. She will give you a private session to eliminate your primary mental and emotional issue that's causing you to be your own worst enemy. Okay, you're going to get that with her, a private one-on-one session where she'll use, if you have the fear of losing, lack of patience, revenge trading, hesitation to pull the trigger, overcoming fear and greed, whatever it is, she'll help you eliminate it. Okay, she'll record a subconscious training right there, or what they call an EFT trading. I won't get into that, but whatever she records for you, you'll take it right then in the meeting, and she'll say, hey, Norman, send this guy or this gal your the recording. You'll get that to use, and you'll use it based on her instructions. So this is a vanishing bonus. If you take action on this today, it's yours. Okay, so here's the special offer: loaded gun simple trading plan, the core plan that fit on one sheet of paper, all the nuances, those things that you can kind of adjust to fit your personality. Nobody does that. The the monthly get-togethers, the bonuses of the unlimited coaching with me, the access to the trading room, the vanishing bonus of the special self-elimination session. I want to give you my guarantee. I'm so confident that you're following the loaded gun simple trading plan. It's going to result in you getting funded and beyond by your prop firm so that you risk their money, not yours, and still receive 90% of the profit you generate. Just share your trading experience with me. If you follow the system and you follow the simple rules and it didn't work for you, I will not only refund your money, but give you $500 for your trouble. I've never had to do this. I don't think I will ever have to, but maybe, you'll prove me wrong, but I don't think you'll be able to. It's a simple trading plan, but I wanted you to have a no risk guarantee. All right, here is the offer. Again, the loaded gun simple trading plan, the nuances, the core, the nuances, the monthly meetings. You're going to get the bonus of the unlimited coaching. And remember, it starts not when you purchase, but when we have our first meeting. I'm going to give you the access to Pat's trading room. You'll love him. The vanishing bonus, which is the special issue elimination session with Tisha. It's a $250. We charge $500 for institutional firms and $250 for retail traders. But all of these, you can add it all up, $5,397. I want to give it to you for $1,397. But here is the special. I'm giving you half price half price meaning because right now we offer this without these two bonuses for $24.97. That's on our site. Okay. And so I usually offer it for 40, 50%, never quite 50, but look at it. I guess it's 45% off, $13.97. Okay. But I wanted to do something special. When they called me and they asked me if they could fit in, I said, I want to experiment with this. So here it is. Not only do I want to give it $13.97, but I want to split it up. Okay. But I'm going to split it up in a way that you've never seen before. I'd like you to invest $6.97 now. Okay, I want half now, and half from your profits. It's an honor system. I'm never going to ask you for it. I'm never going to mention it to you. I'm never going to discuss it. Come on, let's get it. I want my money. No, I'm not even going to joke about it. I may joke about it. I won't joke about it. I am not going to mention it. I am so confident. I'm so confident based on the success of my current clients, okay, that you will want to give me the $6.97 from your profits, okay? $6.97 now, $6.97 from your profit, the honor system. Again, I'm never going to ask you for it. If this works out, I'm going to expand the time frame up, but I want to try it with a couple of presentations. And I did one, I'm doing a second one now, theirmoneyyourprofit.com. Use the coupon code GETPAID, and all you're going to be asked for $6.97 investment. It's not going to say anything about the second investment because it's totally on the honor system. Okay, theirmoneyyourprofit.com. Just use the coupon code GETPAID. I want to work with you together on this. Together, you and I are going to make this happen. I am totally confident. You can see the way I'm asking you to invest in this. Okay, and again, it's good for today and tomorrow. I guess I wrote that for this. I guess I can keep it up today and tomorrow. If you want to take advantage of this today and tomorrow, I previously said today and tomorrow. I previously said today, but let's make it today and tomorrow because when I made this slide up earlier, I put tomorrow, and so I'm going to go by what's written here. Okay, so today and tomorrow, and let's get started today. Don't make me wait. Don't make yourself wait. Let's do this. Get excited. Get involved with this. Okay, and do it with the mental and emotional piece involved that's kind of built in. Okay, that's it. I went 2 minutes overtime. I just squeezed an hour presentation into a fast track presentation. I really want everybody to take advantage of this if you find this all very interesting. So there you go. Glad to fill in.
Hey, thank you, Norman. That was Norman Hallett. He's filling in for the great Larry McMillan, and just unbelievable presentation. Really great offer. I put it in the chat box. So, I mean, this is a great opportunity for people that want some one-on-one with an incredible trader that has how many years of experience, Norman?
Don't tell anybody. It's going to be, I started, my first trade was in 1979. So that makes 45 years, 46 almost.
46 years trading experience, one-on-one. This is the type of deal to step up your game right here. Or if you're a newbie, you want to start off the right way. Incredible. Thank you, Norman.
Okay, and thank you. Thanks for having me.
Thanks for being here. We appreciate it. All right. Next, we have a former U.S. Navy fighter pilot and Top Gun graduate. Went from flying FA-18s to leading one of the largest options trading firms in the world. Talking about Matthew Whiz Buckley, founder of Top Gun Options. He's trained over 10,000 traders on how to navigate options markets with precision. Today, he'll introduce a high-performance investment opportunity that he believes is about to take off. Here to present from Supersonic to Psychedelic, Make America Healthy Again, please welcome Matthew Whiz Buckley.
Awesome, my brother. Appreciate it. Everybody got me loud and clear. Let me get a virtual thumbs up as we go into the last hour of trading here. Really excited to be here today. Really excited for this presentation because I'm going to blow you away, literally. I'm going to be talking about saving lives and making money. Now, folks, that is the ultimate win-win. Making money is great, right? But at the end of the day, man, and I'm not one to quote scripture too often, but what is it? It'll be easier for a camel to pass through the eye of a needle than a rich man to enter the kingdom of heaven. So let's go ahead and get airborne because this one's going to be interesting. How many of you started today? How many of you woke up today and showed some gratitude? Right? Well, clearly you woke up today if you're in this brief. How many of you said thanks? I don't care who or what you said thanks to, but how about to something, right? If you're sitting here right now, you have some sort of computer, and unless you're out in the middle of the Amazon, you have a roof over your head, right? So folks, showing some gratitude. Sandra, I'm glad you did. I did too. I woke up this morning, brushed my teeth, washed my face, and I went right back and sat there and I meditated for about 20 minutes, right? Then what did I do? Well, I took my microdose. We can talk about that. That's a separate issue. And then I went to yoga. I did a 60-minute hot fusion flow. And ladies and gentlemen, trust me, 5 years ago, Whiz, as a meat-eating, knuckle-dragging fighter pilot, if I saw me doing yoga, I would have kicked my own ass, right? I mean, just that's not even something that I thought I would be doing in my life. And then what happened? I was ready to trade. I was ready for the day. I was ready for anything that was thrown at me. Why? Because folks, I've been doing this 35, let's just say over 3 decades. I placed my first trade in Naval Air Station Key West, Florida in 1991, right? I can tell you after decades of doing this and being a instructor in this and helping run a multi-billion-dollar options trading firm, 90% of trading is emotional. If you can get your emotions in check, you can profit. So we're going to talk about a couple things today. My mission objective by the end of this brief is to show you why this sector is about to explode. And I think I probably need to update that slide with is exploding, especially after the election. And it might just save the world. How you can profit while also helping to save and change the lives of others and maybe yourself. Everything we're going to talk about today is talking about saving, changing, but also making the money. Okay, real quick, you heard a little bit about my bio. My name is Matthew Buckley. My call sign is Whiz. I earned that call sign flying the F-18 Hornet for the United States Navy for about 15 years. I graduated from the Navy Fighter Weapons School, which that's a lot of words for Top Gun, where I was an adversary pilot. I was a bad guy, right? We have to train our good guys and girls before they go over and face the enemy. Well, we have to have some bad guys, and I was one of them. I flew enemy aircraft, painted and flew their tactics and tried to kill as many Amerikanskis as I could before dying for the motherland. I deployed for Operation Southern Watch, flying combat sorties over southern Iraq off the Abraham Lincoln and the Kitty Hawk, and then also deployed and got mobilized for Noble Eagle and Enduring Freedom. What's this have to do with investing? Well, everything. You don't join the Navy to get rich, folks, clearly. You don't join the Navy to make money. You join the Navy to serve your country, defend freedom, take out bad guys, and save the world. Well, since I knew I wasn't going to make a career out of the military and I wasn't going to rich, I started trading, like I said. Commissioned in 1991, went down to Naval Air Station Key West and said, you know what? I need to make some money on the side. So I bought, what was it? The USAA Aggressive Growth Mutual Fund. And I remember, seeing my statement each month, putting the $50 in or whatever that was a lot of money for me. And I'm like, why am I getting charged all these fees? Somebody's like picking stocks for me. I can pick my own stocks. So that's really when I started investing on my own. But as a young fighter pilot, I figured out something, that trading is a form of combat, right? Somebody's going to win in a trade and somebody's going to lose. So why wouldn't you use the same methodologies and procedures that I was using flying a fighter jet to trading? Having a strategy, implementing tactics that support the strategy, contingency planning, right? Knowing when to get out of a good or bad situation before it got any worse. Managing risk. Now, some of you are sitting there going, yeah, okay, this guy's going to give me a brief on risk management. He's inverted over Nevada in that picture, and he lands on carriers. Doesn't get any riskier than that. Precisely. As a fighter pilot, as an options trader, I want to minimize or eliminate all known risks, right? That stuff's dangerous enough without being stupid. So I applied that to my trading and it worked with incredible results. Why? Because I popped up on the radar of one of the largest volatility options trading firms headquartered right there. That's my firm in the Chicago Board of Trade. If you've seen Batman or any other of those type of movies, you know that building. That's the CBOT, Chicago Board of Trade. That's our trading floor. I helped build a hedge fund when I was there. I helped build the retail brokerage some of you might have traded at called Options House. And I just had an absolute blast. Managing director of strategy, and then founded my own underneath that umbrella. It was called the Options News Network, the CNBC for options, essentially. We'd shoot on the floor of the CBOE and the CBOT and give folks like you a behind the scenes look at what was going on in the options market. And I jokingly tell people I felt like Valentine, right? Eddie Murphy in Trading Places, just some guy off the street, some lowly old retail trader. But guess what? I showed the smart money exactly what was up, man. Wrote a couple books from sea level to sea level. And then how do I know to destroy the smart money? Because of that. I wrote a book about it, COVID Crash, From Panic to Profit. I had a deep throat in the White House. A close buddy of mine was in the White House in December of 2019. He told me, he's like, Whiz, we are freaking out. What's up, man? He's like, there's a level 4 lab in Wuhan, China, the only level 4 weapons facility in China. They are digging up the highways around that city, building mobile crematoriums, and they are going apeshit. And we think it's coming here. Guess what happened? Guess what I did? I did outsider trading. Unlike some US senators who got classified briefs and went to a microphone and said, everybody relax, not coming here, everything's fine, and then picked up their phone and called their brokers and their best friends and got out of the market. I did outsider trading at Top Gun Options. We made $2.5 million in 2 weeks as the market imploded. Do you remember that? Do you remember the guys, the legendary investors, right? Or the smart money, up next, Kyle Bass. Remember these guys crying? We need to close the markets and just, no, buddy. I'm on the other side of your bullish trades. I pounded the market into the dirt. Donald Trump, remember this? Stock market looking good here. I'd be a buyer of stocks. The next day that at the open, the market was down 3,000 points. I made 75 grand on S&P 500 puts. Wrote a book about it, folks. Why am I rambling about this? Because there is no such thing as the smart money. We are the smart money. Those people are idiots, most of them. Also have one of the highest ranked podcasts in the world, which is a good segue to what we're going to talk about right now. Ranked in the top 2.5% of podcasts in the world. It's called the Max Afterburner Podcast. What do we talk about? This stuff. Ladies and gentlemen, I'm the chairman and the founder of the No Fallen Heroes Foundation. We are a 501c3 dedicated to saving and changing the lives of veterans, first responders, and our family members. What's this have to do with investing? Everything. Buckle up. how or why did I start the No Fallen Heroes Foundation? Okay. Well, so pretty tough childhood, right? You know, a lot of people have tough childhoods. I was sexually abused as a child, one of 6 Irish Catholic kids from South Jersey, South Philadelphia. And my middle sister on the left right there, Monica, was killed by a drunk driver when she was a freshman at Villanova University. Just an absolute hand grenade it destroyed our family. My parents were done. They checked out, and it was a very, very tough struggle. My dad died years later after Monica died. And I'm convinced he died of a broken heart. So a lot of trauma, right? And then when you join the Navy, it's not like you put away your childhood trauma, right? You actually add to it. In 15 years of flying the F-18 Hornet, I lost 16 brothers and sisters. Not a single combat loss. Not one. 16. How? Bad weather, stupidity, G-lock, which means G loss of consciousness, mechanical issues, and a whole host of those issues in the same but different order. A lot of trauma. Along the way, I lost 4 F-18 brothers to suicide, including my best friend, Captain Eric Swenlin, who was a Marine fighter pilot, 5 kids and a beautiful bride, and he decided to check out. He was a groomsman in my wedding. So, tough. And then what happened? Well, my first and last day at work at American Airlines, right? I'm going to go be a rich airline pilot the morning of 9/11. So there goes, you're going to be a rich airline pilot, Whiz. So I went to Wall Street, as I told you. And I'm going to be honest with you folks, going from a fighter squadron where you trust the women and men in that organization with your life, or they're not in that organization for long, to a Wall Street firm where I couldn't trust somebody to watch my wallet when I went to the bathroom for 5 minutes. These people are awful. A lot of the people I knew who they pushed their own mother in front of a bus for $1. That's not who I was. That led to a lot of drinking. That led to a lot of drugs, unfortunately, to numb all of that pain. So couple all of that with the fact that 22 to 44 veterans take their lives every day. I said in 2020, when I made $2.5 million in 2 weeks, you know, I like having a house and taking care of the kids' college funds, but I looked at my bride and I said, you know what, we need to do something about veteran suicide. So I started that foundation. And how do you keep a veteran from killing themselves? I was racking my brain. I'm like, what do we do? Help them pay the rent, buy a suit, help them write a resume? I was clueless. And around that time, a buddy of mine said, hey, there's a group of guys, Navy SEALs, Special Forces guys that go to Mexico and they do psychedelic assisted therapy to heal their trauma. And there's a really cool group going in a couple weeks. Would you like to go? And I said, go to Mexico and do drugs with Navy SEALs? It sounds like a great weekend, man. Sign me up for it. I had absolutely no idea what I was in for. How many of you have ever seen the movie Lone Survivor or read the book? The book is just absolutely, you know, it's yeah. So Marcus Luttrell, famous Navy SEAL, the lone survivor. So Marcus Luttrell, one of his Navy SEAL teammates, JJ. So that's Marcus right there, and that's a teammate of his, JJ. How many of you have ever heard of Black Rifle Coffee? So that's JT, Jared Taylor. He was a JTAC in the United States Air Force. A lot of combat experience and a lot of trauma. And then if you're an Iowa Hawkeye fan, this is Robert Gallery, All-American linebacker from Iowa. He just got inducted into the College Football Hall of Fame, as a matter of fact, and then played for the Raiders for about 8 years, I think. A lot of CTE, right? And then there's yours truly. We flew into San Diego And we all met each other. I didn't know these guys from a stranger on the street. And we drove in a caravan down to a facility in northern Mexico. Why? Because if you do what I'm about to tell you in the United States, you're a felon. If you do it an hour south of San Diego, it will save and change your life. So we went down to a place called the Mission Within. And I did a medicine called Ibogaine. Iboga, I-B-O-G-A. Iboga is the most powerful psychedelic on the planet. It's root bark from Gabon, Africa, from Central West Africa. Some people believe it's the tree of knowledge. And I had a 12 to 14 hour, without a doubt, the most spiritual experience of my life. I reconnected with my sister, I reconnected with my father, and I reconnected with my faith. After being abused as a child, a drunk driver, military trauma, I had lost my faith, man. I was gone. And I reconnected with what I use the word God, creator, source, universe, divine. Every one of these guys was completely healed. Robert was down for about a day and a half, man. The medicine had a lot of work to do with him. You should see the most recent podcast with Marcus and Robert. He is a completely different human being. Absolutely healed. You can listen to my Max Afterburner podcast, episode 7, if you want to get my full debrief about that medicine experience. Suffice. And real quick, folks, I was a drinker. I don't know if you can be a good drinker. I was a bad drinker. Up to a year after sitting with this medicine one time, I couldn't even look or smell. If I smelled alcohol, it made me dry heat. So I got home and I looked at my beautiful bride like I looked at her for the first time and I said, this is the way. This is how we're going to end veteran suicide. I renamed the foundation the No Fallen Heroes Foundation. So we give healing grants to veterans, first responders, and their families. Now, that's awesome, Whiz. What's this have to do with trading and investing? Everything. Venture capitalists are in this space and starting to wake up. Wall Street is waking up. Anybody ever see the Showtime show Billions, right? Bobby Axelrod had a shaman and started investing in the space. Stevie Cohen, speaking of Bobby Axelrod, Billions is based on Steve Cohen. Stevie Cohen Capital, he's a billionaire, man. Steve Cohen is huge in the psychedelic space. Blake Mycoskie, who owns Tom's Shoes, 100 million. Folks, this sector is exploding. This is the only sector you need to be focusing on right now, folks. There's a great, if you're completely confused about this, Whiz, psychedelics are bad. Richard Nixon did a great job with the war on drugs, making hippies into felons. Absolute horror for this country. What an absolute disgrace, Richard Nixon. Well, African Americans use marijuana and they're all criminals. And these hippies who don't want to go to Vietnam and kill somebody they've never met before are subversive. So those magic mushrooms they're doing are, they make you jump off a roof and now it's a felony. Wrong. Absolute lies. You can binge watch this in a night. It's 4 episodes. It's called How to Change Your Mind. Michael Pollan, great investigative reporter, wrote a book. The book's obviously better than the series, but you could watch this tonight. How to Change Your Mind. I strongly recommend. Now, folks, let me give you a quick warning. It is the Wild West right now. I'm going to show you the current publicly traded psychedelic companies. And we're going to talk about some infrastructure plays underneath these publicly traded psychedelic companies. But I'm going to warn you right now. This is the internet 1999, right? There's a Netscape and there's a pets.com and there's an Amazon and there's a Google. You buy the right two, you're filthy rich. You buy the wrong two and you're going to lose money. Okay, so warning. We're going to treat these right now as biotech stocks. These psychedelic companies are burning through cash doing phase 1, phase 2. That's what happens in the space, folks, is this. You burn through a lot of cash hoping for some big wins. But like I said, we're going to talk about plays underneath those names, infrastructure. Folks, you're not going to be able to do a 6-hour psilocybin journey in your general practitioner's office. You're not going to be able to, what are you going to sit on the examining table with wax paper and a National Geographic from 1980 on the table? No. So I am actually in a REIT. It's called Healing Realty Trust, where we are buying up properties around hospitals and VA centers, rebuilding these facilities to be ready for this boom that is occurring. I'm going to show you some publicly traded names where you could get into, since my REIT right now is private. Big Pharma. Let's talk about the elephant in the room. Does anybody in this room think that the CEO of Pfizer, Moderna, Johnson & Johnson, or Eli Lilly is going to let some little psychedelic company launch a product like MM120? We're going to talk about a stock called MindMed. The results are they're actually unbelievable, right? Because we're used to crap. We're used to big pharma. Big folks, there's no money in healing, right? Big pharma wants you hooked for the rest of your life. They ain't curing anything. These medicines have the potential to cure the underlying, so you don't need big pharma. Ladies and gentlemen, Marcus Luttrell was on 15 medications. Whiz, 5 to wake up, 5 for lunch, 5 to go to bed, my brother. He hasn't taken a single medication in 4 years. Let that sink in. So why am I rambling about this, folks? Because and I'm furious that this is going to happen. I guarantee you this will happen. When all these companies go through their phase 3 trials and everything's looking good and the FDA is getting close, they're going to scoop in and buy them. You're going to see, if you don't listen to me today, one day you're going to look at CNBC and it's going to, breaking news, MindMed is up 9,000% today on being acquired by Eli Lilly. I'm going to hate that and I'm going to love it. Why am I going to hate it? Because it's going to suck. Big pharma, they're either going to buy these things and put them on the shelf, or they're going to buy them and charge obscene amounts of money. So I'm going to hate it. Why are you going to love it? Because I'm invested in all these names and I want that to happen. So I'm torn. I'm a little bipolar right now. I'm Whiz from the heart, and then I'm Gordon Gekko. So as Whiz, I don't want it to happen, but as Gordon Gekko teaching you how to make money, I'm counting on it to happen, right? And it's funny, Psychedelic Science out in Denver a year and a half ago, 15,000 people. Rick Perry, former governor of Texas, former Republican presidential candidate, he stole my line. Rick Perry on the opening day in the big keynote center, 8,000 people packed in that room and everybody else watching on TVs. Hell, I'm Rick Perry. When I was running for president years ago, if I heard me on stage advocating for psychedelic therapy, I would have kicked my own ass. I'm like, dude, that's my line. So Republican governors there, the governor of Colorado, a Democrat, Aaron Rodgers was there, movie stars, veterans. That entire convention was people in this space, all arrows aligned in the same direction, wanting to heal people using these medicines. Okay, it was absolutely incredible. This was a God moment for me, giving a speech to thousands of veterans and first responders, and you can see this full speech on my Instagram account, and I watch this and it brings tears to my eyes, folks. So the psychedelic sector is absolutely exploding. So we're going to start digging into some potential names. The names I like, and if you don't want to quote gamble on some individual names, there's a couple psychedelic ETFs. There are a basket of stocks. Okay, so here we go. Sit up straight and let's rock. I'm going to ripple through some of these names. You know what? Before I do that, I'm going to give you an incredible piece of gear right now. Where is it? Psychedelic drug pipeline. Where is it? 2025. Here you go. This is worth its weight in gold. Thank you for giving me this, Whiz. You're welcome. Let me copy, paste. This is a bullseye. Okay. Let me send this to everybody, entire audience, paste. So ladies and gentlemen, this is the psychedelic bullseye. Click on it and zoom in. Each corner of the pie has a different medicine. This is psilocybin, right? If you've ever heard the term magic mushrooms, that's the active ingredient in psilocybin. The closer you are to the bullseye, the closer you are to approval. Okay? So you're welcome for this incredible gift. Look up here. This is the medicine I did, ibogaine. Okay? We're going to talk about a tie in a second here. I would buy a tie with both hands. Period. I'm an investor, it's a private company, in Demorex. We are developing ibogaine minus the trip. Whiz, you got your ass kicked for 12 to 14 hours. That does not sound like something I would enjoy. I'll pass. Guess what? You can make it to the destination without the trip. That's what Demorex is working on. So you can take this and it will destroy, it's for AUD, alcohol use disorder. Private company, maybe we'll go public someday, but I prefer not to so we can get rich on our own. 5-MeO-DMT, what's over here on the left? I think it's ketamine. Most people have heard of ketamine and ketamine's down here. So that bullseye is worth your weight in gold. Okay, so before I forget, I wanted to give that to you. You're welcome. Here we go. The first, I just told you, a tie. A-T-A-I. Buy a tie with both hands. Ladies and gentlemen, look at a tie. What happened right here? Why did a tie pop right there? You don't have to type it. I'll say it. Election. Beginning of November, the psychedelic names started going up and the pharmaceutical names started getting hammered. Why? Maha. Love or hate Donald Trump, love or hate Robert Kennedy, I don't care. They're trying to make America healthy again. Robert F. Kennedy, it is a beautiful, absolutely beautiful video that I'm going to share with you. Robert F. Kennedy, when he was a Democrat presidential candidate, was asked about psychedelics. I'm going to just give you this clip. Don't watch it now because you have to listen to me, but where's my Robert Kennedy clip? Because it'll make you tear up a little bit here. I'll just give you the executive summary here. He said, I'm a heroin addict. I was, there it is. I was a heroin addict and an alcoholic. So when I heard about psychedelics, I'm not going to read the words for you. My initial bias about psychedelics is no. Are you crazy? I'm a heroin addict. I'm an alcoholic. Then his wife took her life in 2012. And he said, one of my sons was gone. I thought he was next. He could not handle the death of his mother. One of his friends took him to Peru and they did psychedelic assisted therapy. He said, when he got off the plane and I saw my son for the first time, I knew I got him back. So this guy went from being the most anti-psychedelic to the most pro-psychedelic. Also on my Instagram, you will see J.D. Vance, the current vice president of the United States, sitting with Joe Rogan. And Joe Rogan giving the future vice president a lecture about psychedelic assisted therapy healing veterans. And what did the future vice president say? Wow, I didn't even know about this. Why aren't we doing this? Why aren't we looking into it? And then somewhere on here is a clip of the current Secretary of Defense, Pete Hegseth, talking to Sean Ryan, who's got a great podcast saying, I've never done it, but I hear it works for a lot of guys. And Sean Ryan telling him, I did it. So Sean Ryan went to the exact same place I did in Mexico, and it saved and changed his life. So you can see this pop in the psychedelic names because of the election. Now, a little profit taking and stuff. And then look at this. Rip your face off rally. Right around here, I told my investors to double up. I said double up in a tie because I knew something was going on. 80% return in 2 weeks. Now it's sold off a little bit and it's getting back down to where it has been its resting heart rate. Folks, it's $1.60 or whatever. Years ago, when it had a ton of, this was what, 2022, when it came out, $17 stock. But this is when, the initial stuff, money plowed into psychedelics, and then under the crappy economy, in my opinion, that we saw for a little bit, the money flowed out. Okay. So I absolutely would mortgage the house, the wife and kids, and buy a tie with both hands. The next one is MindMed, MNMD. Similar pops, folks, right? There's the election pop. If you bought MindMed going into the election, you could have made 53% or 65%. Same recent pop with that. MNMD. I'm running out of time, but I can't dig into all the drugs not drugs. I call them medicine, but they call them drugs. MindMed, folks, has essentially a cure for generalized anxiety disorder. It is absolutely insane. Let me see if I can find that super quick right now. Where is it? MNMD. MNMD. There it is, I think. Yeah. Let me open this real quick so I can show you. This is an Oppenheimer report, folks. This ain't a Whiz report. This is Oppenheimer. Hey, when they came out with the report, $4.92, their 12 to 18 month price target on MindMed is $25. Google it and read it on your own. MM120, 12-week results are insane. A single dose of their MM120 has cured, I think the number's 80%. 80% of the people with GAD, generalized anxiety disorder, folks. Where is it? It's in here somewhere. That's obscene. 80% single dose, ladies and gentlemen. This isn't, oh, well, come back for your refill, folks. Refill. This is one and done. When that report came out, it was $4.92, and they said it's a $25 stock minimum. I think that's wrong. That's a $50 to $100 stock easily. It's $6.72 right now, folks. I would buy it with both hands. I'm an options trader. Obviously, I run Top Gun Options. My personal SOP is I don't trade options on stocks under 10 bucks. Why? That's the option. I buy the shares, right? But you could, if you don't feel like buying the shares, go out as far in time as you can. For example, all the way out to Jan of 2027 and buy some upside calls, right? These are pretty cheap, $1.60. Go buy some calls, man, and put them in your cabinet and forget about them. These would be like some good lottery tickets. Buy 10 of the Jan 27 20 calls, $1,700. If Pfizer comes out of the blue and buys this entire company, those calls will be priceless. Okay, so if you don't want to buy 1,000 shares and put them in your drawer, go look at the options. Same thing. Let's go look back at a tie real quick. These don't go out as far. I wish they had longer dated options in some of these names because I'd buy them with both hands. I mean, look at, buy some, there's some nice open interest in those strikes. Let me keep rattling off these names here. So I told you MindMed, a tie, and the last one I really like is called Cybin, right? This is the one that Stevie Cohen's in, from Billions. $8 stock, folks. Same. Go look out to the options. There's a lot of open interest down here at the 20 strike, man. Wow, that would be a big move in the name, or even in some of these names. Okay. Well, Whiz, I don't want to try and pick some random winners. What can I do? PSIL, SIL, like psilocybin. That's the Advisor Shares Psychedelic ETF, folks. Look at that 6-month chart from 7 to 50. That's a 50% return in this ETF, SIL, PSIL, the psychedelic ETF, folks. That's a no-brainer. I would go buy SIL. You can do it on your own, or I'll do it real quick. PSIL Holdings. Just go look at the Advisor Shares webpage. You can go see what names are in this. Click on Holdings. There you go. It's got MindMed. It's got a tie. There's some Cybin down there, and it's got some other ones. I like GHRS. I like GH Research, but there's other names in here as well. So you could buy a basket of psychedelic stocks instead of just trying to pick some winners. Does that make sense? And again, I don't want to run out of time. Let me give you the infrastructure plays. AHR, American Healthcare Realty. It IPO'd this time last year, last February. In 1 year, it is up 123%. Folks, they are copying and pasting what I'm doing in my REIT. It's called Healing Realty Trust. So here's AHR, folks. Sorry, the screen was paused. AHR, American Healthcare REIT. They copied what we're doing, but our REIT is private right now. Okay, maybe we'll go public someday. I don't want to go public because I don't like dealing with shareholders. I like dealing with us and printing money. But folks, this name is doing what we're doing, buying up stuff because the infrastructure doesn't exist. You have got to do these medicines in a, for example, when not if MDMA gets approved for therapeutic use after getting the punt in August from a bunch of people tied to Farmer. That's strange, isn't it? It's got to be in a nice room with a bed and a couch and 2 chairs for the people that are, facilitating. And then there's got to be a separate bathroom. None of this infrastructure exists, folks. So you would be on the leading edge of this. Oh, and by the way, if you bought these shares, nice 3% dividend. But let me do you one better. There's another name that's established called Sabra, SBRA. It's a healthcare REIT doing what we're doing. But look at this. 7% dividend for Sabra. It's a healthcare REIT that's moving into this healing space that we're in. They're trying to copy us. 7%? Are you kidding me, Whiz? Yeah, exactly. Very, very stable, cash flow positive company, folks. It is a name you absolutely want to be in. It's moving gently up and to the right, and it has a little bit more options activity than those other names. Isn't this awesome, ladies and gentlemen? So not only have I showed you a bunch of names that could potentially make you money, you're helping people, right? I just got back from a retreat in Oregon. My mission objective, folks, has been to heal our heroes at home. It infuriates me that for the past couple of years, I'd have to jump on a plane to go to Costa Rica or drive south to Mexico. These people incurred trauma serving this country, and you're forcing them to go overseas. Are you kidding me? But thank you to the voters in Colorado and Oregon. We are doing our medicine retreats here in the great United States of America. Let's get airborne, man. I'm not going to bore you with all the stuff. Go on Trustpilot, go on Facebook. We're a 5-star company. We are a tight-knit squadron, man. Real quick, had the smart money been doing? Who wants to be in a hedge fund? Oh, I'm at a cocktail party and I hear people say I'm in a hedge fund. Hedge funds suck. Look at the average hedge fund performance for the past 5 years. 10, 11, 10, -8, 9. Is that good? Do you think those are good returns? How about my account from last year? There's my personal brokerage account, 8465. The Dow was up 10, the NASDAQ, wow, 38% out of the NASDAQ, 20% out of the S&P 500. Sucks. There's my brokerage account. You get to see my personal account, and it was up 100. And when did my account really start crushing everybody? When the market got volatile, because I'm an options trader and I love volatility, okay? So if you don't know how to trade options, I'm going to teach you. Those were some of my portfolios. They're not up to date. That's from last month. AR, this is where we trade our psychedelic names currently in the accelerated retirement portfolio, because these are definitely some potentially retirement like returns and stocks. We do a live trade brief every 10 a.m. Eastern. We have an app. You join Top Gun Options, you get an app, and you get instantaneous alerts whenever I open a new position, whenever I close a position. And for the older folks in the room that don't like apps, I'm old and stodgy and I need an email alert. All right, I'll do one of those too. And you get access to our online forum. It's called the Ready Room. It's also on your phone if you want it, on the app or on the website. You have a question for me in between briefs or want to shoot the shit, get in the Ready Room. So what am I going to do right now is I'm going to just give you access to, let me just do that. Instead of giving you the just AR, let me just give you access to our accelerated retirement portfolio. This is a funny enough analogy. This is the gateway drug. Okay. Underneath trade groups, let's go to accelerated retirement. It's only $96 a month, but I'll give you a nice little discount. I think it's 2 months included if you do an annual. Yeah, do the annual, folks. It's $960 a year. But you know what, Whiz? 45-minute brief. I can't tell if you're a complete idiot yet. So let me try it out. Try it out for a couple months. It doesn't mysteriously go up next month to $1 million. It's $96 a month for the rest of your life. That's kind of stupid though. As a businessman, I'd love you to stay in there forever, monthly, but no, upgrade into the annual, man, and do that. So folks, you're going to get access to that live trade brief every Wednesday at 10. We're going to give you 6 options basic training sessions. They're recorded by me. They're current. I go through everything from, hey, this is a call, this is a put, up to this is an iron condor, and all sorts of stuff. You're also going to get 3 skill-based manuals. You ready for this? If you tried to buy the manuals today, they're $197. Wait a minute, you're giving, wait, they're included? Yeah, you just made $100, folks, $101 you get to keep in your pocket because I'm going to throw the manuals in, okay? Let me give you the link to this. $96 a month, folks. I don't drink anymore, but I used to say that's a cheap bottle of wine. Well, hell, here in South Florida, that's not even, that's a glass of wine. But folks, for a cheap bottle of wine, and I used to love an expensive bottle of wine, you can get airborne in what's called accelerated retirement, where we trade these psychedelic stocks. Okay, folks, I can be completely wrong. RFK, Trump, Vance, Pete Hegseth could be like, you know what? We hate psychedelics. It's still going to happen. When the Wall Street, on the cover of the Wall Street Journal is talking about microdosing and female CEOs, or it's the new glass of wine, folks, and you've probably heard this starting to seep into the consciousness. I love my hippie brothers and sisters, but the first psychedelic revolution around the Vietnam War, Timothy O'Leary, right, from Harvard, we need to put this in the water. That probably wasn't the right approach with the American public at the time. This psychedelic revolution, ladies and gentlemen, is being led by veterans and first responders and their family members. I don't think I'm anybody special. Marcus Luttrell would tell you he's not anybody special, but maybe the average American walking down the street hearing that Navy SEALs, fighter pilots, first responders are healing with these medicines, maybe they'll sit up straight and go, huh, maybe there's something to this, okay? I've been to DC, I've been advocating for this stuff, and let me leave you with this. This one congressman said, Whiz, behind closed doors, Whiz, I love what you're doing, but you're gonna have a problem with the big pharma and the alcohol and tobacco folks. And I looked at the guy, I'm like, isn't that your job? So this is a we the people moment. Lead, follower, get out of the way. I will bulldoze all over all of those people. And one more time, I hope this doesn't happen, but I'm pretty damn sure one day you're gonna wake up and you're gonna see breaking news, MindMed has been acquired by Eli Lilly and the stock's up, you know, a couple 100%. Don't let this opportunity pass you by, okay? I guarantee you this stuff is saving and changing lives. It saved and changed my life. If you're interested, even if you don't sign up today or whatever, you can go to nofallenheroes.com. That's our foundation's website. You can learn more about our mission, our healing mission, and obviously listen to the Max Afterburner podcast. My Max Afterburner podcast, I have a ton of veterans on, and we debrief our medicine experiences, okay? All right, I got him back on time because the other guy, Norm, went a little late, but I'm a fighter pilot. I'm gonna put a bomb through the window on time, on target. So thank you for having me. Have a great rest of your day. Fights on, namaste, and basi basi. Thanks for having me.
Namaste. Thank you so much, Whiz. That was incredible, as usual. Your insights into high growth investment opportunities are eye-opening. Our final speaker today is David Wyse of Breakouts Trading, a professional options trader with a verified track record of 90+% win rate. He's one of the most respected traders in the industry, and today he's going to show you how to trade with greater precision using Heiken-Ashi candles. Welcome to Traders Corner, David. Glad you're here.
Thanks, Anthony. Thank you very much. Appreciate the invite to come in here this afternoon. And again, appreciate your opportunity to come and chat with everybody. Welcome, everybody. Again, my name is Dave Wyse, and I have a trading room for trading options and an alert service for trading options. We use what's called SPY Super System software, which is a piece of software that I'm going to show you to help us identify institutional trading. And that's how we follow. That's how we find high probability trade setups. We follow what the institutions are doing. So again, we'll go ahead and get started. I know it's kind of been a long day for everybody. All right. So again, I'll do the disclaimer here. All signals and trading opportunities we provide are for educational and demonstration purposes only. Trading is very risky. So you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, just briefly about, by the way, if you have any questions, just put them in the question box. I'll leave it open so I can answer them as we go along. If you have any questions I can't answer, you can just put your name and phone number in the chat box or in the question box, or your Skype username, and Rory from Right Line will follow up with you and answer any questions I can't. All right. All right. So again, my name is Dave. I've been trading professionally for 15 years, mostly options. I do trade some stocks, but mostly options. And just a quick story to get started. I get asked all the time, and I don't like to. I'm not going to talk about myself. Is what the whole point of my room and for the alert service is not to emphasize how much money I make. It's to meant to help people become consistently profitable traders. That's what this is meant to do. To help you become consistently profitable, get away from all these big swings. So, but I get questions as to how I became a full-time professional trader. I was working in IT for quite a few years, and I was working for a company here in Charleston, where I live, Charleston, South Carolina, for a cloud company. We had shared servers. We had servers. We had companies from all around the country would access those servers, and we would maintain them for them. And I got laid off about 2 weeks before Christmas 15 years ago by my boss. He was a friend of mine, but he had some financial difficulties at the time. So I got laid off 2 weeks before Christmas, and I had been trading part-time, and decided this was probably a good opportunity to switch over to full-time. It was the holidays. I wasn't going to look for another job right then. And so I started trading full-time and working from home, of course, and had a pretty good December. Nothing great. The holidays are fairly slow. January had a really bang-up month trading options. First couple of weeks in February had another really good 2 weeks. And at that point in time, my boss, like you said, he was a friend of mine. He called me and said that he'd gotten his financial situation under control, and he'd like me to come back to work, and could I come back and start on Monday? And I was polite and told him I appreciated the opportunity to come back, but as it stood right now, I couldn't financially afford to come back to work for him. The trading was going too good, and that's how I got started. It was kind of a mistake, or just kind of got pushed into it. Most traders that I know who are full-time traders, professional full-time traders, they start part-time, and then they hit specific benchmarks that they look for before they switch over to being full-time. But I get pushed into it, but it worked out very, very well. So anyway, that's enough about me. All right, so this is kind of a graphic of the SPY Super System, what it looks like. I run the SPY Super System, the software, on Thinkorswim, the platform Thinkorswim. You don't have to trade on Thinkorswim. I don't trade on Thinkorswim, but it looks like this, and we'll get to see some details about this, and it does track institutional money flow. Now I'm going to talk about my room and the alert service that I have, as well as our results, but I'm also going to spend some time on Heiken-Ashi candles. And if you're not familiar with Heiken-Ashi candles, or you haven't used them, I think you'll find this very interesting. It really does help my trading. It helped my trading a lot. I think it will help your trading a lot to use these. And we'll go into some detail about how what they look like, how they're constructed, and how you use them in your trading. All right. So again, this is just kind of a graphic on the alert service. It comes to your phone. If you're not in the room, or you're a member of the alert service, it'll come to your phone. They come pretty quickly. I'm on the alert service, so I can track that. The alerts take about 10 seconds to get to your phone from the time I release them. Okay. The first thing I always talk about in the webinars I do is what drives the market. When you look at a market, what's driving the market up? What's driving the market down? What's causing the market to chop around so much? And the market's made up of retail traders such as myself, and most likely everybody here, which are these little marbles. We're the little marbles, and we as individuals, we can't move the market. No matter what we do, retail traders don't move the market. So if the retail traders are in trading, and the institutions are not in there with any kind of force, then you're going to get a lot of chop and a lot of chaos in the market. It's just going to chop around. It's going to be very difficult to take any money. And I'm sure you've seen many days like this where you get into a trade, you get in, get out, get in, get out. You're basically getting chopped up because there is no trend that you can follow. These are the institutions. Institutions are made up of companies such as Goldman Sachs, JP Morgan Chase, Wells Fargo, all the big investment banks who have trade desks where they trade and invest, but they have most of their trading is done through algos. About 85% of the trades out of there come through algos or computer programs that put trades in. And they have lots and lots of different algos, computer programs that are looking for specific things in the market that they trade off of. Some of them trade off of news. If you've ever watched a jobs report come out, or the FOMC, the Fed, when they released their statement on interest rates, you may notice if you watch the market closely that you'll get this big huge spike or this big huge drop in prices within milliseconds of that coming out. It's 2 o'clock in 1 second and the market is flying around. Those are not people that are pressing mice to move that market. Those are algos that are reading the news and creating trades off of that. And they also create trades off of strategies that retail traders use. If you ever use the MACD crossover to make a trade, or using the RSI for overbought or oversold, the algos know that, and they actually write programs to bust those kind of trades. So it's important that we can identify when the institutions are working, and enough of them are pushing a trade in one direction or the other. Now the institutions, besides investment banks, you have to think about who else makes up this, and it's made up of pension funds, huge pension funds for state workers, firemen, policemen, any particular group that has a fund as a pension. They have billions of dollars to invest and trade, and hedge funds as well. Hedge funds have obviously billions of dollars of money to invest and trade, and they'll do the same thing. And the last group that makes up the institutions are the mutual funds, Vanguard, T. Rowe Price, the big mutual funds. So this is where the money is, and our job as retail traders is to try to, as close as we can, determine when the institutions are in the trades and when they're not. And we want to be in the trades when they are, and we don't want to be in the trades when they're not in the trade. So this whole SPY super system and the methodology I use, this is what we're trying, this is what we key on. If an institutional trade is not pushing the market or the stock, then we don't want to be there, because it's being done by retail traders and you're likely to get chopped to bits. All right, so we're very cautious and we're very patient because you have to wait for these setups. All right, so that's what makes up the market. Now, I have a couple of rules to trade by in the room and on the alert service. Pretty simple. Trade the best and skip the rest. We only look for high probability trades based on the technicals on that, and skip the rest. And this is important. This is where you make more money than here. If you can skip bad trades, it's going to help your account a lot better than taking good trades, because if you can skip the bad ones, that's going to cut your loss rate right down. Typically, my win rate is between about 85 and 90%. Month after month. You know, I get sometimes it'll slip down to 78 or 82, but typically 85 to 90%. And that's because we're only trading the very best trades. We're not taking mediocre trades. And the second rule that I go by is, or what we say in the room is, our objective is not to make trades. Our objective is to make money. Both of these rules are meant to have retail traders not be over trading. Over trading is one of the biggest detriments to being a consistently profitable trader, and it's very difficult to maintain patience. If you're a trader and you're sitting in front of your computer and market's been open for an hour and you haven't made a trade, you start looking for anything. I'm just looking for something that looks decent. I want to trade. I want to trade. So, but that goes against this. Your objective is not to make trades. Your objective is to make money. And this is how we trade the best and skip the rest, and how we try to do two things: maintain discipline. Once we've identified strategies that we know work 80, 85, 90% of the time, those are the strategies we want to work. We only want to trade those strategies. So that's maintaining discipline, not jumping from we're looking for strategies where the grass is always greener. What you see a lot of times is, and I know a lot of traders that do this, they'll go into a room, they'll trade for a couple of weeks, they'll make a little bit of money, they'll lose a little bit of money, and then they'll have a losing week. They'll have a week that goes against them. They immediately say, well, this doesn't work, I'm going somewhere else. So what they do for most of their trading career is go from room to room to room, trying to find something, the holy grail that's going to work most of the time. There isn't any such thing, and they end up just giving up or running out of money. So that's why once we know we have strategies that work, then you want to stick with those. And the second thing is to remain patient. And this is probably the hardest thing for retail traders to do, is to actually remain patient when they're in trying to trade. Because sitting there staring at your screen when the market's not doing anything can be very frustrating. But what you have to do is you've got to be looking. What I do during the day is I run scans and I look for stocks that have got relative strength to the market or relative weakness to the market, and then I watch the market and I look for some indications that the institutions are now coming into my stock or the market for a particular period of time. I've already got stocks laid out that I'd be interested in taking, and that gives me a little bit of a heads up. So that's where I spend my time. And of course, in the room, I have hundreds of people that are in there, and I get lots and lots of questions all day. And I talk to all the traders they may have a stock that they're looking at, so I'll bring up the charts. We'll discuss the technicals on the institutional information on that. We spend a lot of time doing that. A lot of education goes on in the room. The room, by the way, is open. I open about 9:15 in the morning, and I'm there till 4 o'clock in the afternoon. The market's open. The room is open all day, market open to market close. Okay. Now, as a profitable retail trader, we need an edge. Okay, this is our edges. We have the SPY Super System software that I'm going to show you. This is what tells us whether institutions are in trades or not. Then we trade relative strength and relative weakness. Now, I don't want you to think that this is RSI. This is not RSI. Relative strength and relative weakness is how is the stock that I'm looking at trading versus the SPY or the triple Qs, the SPY or the NASDAQ. If my stock has got stacking green candles and the SPY is going sideways or going down, then the stock's got relative strength and it's likely to outperform the market. And that means if the market starts to pull back, I'm not going to get as big a pullback as the market's getting, which means it protects me a lot better against the market drops than if I had one that was not. And vice versa on relative weakness. If you like stock short, you want to have stock that's underperforming the market. If the market's going down hard, going up hard, moving sideways and up, and you've got a stock that's dropping hard, then that has relative weakness. What you do is you wait for a setup on it, and then if the market turns negative and you've already got a nice short setup ready to get in, that's what you take. And then we want to trade with the market trend if there is one. We've had a lot of days with no market trend, a lot of chop. Today, gapped up, pulled back hard this morning, moved up around lunchtime, went sideways for a couple hours, and then plummeted toward the end of the day. So the market didn't really have a good pace to it, no trend to it. So there is no market trend. So we have to avoid the market trend and just look for stocks that are being moved by institutions. And the last one is to buy near support and sell near resistance. This is really, really important. Get you in very close to a support level or a resistance level, which means if the stock moves against you, your stop is going to be fairly close to where you got in, which means your losses are going to be limited. Okay, the compass system, which is actually now called the SPY Super System. This is the piece of software that identifies the highest probability trade setups, while sidestepping is the ones that look good, but they're going to fail more often than they succeed. What we're saying is, if a stock looks good technically, but the institutions aren't pushing it, I don't want to trade it. It does this identifying when institutions are driving the move and when they're not. And it also analyzes very complex trading data and displays results in an easily identifiable format. They're in colors, which I'll show you, which makes it very easy for even a novice trader to identify when institutions are in trades and when they're not. Okay, so again, this is how we get the edge. We're only taking trades that are being driven by institutions. We're taking trades that have relative strength or relative weakness versus the SPYs or the Qs, and we're trading in the direction of the overall market trend if there is one. If you're doing these three things right here, you're already ahead of about 95% of the retail traders in the market. Most retail traders have no idea what I'm talking about when I say relative strength or relative weakness. They know about RSI, that's what they immediately think RSI. They don't even understand this. They certainly don't know if the institutions are in the trades. You know, if you don't have like the SPY super system that I use to identify when institutions are in the trade, the only thing you really get to go by is price action and volume. And that isn't enough to tell you whether it's institutions and how many institutions are in there. What's the, you know, is there enough of an institutional impact on that particular stock right now? So that's what we've got. So this gives us an edge. Of course, we're only going to be trading stocks that are being supported by the institutions. We're going to be only trading stocks that are outperforming, at least when we take them on the SPYs or the Qs. And we're going to be trading stocks that are moving in the direction of the overall market, if there is a direction. All right, and this is just a kind of a high probability trade setup funnel that I go through. It's a checklist that I use mentally. The first thing I look at when I look at a stock that I may be interested in is I look at the daily chart. A lot of traders don't do this. Look at the daily chart first. If you have a bullish setup on the daily chart, now you can you can at least consider taking a long. If you don't have a bullish setup on daily chart, if you have a bearish setup, you shouldn't be taking that stock long. Then you go to the 5-minute chart and find a good entry on the stock to make sure that the daily and 5-minute chart are aligned in the direction that you want to trade. Again, we trade with the trend if there is one, the stock trend and the market trend. Then we look at the compass or the SPY super system indicators to see if the institutions are in there. They've got to be. If this isn't true, then I'm not going to take the trade. We go back after the next thing we look at is relative strength and relative weakness. And then we look to see if we're near support or near resistance. If all of these are true and I'm not near support or near resistance, usually I'll set an alert on my chart to tell me that I could take a look at that trade at a certain time, and your alert will tell me that. So when you get stocks that meet these criteria, and sometimes you're not going to have this trend is not going to be met, but everything else is met, you're going to have stocks that come out the bottom of your mental funnel, and then you're going to try to find the best one of those particular stocks. Right, so that's what we do. And this is just written out, the funnel method. Again, stock to be traded should have a daily and 5-minute chart aligned. This is really important. I can't tell you how many people will show me a chart and tell me they want to go long this chart. And I look at the daily chart and said, have you looked at the daily chart? Daily chart's bearish. Why would you want to take that bullish? You know, they're typically, those kinds of traders are trying to pick bottoms and pick tops. Very, very dangerous to try to do that. And then the SPY super system indicators must align in the direction of the trade. These are the two key things to take away from this. One of the things that also on a 5-minute chart that you should be aware of is an indicator called the VWAP, the volume weighted average price. This is something that all the institutions use. It's very critical. It's where they typically buy and sell. So if you're going to go long a stock, you want it above the VWAP on the 5-minute. If you're going to go short, you want to be below the VWAP on the 5-minute. The VWAP does not apply to daily charts, just to 5-minute, 3-minute, 2-minute charts, lower time frames. Okay, and have patience. All right, and inside the room, these are the strategies that we use. So if you're on the alert service or a member, these are the kind of trades that we'll be taking. Straight calls and puts, obviously that's just fairly common. We took a call today in ICE, ICE, the Intercontinental Exchange. We haven't been taking a lot of trades lately. Market's been very, very choppy. We do debit spreads using weekly options expiration. We do what's called time spreads over earnings. These are calendar spreads. These are non-directional trades that we're packed. What we're doing with time spreads is capturing the volatility crush that occurs once earnings comes out. For stocks that are going into earnings, like NVIDIA last night, the market makers jack up the premiums on the puts and the calls. It's called volatility, and they jack it up. And then when the earnings come out and they know which way the stock's going to go and about how much it's going to go up or down, then the volatility comes out of that. And what time spreads actually capture the volatility crush. I also do a strategy called weekly ATM to capture premium week after week. This is for stocks that are neutral to bullish, typically when the market's bullish, which right now it's just chopping around. So I haven't done very many of these. But what we do is we sell puts. We sell weekly puts against every week on at the money weekly puts to bring in premium. And we take a longer dated put at a lower strike price out in time to protect ourselves in case the market reverses. And then we also do credit spreads to capture premium over a few weeks. Whoops, let me just turn the sound off on my news feed here. Okay. Now, one of the things that we do, this is done in the room. There are no alerts on this. This is called the SPY super system for very high probability trades. We trade the SPY, the Qs, or the IWM, the indexes, and we trade them off of 5-minute charts using SPY super system methodology, which I'll show you. But these are only in the room, and you either need to be in the room to do these, or you have the software that would allow you to do these. And these things are extremely effective. We don't do an awful lot of regular swing type trades, but we can do quite a few of these SPY super system trades depending upon what kind of a market we have. And we'll go into some details on that. The alert service, again, is designed for day trades and short-term swing trades. Short-term swing trade is intraday. I mean, a short-term swing trade could be from 10 o'clock in the morning to 3 o'clock in the afternoon. Or it could be overnight out to about 3 weeks. Typically, they last a few days to a week, but it just depends on the market. They're designed for traders who can't watch the market all day. And the alerts are on the highest probability trade setups we can find. That's so you don't get a lot. You're going to get them when the market, when the stock is a high probability trade. That's the only ones we take. They're all not going to be winners. We still have about an 85 to 90% win rate, but that means you're still going to have 15 to 10 trades that will lose out of every 100. That's still about as high a win rate as I think that you're going to find. And again, with highest probability trades we find by identifying institutional involvement. This is really critical. We're looking for institutions in the trade. I also look at market internals, such as total volume when stocks going up minus the total volume when stocks going down. That gives me a plus or a minus number. It tells me whether the market is bullish or bearish. And then we do some detailed technical analysis. All right, this is an equity curve from the alert service. This is a little bit old from March 23. I need to do another one of these, but basically this is kind of what you're looking at. This was the results from March 23 to June of 24. This is assuming you put $2,000 into each trade. That's just a baseline I use. Obviously, not everybody does that, including me. Sometimes I'll put 1,000 in a trade. Sometimes I'll put 5,000 in a trade. Depends on what the market's doing that day. But this basically gives you an idea of the equity curve that we've got. All right, now we're going to talk right now. I want to go into Heiken-Ashi because I think probably there's a lot of people that came to hear about Heiken-Ashi candles here. So let me just open the question box, make sure I haven't missed anything. I don't think so. Okay. Okay, yep. We said, so we're going to talk about Heiken-Ashi candles. All right, and it's important to understand that they're different. And this is going to be trading Heiken-Ashi candles using the SPY super system, actually. And this is what we do in the trading room. This is just a miscellaneous chart. This happens to be an FX chart of British pound and Japanese yen. But what we're looking at here is candlesticks. These can be candlesticks for anything. Now, if you notice, these are called Heiken-Ashi candles. These are created differently than regular candles. When you've got candles that have flat tops like this, red candles with flat tops, these are bearish Heiken-Ashi candles. Bearish Heiken-Ashi candles, just flat top, flat top, flat top, flat top. You can see them coming down pretty hard here. Now, as we get closer to the bottom here, you start to see some wicks on these things. Green wicks with a doji, green wicks with a doji, and then you get flat bottoms. These are bullish Heiken-Ashi candles. When the bottom is flat, that's a bullish Heiken-Ashi candle. And you can see we had a couple here. Now, one thing it's important to note, I'm going to talk about Heiken-Ashi reversals because Heiken-Ashi reversals are very critical to trading because a Heiken-Ashi reversal will give you a confirmation of a reversal back into the original trend. And that's what you really want to trade. And you want to avoid as many failed breakouts or breakdowns as you can. So in this case, you've had these really big red candles coming down with flat tops. And then you had the reversal with the flat bottoms. Now these are bullish reversals, but they're much smaller than these candles. This is not enough force to really take a trade here. I mean, you could have and you would have made some money, but it isn't enough force. And you notice it goes up and then it reverses back down again. Here we have right here you see we have a wick and a tail followed by a flat top. That's a bearish Heiken-Ashi reversal right there. and this is a continuation to the downside. Now we start getting wicks and tails again. Here is a flat bullish candle right here, flat bottomed bullish candle, big candle. That's a big Heiken-Ashi reversal. This is the beginning of a bullish trend after this bearish trend. This is why we call it a Heiken-Ashi reversal. It's the Heiken-Ashi candle that's identifying a reversal in the trend. This is where you want to get in. You want to get in when the trend reverses like this, right? And you notice that we're going up, we keep getting flat bottom, flat bottom, flat bottom, flat bottom. You see how easy it is to see the trend here? Get a couple of wicks and tails, but it continues on up, and then it starts to break down right here. This is where you'd exit the trade, right here. Now, couple things to notice here is each Heiken-Ashi candle begins in the middle of the previous Heiken-Ashi candle. They always start in the middle because of the way they're constructed. They're made up of two candles. So you'll notice that every Heiken-Ashi candle starts in the middle of the previous candle, right? So that's just something interesting to know about them. All right, so we're going to talk. I'm going to just kind of briefly go through this. This is an analysis, something I did on Reddit quite a while ago about Heiken-Ashi candles. I've highlighted the stuff that I just kind of want to focus on, but when you get the video, you can go ahead and read through this whole thing. But if you've not used Heiken-Ashi candles in your technical analysis, I think you would be wise to do it and try them out. Heiken-Ashi candle, what it means average bar in Japanese. It's made up of two bars. It smooths out the price action as we just saw. So identifying trends and reversals is clearer since they eliminate a lot of the noise and make it easier to see trends and stay in the trade throughout the trend, allowing for improved profits. So you don't get shaken out as easily. Bullish Heiken-Ashi candles, as I've just said, have flat bottoms, and bearish Heiken-Ashi candles have flat tops, right? Bullish trends will have flat bottom candles, one right after the other, as we just saw. And bearish trends will have flat topped Heiken-Ashi candles, one right after the other. All right, so that's what the candles look like. Reversals in bullish trends will have flat bottomed Heiken-Ashi candles, right? Green candles, followed by smaller doji Heiken-Ashi candles, generally, having both wicks and tails, followed by a flat topped bearish Heiken-Ashi candle. That's called a Heiken-Ashi reversal. And that's what I look for when I'm trying to get into any kind of trade. Even a swing trade, I'm looking for a Heiken-Ashi reversal on the daily chart. For a fast type SPY super system trade where I'm trading the indexes, I look for Heiken-Ashi reversals on a 5-minute chart. All right, now, once you have a valid Heiken-Ashi reversal, the first thing that needs to be true is that the Heiken-Ashi candle height has to be at least as large, preferably larger than the prior candle, and I talked about that. And that's going to show you've got a valid Heiken-Ashi reversal situation. Okay, so we'll just kind of cover some high points of this. These evolved from Japanese candlesticks, which are regular candles. They combine open close data from the previous period with the open high low close data from the current period. That's how they're constructed. That's how they're actually made. This fusion minimizes market noise, providing a clearer depiction of the prevailing trend, as we just saw that. And Heiken translates to average, and Ashi to pace, average pace. Okay. We'll just zip through some of these. So again, a long hollow Heiken-Ashi candle indicates strong buying pressure, and absence of a lower shadow further underscores the strength of the buying pressure. Just to kind of cover on the Heiken-Ashi candles, if you're familiar with regular candlesticks, what you notice is when you have a bullish candle and you have a big wick on the top like this, that tends to tell you that's a little bit of weakness coming into that. Because on a regular candle, this was the buyers coming in, and this wick is sellers coming in, driving the price down. So it looks like it's weak. On Heiken-Ashi candles, that's not the case. Wicks on top of bullish Heiken-Ashi candles are even more bullish than without the wick on the top. All right, so that's important to understand. So yeah, the Heiken-Ashi candle signals strong pressure over 2 periods, and that 2 periods is important because when you get a Heiken-Ashi candle that's reversing, that's giving you a confirmation that reversal has occurred. If you were trying to do it with regular candles, you have to watch a couple of candles. Once you get a Heiken-Ashi reversal, that's telling you that the reversal has been confirmed by 2 candles, and so it makes it easier to identify. And again, here we have these flat bottom. Let's just go over this one more time. Flat bottom candles in an uptrend produce a strong visual of strength. You can see the flat bottom candles here. Green flat bottom candles. This is a bullish trend. Don't see that? No tails on these things. That's a bullish trend. And here's where it's starting to fail. You see we're getting wicks and tails, and then we get a flat top red candle. That's telling us that the trend is reversed. This is where you would get out. So it identifies when you can get out of the trend. All right, so you're going to have multi-green candles going up with flat bottoms. For bearish, you're going to have multi-flat top candles that are red that are coming down. And again, when you're taking any kind of trade, this isn't just Heiken-Ashi, but anytime you're taking a trade, it's important to examine where the nearest support and resistance levels are to the trade that you're taking, because you don't want to be getting into a trade like a bullish trade. If the stock is 20 cents below the 200-day moving average, you don't want to take that long because you've got too much close by resistance. So it's always important to understand where the support and resistance levels are, so you know that you've got a decent risk reward on the trade, right? Again, you want it to align with the current market trend if there is one. And again, choose a stock with relative strength and relative weakness. This is the same rules that we have for on any of the trades that we take. And again, what I do is after I enter the trade, when I'm thinking I'm going to get out of a trade, once I've been in the trade for a while and I think I want to exit it, I switched over to regular candles, because if I'm going to try to get out near the top, in other words, I want to get out when the market starts to reverse or when the stock starts to reverse. If I wait for the Heiken-Ashi reversal, then I'm going to lose a little bit more money than I should have if I get out sooner. So Heiken-Ashi reversals are perfect for entering trades because they give you a confirmation that the trend is reversed. But regular candles are better for you to use once you've decided you want to get out and take profits, so you don't wait for the two candles to do that. Okay. So that's the Heiken-Ashi candles, and I'm going to show you a few live charts on these things. Again, this is the advantage of Heiken-Ashi candles. They smooth out the price action, reducing noise. This is really important. A lot of traders will get shaken out of trades because they're watching a 1-minute chart or a 5-minute chart, and the stock is whipping up and whipping down, and they get all emotional, and they think the market's collapsing, and they get out of the trade. This will smooth out that price action. It makes identifying the trends easier. Obviously, it improves identifying confirmation of trends or trend reversals. And this trend reversal is really important because when you're trading a breakout off of a resistance or support level, you want to have that reversal confirmed. Otherwise, you're going to get a failed breakout, which is, it's costly. So again, the Heiken-Ashi candles will help you do that. And again, it helps identify potential exits when the candle bodies start to shrink or the reversals occur. All right. And this is just, I want to show you a couple of charts here. This is an old Uber chart. These are regular candles. So you can just see what Uber looks like here. This was a regular Uber chart. This is my TC2000 that I use, but this is an Uber chart. These are not Heiken-Ashi candles. These are regular candles. Switch over and note one thing to note. See this gap right here? These are Uber Heiken-Ashi candles, right? You see this reversal right here? See the top, these candles, these pink candles, by the way, I create in TC2000, and when they're pink as opposed to red, it means that there's a compression break going on. So I color them pink. When they're blue, it means there's a compression break going on to the bullish side. But here is your Heiken-Ashi reversal right here. Flat top, flat top, flat top, flat top, flat top. Doji, wicks and tails, flat bottom, good size flat bottom candle. That is a Heiken-Ashi reversal right there. And then you've got flat bottom, flat bottom, flat bottom, flat bottom, showing you the trend. Now notice, gap, no gaps. There's no gaps on Heiken-Ashi candles because it's made up of two candles. You're not gonna see gaps, right? So that's what they look like, right? So I'm going to right now. I'm going to go ahead and switch to my TC2000 charts, and I'm going to just look at some Heiken-Ashi candles from today on the dailies. I want to show you daily charts, and I'm gonna run a scan, and I'm going to go ahead and find some bullish and bearish ones. All right, so I'll just run a quick scan over here, off screen. Then I'll move TC2000 over here. I'll move this over here. Whoops. This is over there. I need to move this. Boop, boop, boop. All right. Bear with me just a second. Heiken-Ashi bearish reversals. And I'll pull that off screen so you don't have to see it. All right, so I'm just going to sort that by volume, and I'm going to show you some of the Heiken-Ashi reversals. These aren't necessarily ones I'm going to trade, but we're going to take a look at it. And I'm going to go ahead and switch to Heiken-Ashi, my Heiken-Ashi candles. And this is on a daily chart. And I'm just going to click on the ones that showed up. Okay, this is SMCI, right? So here's SMCI. This is the Heiken-Ashi candle chart in SMCI. You see, we had a flat top here. This is Heiken-Ashi reversal. This was a wick and a tail, and here's another Heiken-Ashi reversal on SMCI. That's the Heiken-Ashi chart. Here's the regular chart. You see how it's breaking down? Definitely a short setup right now in SMCI. Right, definitely a short setup. All right, so we switched. Look at another one here. American Airlines. There's the short setup. Now this is a Heiken-Ashi continuation. All right, this is a continuation. The stock price is heading down based on these flat top candles right here. So we've had this isn't really a reversal, but it is a continuation because we're Heiken-Ashi reversals bearish here, Heiken-Ashi candles bearish, and then compression, and then another breakdown. Right, so that's another one. So these are ones that I would be looking at for potential shorts for tomorrow. This is VTRS, likely had earnings. Yes, it did earnings. That's another big Heiken-Ashi candle. And we look at what the regular candles look like that. All right. So we'll see if anything sticks out. I got like 160 on the scan, so there's a lot. Gold is breaking down. Pfizer broke down today, even though it's been really strong. IWM, which is a Russell 2000. Look at this Russell 2000 chart, breaking down very hard, very hard. Very bearish day today in the market, as you can see. Let me look at these ugly, ugly candles today. All right, so that's what I do, and I'm just going to do ones for the longs. There probably won't be as many. This Peloton right there. So you can see how smooth this is coming down. All right, I'll just do one more for the bullish side. Move that on the screen. Boom, boom. Okay. So, and again, this is the scans I use in TC2000. I also have some in Thinkorswim on the platform that look for cascading scans up and down. But these are ones I just specially use for this. This is Visa, beautiful long in Visa today. Actually traded this today. Beautiful Heiken-Ashi reversal. Here's the actual chart. Very nice long right there. You can see how easy that is to see as a nice long. VRNA, another nice long. See the flat bottom, then it reversed a little bit, and now it's moving right back up again. Continuation. NTNX, another big long one today off of earnings. Root was another good one. This came off of earnings. See this flat bottom. You see how easy that is to see, and you can see how easy the trend is to detect. This downtrend followed by an uptrend. Look at this uptrend here. Really, really nice. All right, so X is another one with a flat bottom. Urban with a flat bottom. So this is how I find them. This Disney with a flat bottom here. Kind of been just chopping around. And then I go into more detail to try to find the ones that are the best. I wouldn't trade Disney off of that. All right, so those are Heiken-Ashi candles on the daily chart. Now I want to show you on the TC2000, not TC2000, but the Thinkorswim. Let me bring that up. All right, so here's Thinkorswim. This is my SPY Super System software. This is what it looks like. This is the triple Qs on a 5-minute chart right here. All right, this triple Qs on a 5-minute chart. Now, these candles right here are standard candles. All right, these are standard candles. But this is what the SPY Super System looks like. I'm introducing you to. You've got 3 different indicators here. This is current time frame momentum, which is critical, multi-time frame momentum, and then this is long-term trend. So these are what I use. For the intraday trades for the SPY Super System, I just use the current time frame momentum right here. Red and yellow is bearish, blue and green is bullish. You can see how bearish we are here at the end of the day. All right, so this is the Qs. Now, if I switch over to Heiken-Ashi, I want to show you something. If I switch over to Heiken-Ashi, right here, and I go back here, and I look at the VWAP. This is the volume weighted average price. All right, volume weighted average price is one of the key support resistance levels we use to get into SPY Super System trades. Now, caveat is I didn't take this today because I was getting ready for a webinar, but what you're looking for is you're looking for Heiken-Ashi candles to break down below either the VWAP right here, this pink line, or this 15 right here. This is where you would take the trade. And you want this to be yellow or red. You want this to be bearish. All right, so this was a bearish trade coming off the VWAP right here. This is a Heiken-Ashi reversal candle. This one had wicks and tails. This had a flat top. This is where you would enter this trade if you were taking this. Now, I didn't take this one today, and the market was very choppy, so I probably wouldn't have anyway. But this is what you would find. You've got bearish current time frame momentum. That's the only thing we're interested in on the Heiken-Ashi reversal on this SPY super system, trading the Qs. So this is where you would take it. And as long as these candles stayed flat topped, you notice this? This is where you probably would have got out. As you start to get wicks and tails, you would have got out right here. Now it continued on down, but this likely would have been the extent of the trade. But that's a big trade on the SPY super system, which I'll show you. All right, but that's how we identify these on the SPY super system software. All right, so we looked at those. Now that's Heiken-Ashi. I hope that helps a little bit. If you remember the room or the alert service, I have a video that goes into some pretty good detail on Heiken-Ashi candles and how to use them in trading, along with the indicators that we've got. But it's really not that complicated. Now, on the SPY super system, this is the options room trading results. This I just want to recap how the room is done. I've had the room since January of 2022, which, by the way, was the first month of a 16-month bear market. This was 2023 results. If you put 2,000 in each trade we took in the room, you produced a profit of a little over $60,000. It was called the Compass Option Room. It's SPY super system now. So $60,000 for 2,000 in each trade in 2023. 2024, 2,000 each trade produced about 55,000, just down a little bit. A lot of that has to do with the market. You can only capture as much profits as the market will give you. But that's the results. Now I'm going to look at some specific results, and this I'm going to go through pretty quickly. I just want to show you the results we've had in the room and on the alert service on specific trades that we took. But what I want to emphasize is that these are the percentage gains of these trades that we took. All right. Notice you're not getting 400, 500, 600% like a lot of people will tell you get. What we're getting was we're grinding out 10, 20, 30, 40, 50% gains on each trade that we take. Some may be overnight, some may be one day, some may be a week. But these are the kind of profits that we get. So I want you to be aware of what you're going to be looking at. You're not going to be looking at 400 or 500%. Now we did have 96% in Boeing over here. That was a pretty nice trade, but that's unusual for us to get that much of a gain. You know, 65 in Mara is pretty good, but typically it's going to be 20, 30, 40, 50% in that range. Now in January of 2020, this was January of 2024, we had 20 wins and 2 losses. So again, about 22 trades, a 90% win rate. It netted 75.05 if you took all those trades in the room. All right, this was February. Seeing the same kind of things. I did break out the alert trades here. The alerts had 20 wins and 2 losses for 6,900. This was our best month last year in the room. 24 and 2, 92% win rate, and 11,745. So you see not an awful lot of trades. The trades, and if the market's choppy or weak, we don't have a lot of trades. And we have losses. I want you to be aware of that. There's obviously losses all the time. I think just 1 month I've had a month with no losses. This was May trades. Again, you can see the same kind of thing, 15 and 2, 80% win rate. And the profits are going to vary based on how long we can stay in trades and the profitability. We do have losing months occasionally, very occasionally, but this was May. And again, you can see 25, 26, 28, 100% loss in BKE. Not many losses, but nice gains here on a lot of these. And that was a good month. June was a good month. Most months are good months. The profits vary around, but again, this was in the room. We had 75, 90. The alert service actually produced more profits than the room did this month because we only had 14 wins and 1 loss. Because there's a lot of trades that we take in the room that we don't take on the alert service because it's either too late in the day to take them or we're only going to be in them for a short period of time. So I don't feel like it's fair to send out an alert and then have the trade be over in 20 minutes. All right. July trade, same thing. So you can see what we do here. won't bore you with all these results, but this is the results we see. This was August. September, this was our only losing month in 2024. Didn't do a lot of trades, 8 wins and 5 losses. There was nothing much to trade. 62% win rate, lowest I've ever been. And we lost 1786. Not a good thing, but not bad. And the alerts were down $295. And when you notice what you're getting here on the other months, it kind of swamps that. Here was October, right back up again to 17 and 385% win rate. November, also a good win, a good month. So that's kind of the results. So just to get you familiar with what you can expect for profits in the trades that we take when we take the trades. The alerts, by the way, this is what they're gonna look like. You're gonna get an alert. It's gonna show you a stock symbol. Obviously, it's gonna show you option strike price. It's gonna show an expiration date and a price to pay for the option. That's what you'll get. Now you get an alert to tell you to enter the trade, and then you'll get an alert to exit the trade or to set a sell price on the trade. Now there may be more than one alert when we're getting out of the trade because I make adjustments. I may make adjustments. Maybe the stock gaps up overnight and we had a sell order in at $3 and I'll raise it to $3.50. But you're going to get at least one exit order for each trade that we put on. And when you get the exit orders, by the way, it's a good idea for your sell price, you take profits, to put them in with a GTC, a good till canceled in your platform so that they'll be working when the market opens first thing in the morning in case you're not there. So again, how do we achieve these kind of results? Well, we're able to identify when institutions are driving a trade, as I've said, and when the market internals are heavily bullish or bearish. These are the two things that we focus on. We only take trades when both of these are in our favor. And we align the trades with the institutions in the market. Now, if the market internals are neutral, which they are a lot of times, I'll still take trades when the institutions are in the trade. But if the market internals are bearish, I'm not going to take a bullish trade. But if the market internals are bullish or neutral, I'll take an institutional trade, and it's being traded by the institutions. I'll take it long. And how do we do this? SPY Super System identifies when the institutions are creating a trend. It does this by doing what's called triple screen assessment. It's looking at multiple time frames of fractals for two things, mainly two things. Momentum, which is to me is the key thing. Momentum tells me so much about what the institutions are doing, and then trend. So we do a multiple time frame analysis on 3 different ones. That's what the SPY Super System is doing. Now we're going to look at the SPY Super System here now with some trades and with some setups, etc. All right, so this is the SPY Super System. I've actually eliminated this now, as you just saw in those other slides. This was a long-term trend. This is the multi-time frame momentum. This is the current time frame momentum. This was on Tesla on a 5-minute chart. All right, everything's green. If you look at this chart, anybody who can see colors can identify this as a bullish institutional setup. The bulls of the institutions are buying the heck out of this thing right now on Tesla, right? And for us to enter this, what we'd be looking for a break above the 15 EMA, this little green line. What we look for is a break. Now the SPY Super System puts in these little pink arrows when you're breaking out of compression. This tells you you're breaking out of compression. These are Heiken-Ashi candles I happen to have on here. This is a Heiken-Ashi reversal, breaking above the 15 with a pop out of the box or a pop signal. That's where you take the trade, and that's where you would take it, and you'd ride it right up, and this is where you would get out of the trade. That's what we're looking at right here. Again, multi-time frame trend, multi-time frame momentum, current time frame momentum, and this has been eliminated. I don't use that anymore. All right, so this is a SPY Super System trade that I took 21st, yeah, 21st of February, I guess, which fairly recently. This was on the Qs. Now, if you look here, you see on the 5-minute chart. Here's the VWAP. Here's the 15 EMA. Right where I get into the trade, which you see how it broke below the 15 right here. And notice on the current time frame momentum. Now, this is the indicator that I use for the SPY Super System trades, trading the indexes. This is all I'm interested in. It went from buying, which is green, to selling, which is yellow. Bullish to bearish, and a breakdown below the 15. That's where I would take that trade. So I stay in this trade as long as it stays below the 15, which it did, and I stayed in this trade for all the way down. I mean, it was a pretty long trade as long as it stayed below the 15, but you want to be able to see that. And this is basically all I needed to know, because you can see we went bullish to bearish, and you notice it stayed bearish for the whole rest of this time frame on here. There should be no reason to actually exit that trade. All right, so that's just so you can see what it looks like now. This is what the chart looks like now, or the indicators look like now. I actually have the oscillator here, current time frame momentum, multiple time frame momentum, and long-term trend. Right, and there's the VWAP, and there's the 15. That's all you really need to do this. Now, for SPY Super System, I want to make sure you understand. We've got two different kind of trades here. SPY Super System trade is a trade we take in the room. Traders who are trading day trades will take it in the room, and they pretty much have to manage themselves. I'll call out the fact that the setup has occurred, but they're much too quick for me to post them. So I'll talk about them. But these are the results that I've had on trading the indexes, the SPY, the Qs, and the IWM using the SPY Super Systems methodology since we started it in July. Now, other traders, I'm calling them out. Traders are going to have better results. Some are going to have worse results. But this is the results that I've had with this. And I'm putting 2,000 into each of the trade that I take. So if I'm buying, if the options on the SPY, for example, are $2 a contract, I'm going to buy 10. Right? So that's where the 2,000 comes from. So this was July 16 and 0, 25.96 was our profit. August 56, 6 and 2, a huge number of trades in August. And we didn't have very many regular trades, but we had a lot of SPY Super System trades. 8,200. September, 40 wins, 3 losses, two scratches. So there's a lot of trades that are available to us, depending on how the day's going. Today, I had one trade today. That's it. October, 33 and 4, 2,000 invested, produced 48.31. And I'll get the other months in a minute. It's important to understand with the SPY Super System methodology, when we're trading the Qs, the IWM, and the SPY, you're only going to have one trade on at a time, and they're going to be very short duration trades. You're going to be in and out. You're only watching that one trade. And so you just watch that trade. When the momentum starts to fade, you get out of the trade, you're done with it. Right? So they're fairly quick. Yeah, it's sometimes a couple of candles to maybe 6 or 7 or 10 candles on a long trade. This was the intraday trading in November, 54 and 5. The big month that month, 93.70. In December, 69 and 15. I took a lot of SPY Super System trades for a little over 10,000 at 2,000 invested in each one. And these numbers are not included in the room. So as I show the results for October, the SPY Super System produced a 48.31, and the room trades with 17 wins and 3 losses produced 74.48. These are not included. This is not none of these trades are in here, and none of these trades are in here. They're completely separate. They're two different methodologies using the same type of institutional information that we need to trade these. This was November, again, 54 wins, 5 losses, 93.70. November, 14 wins and 2 losses in the room. So you can see a lot fewer trades, but the numbers for the SPY Super System, these are separate from this. So that was pretty good if you traded all of that. Again, this are the results I had. This is the results the room had. Anybody who took the trades that I did in the room, they're posted and they're alerted on, this is what you would have got. These, I just mentioned them in the room. I show the setups, but they're too quick to actually be able to post. But we got a lot of traders doing these things now. And we have a lot of traders that come into the room for a couple hours in the morning and a couple hours in the afternoon. They can't be there all day. And maybe we don't have any swing trades to take. They can do the SPY Super System trades while they're there. And there's December. Again, you can see that 10,450. Here is the room. Not a big day month in December in the room, but $5 grand is not bad. All right. So again, this shows the first quarter, the last quarter of 2024 with the SPY Super System and the room results. These are the two different results, but it was a decent quarter for us. 17,000 over in the October, November, December in the room, and 24 in the SPY Super System. Again, these are my results. This is the room results. I can't vouch for everybody taking these trades because I let them know the trades are set up, but everybody's looking at taking these trades and managing themselves. All right, so pretty nice quarter there. All right, so I'm going to show you some SPY Super System trades that we took And I just want to show you the charts because this is what the chart looked like before I eliminated this bottom line, but it looks really busy, all right? This is on the SPY, but if we're looking at the SPY super system methodology for trading the IWM, the Qs of the SPY, this is all we're interested in, the current time frame momentum, this one indicator. If we don't look at any of these others, we just look at this. We look at the volume weighted average price for support and resistance, and we look at the 15 for support and resistance. That's the only thing we look at here. That's it. All right, so this was a trade, this was taken, this is back in August. But again, this is where the entry is. You see how this went from red to blue, selling to buying. You see how it's riding along the VWAP right there, the volume weighted average price. See how it pops out with the pink arrow, the pop out of the box telling us compression has been broken. This is where you would enter, this is where we enter the trade. And then we get in here and now the 15 starts to pull away. So the 15 becomes our stop. So we ride this thing up, we ride this thing up, we ride this thing up. We start to get wicks and tails, we get out right here. That was a pretty big trade, $220 per contract on that trade. That was a pretty nice trade from back in August. Now this was one I just did yesterday, 25th, 2 days ago. Right, so this was a SPY super system trade on the SPY, right? And if you look at the chart now, you notice that bottom indicator is gone. I've got the oscillator down here, but here's what we're interested in. Just interested in this being bullish, being bearish, blue to red, yellow, bearish. It's bearish right here. So what am I looking for? I'm looking for a break below the 15 EMA. See the 15, the little red line? You see where I got a Heiken-Ashi, I'm sorry, a pop out of the box push here, and these were Heiken-Ashi candles. This was a Heiken-Ashi reversal candle. This is where I took the trade, and this is where I exited the trade. One candle, but that produced $90 a contract profit. So if I had 10 contracts, that's $900 on that one big candle right there. This is where I get out because it was choppy day, very choppy day. Wasn't very many setups. And again, these were Heiken-Ashi candles. Here's the VWAP, the 15, and this is the indicator that you use. Now, if you buy the software, there's another, you can actually get a different template that you can interchange with the one we just looked at. You can have this one. If you're just interested in trading the SPY super system trades, you can just put this template on. All it has is the indicator that we need here, the current time frame momentum. That's all you're going to see, right? So here it is here with the other indicators. Here it is here with just that one indicator. And you notice it goes from blue to yellow, buying to selling. It's coming off the 15. This is where we get in right here as it comes off the 15 and breaks down and we get out right here. See the big tail on this thing? This is where we get out of the trade. We're watching momentum. We take it off. Again, about $90 a contract on that. Again, this was one I put in here to show you the new template. This is the template for SPY super system methodology only. So you can switch it back and forth, but you don't need the other indicators when you're just using this the SPY super system methodology for just trading off of 5-minute candlesticks. But here's a SPY right here. You can see how we were green, and then we popped here off the 15. We went yellow, so you got to be a little cautious. But the indicator was pretty high, and it popped here, and notice how it just kept going up, and this is where you would get out. But I'm just showing the template here. Again, here's compression. Here's another break to the upside, and this thing's flipping back and forth. So when it starts flipping colors like that, probably don't want to get in if you're getting a lot of this red and green switching back and forth. Okay. This was another SPY super system trade. I'm just going to go over some quickly. This was an older one where I still have the old indicator down here, but you notice how it's coming off a compression and breaking off the 15 EMA right there, the green line. And I enter right there and I exit right there, $130 profit per contract on the SPY. All right, so these are the SPY super system trades. I won't bore you with all these charts, but this is what they look like. All right, and I use the SPY super system to identify these particular trades. All right, this was good for $90 a profit on this one. Get in here as it breaks up to the 15. It stays above the 15 the whole way. Get out right there. All right, so this is what the template looks like. This is what the SPY super system setups look like. I think you can see here is everything's red. What am I looking for? I'm looking for a break. I get it right here. Enter right there. Ride it down. Exit as it flattens out down here. Notice it went back to blue, so you want to get out before that happens. All right. So again, this was another big one we had here. Getting here, we followed this all the way down to 15, never closed above the 15, stayed in all the way down. That was a big 280 profit. That's a lot. Most of the trades produce anywhere between 70 and 120, $130 a contract most of the time. All right, here's one for $150, but I want you to see the current time frame momentum went from red to blue, selling to buying. We don't buy it as soon as it turns blue. We wait for a pop above the 15 EMA. Okay, and another one in the SPY here. I didn't identify. I wanted people to be able to see where they would get into it. You know, it's red, it's bearish. Goes blue, it's bullish. But do we get in here? No, it's not above the VWAP yet. It's coming above the 15, but they got the VWAP right there for resistance. This is the entry right there. You take it here as it's blue, turns green, stays bullish. You get out this right here as soon as it starts to flatten out. All right, so that's how those trades are done. All right, so I won't go through all of these. There's a lot of them, just so you can identify. This was one, by the way, that I traded bearishly right here as it broke down. See, it's red. I took it down 3 candles, took profits. Then it reversed and went back up again and went blue, bullish as it broke above the VWAP. I bought it right here and took a trade long. So I took it profitable to the downside, profitable to the upside, just using the fact that the institutions were selling and then they were buying, and it was coming off one of my support and resistance levels. That's it. All right, so that's what they look like. Now I'm going to show you just some more quick charts of the swing type trades that we took. That was for the intraday trades in the room. Here's some regular trades that we've had. This was a trade on HIMS that we did on 2/7 for a long. You can see that everything's green. The institutions are buying this thing. We're looking for a break, looking for an entry on this thing. It was kind of compressing, and I did take it here. Probably should have got it back here, but I didn't notice it. We took it here, had a 25% profit, and left the runner on. Didn't take all my contracts off, and then we got that big push up on HIMS, and that thing produced $269 profit, 269% profit on the runner. But that's pretty unusual. This is normally what you're looking at, 25-30%, and that was on HIMS. This was on Palantir. We took it here long. Again, these are daily charts now. We're looking at the institutional buying on daily charts. See how it's green on the multi-time frame momentum and current time frame momentum. When you're swing trading, you want the multi-time frame and the current time frame to be green or blue for long, red or yellow for short. You get a pop right there. All right, pops right over there. Twilio, same thing. Get in here, get out here. 58% in 2 days. That was on a debit spread. Institutions buying. Institutions selling Lulu. Here's was earnings, big drop. Compresses, we take it right here as it breaks down. Notice how it's compressed, and it goes from blue to yellow on the multi-time frame. Buying to selling. Already was selling on the current time frame momentum. Takes it off right here, and it drops on down. And we get in at $1.92 overnight, out for $3. 192 per contract, out for $300 per contract. Okay. And just another one, and I won't run through an awful lot more because I know it's getting kind of late here, but this was another one, an MDT, 25% profit on a swing trade. You see the yellow to blue right here, selling to buying. Current time, multi-time frame was already buying. This is where I take the swing trade on right there. Vertex again, green across the board. Institutions buying, take it right there. This was an overnight trade here. We get in here, we get out here. This was on McDonald's. Again, in 8:30, out for 11:30, 37% gain just overnight. It just popped out of this compression box that the Compass system or the SPY super system produces. Right, Amazon, this is a 5-minute chart. This was an intraday trade, right? So you see how we're green here, right? We're green here, it's coming along the 15. We pop it right here, take it right here as we get a pop out of the box of the compression break. And we're in this thing for 45 minutes, and then we're out for 32% profit in it. It just kept going. ENPH, a nice 20% in an hour. Compressing, it's compressing. It comes off the 15 with a pop symbol. In other words, coming off the 15, everything's red. The selling is going, the institutions are selling the heck out of this thing, and down it goes. All right, Verizon, another one, 50% an hour. Verizon is a cheap options on this thing. Very tightly spread. It doesn't take much of a move to produce a lot of money in Verizon if you can catch it. And we caught it right here as it broke below the VWAP. All right, and a Tesla, this one we took overnight. So again, we actually took an overnight trade because the end of the day was ending up with a pop signal to the downside. Everything was red or yellow, bearish. So we took puts overnight. The stock fell from 120 to 112, and big profits on Tesla. All right, so that kind of covers the charts, and it covers the SPY Super System software, which is what I use to identify when institutions are in there. You don't have to have the software. If you're in my room or in the alert service, you'll get alerted to that. If you're in the room, I leave the chart up all day long. The chart that I showed you just a little while ago on the SPY Super System is what's presented in the room all day, and so I can switch from any chart that anybody wants to see on the SPY Super System software, so you can see what the indicators are, what are the institutions doing. And again, we went over this. This is the strategies we use. This is what all the strategies you'll see on your alert service, except for this one. This is intraday trades on the SPY and the Qs and the IWM. All right, so that is the SPY Super System software and the SPY Super System methodology for trading options on stocks if following the institutions into the trade. All right, and what we're offering right now is you can get a 2-week free trial. It'll put you in the trading room. It'll also give you the alert service. You'll also get access to what's called the Wyse way to trade options. This is about 30 videos I've done on all the strategies we use, all the indicators, how to use them, how to do time spreads, how to use Heiken-Ashi candles, how to do credit spreads, how to do debit spreads. Again, basic options, which particular strike prices to use, what delta to use, all that information is in there. And then you get that free for 2 weeks. It switches over to a quarterly subscription for $3.96 a quarter, but you can cancel anytime prior to that. And again, it's not a long period, obviously 2 weeks, but you know the market's been pretty slow lately. We didn't take but a couple of trades in this week so far, and maybe 5 or 6 in the SPY Super System. But it does give you a little flavor, and you can ask questions. You'll be in there with a lot of people. I'm there all day, so I can answer any questions you might have about the methodology, about particular stocks, whatever you want. You can go ahead and ask me. If you want to get a cheaper price on it, you can get annual access to the room and the alert service for $11.96. That's going to give you a whole year of the alert service and the room. And we also have a Discord chat that you would get involved. You'd get to have access to, and then of course you'd get all of the videos on the training that we do. Right, so that's the annual access. Then you have the one-time payment. This is for a lifetime. You don't have to ever pay again. And again, it's for the alert service and the room and the Discord and the videos, all of those. You'll also get, if you own the software, you'll get any kind of updates to it. And the software itself is right here called the SPY Super System. This is the Compass trading system plus the scanners, which creates what we call the SPY Super System. You get, of course, the trading videos. You'll also get the installation on your machine. They'll put this on your computer, Right Line will, Sergio or Charles will take over your machine, install it, and it'll look exactly like mine. It's the same template that I have on my machine. That's what you would get. They do it for you. It doesn't cost a thing for them to put it on. And then you get a month in the alert service and the trading room if you buy the software. Then you can trade. If you have the software, you can trade the SPY Super System anytime you want. If you have access to that particular thing, you'd have both templates. The one with the one that just shows the current time frame momentum, and the one that shows all of the indicators. $14.98 for that. That's I love this software. I got this software before I had this room. I paid for it. I bought it from them before I even knew who they were, because I was looking for something to identify institutional trading. When the institutions are in the trades, I was looking for a way to enhance my trading methodology to know when institutions are in there. This is the best I could find to let me know when institutions are in there, and it's extremely effective. So one-time payment as well, $19.98 to own it for life. All right, and again, you get the same thing. You would get 3 months in the trading room, 3 months on the text alert service. It's obviously going to be installed by Thinkorswim. Installed by Rightline on your Thinkorswim platform. You don't have to trade on Thinkorswim again. You can trade from any broker you want. I I trade through Tradier, but you run the software on Thinkorswim. And again, this is what it looks like right here. Here's some of the scanners that I've got up. There's about 6 scanners that you can interchange. This tells me stocks that are relative strength when they're cascading up when the market's going down, relative weakness cascading down when the market's going up. And here's what the indicators look like. You get that one, and you also get the one, an interchangeable one that just has the current time frame momentum on it. All right, so that's what you get. And again, you get the 2-week free trial if you want. Or if you want to get in cheaper, you can go ahead and get the annual access right here to the room and the alert service. You get both of them. And one time, of course, and never have to pay again. And here's the software right there. All right, so that's what you can get. That gives you access to those things. If you look on the chat box, there'll be a link in there to both of these things. All right, so you get access to the free trial or the annual and the one time. There's links to all of these offers, which are good till Sunday. Really good trade. We used to actually charge separate for the text alerts in the trading room, but they've decided to go ahead for the time being to bundle those together for everybody. So that if you can be in the room, but then you're out of the room, you'll still get the trades. All right. So again, I appreciate everybody coming here today. I don't see any questions. So thank you very much. I appreciate everybody being here today. I appreciate you taking the time. I know it was a long day for everybody, but again, I look forward to seeing some folks in the alert service or in the room. So everybody have a great night. And Friday coming up tomorrow, interesting day to see what the market does after such a pounding that the market took today. I didn't actually see what the end was. Yeah, it was a very ugly day in the SPY, down 1.5%. Closed well below the 100-day moving average. This is a fairly significant pullback in the market. All right, everybody, have a great evening. We'll see everybody in the room soon.
Thank you, David. That was incredible as well. What an incredible day of trading insights and market expertise. A huge thank you to all of our amazing speakers for sharing their strategies, analysis, and exclusive offers with our community. And of course, a big thank you to all of you in the audience for joining us today. For those of you who want to rewatch any of today's presentations, the full recording will be posted on our Traders Corner YouTube channel first thing tomorrow morning. So be sure to subscribe so you don't miss it. Until next time, trade smart and stay ahead of the markets. Thank you, traders.